vital platform for advancing the Viksit Bharat 2047 agenda. We'll have prominent names like Honorable Minister Piyush Goyal, who will be joining in as well. Apart from that, names like C.S. Shetty, Chairman of SBI, you have Dr. Anisha of Mahindra Group, Nadir Godrej, Chairman and MD at Godrej Industries, Ramdev Agarwal, co-founder at Motilal Oswal, Ridham Desai, Dipali Goenka of Wellspun Living, Ashok Vaswani of Kotak Mahindra Bank, Dinesh Thakkar of Angel Broking, you have Ashish Kumar Chauhan of NSE, and Navneet Munot, Nilesh Shah, Radhika Gupta from the mutual fund world. From the corporate world, you have Habil Khorakiwala, Rajesh Sharma of Keynes, Natraj Nakula of Shema General Insurance, and many more who will be joining in. So please stay tuned to NDTV Profit for absolute coverage which will be starting at 11 a.m. onwards today. So an interesting day from, the conclave perspective as well as from a markets perspective as well, Agam. Because if you see in terms of global markets itself, firstly, US markets were closed yesterday, so it's been a truncated week for the US. However, the stock futures, they have risen in terms of Monday's session, so that's an interesting point to mark. Overall, yes, the previous week, you had Dow, which ended with gains of almost around 0.6%. And apart from that, if you see in terms of S&P 500 as well as NASDAQ, we saw gains to the tune of almost 1.5 to 2.5% for the week. Now, moving ahead, what's the key thing that we should be watching out for? Firstly, you have the FOMC minutes that will be in focus during the week. So any commentary from there will be interesting, because Powell has constantly come out and said that don't be in a hurry, or we are not in a hurry to go ahead and cut rates, right? Yeah. So any commentary, whether if it's giving you direction, that's what the investors will be actually waiting and watching out for. Right. Apart from that, if you talk about Asian markets as well, they have opened absolutely mixed. So again, a mixed use coming in from that aspect as well. You have Shanghai, which is seeing marginal cuts of around 0.4%, but Nikkei and Hang Seng are trading in the positive in today's day of trade. And if you see, what's interesting for Indians is going to be Vietnam. I think, Agam, we need to figure out as to whether our next trip is going to be to Vietnam, because they are relaxing visa rules for India. That's going to be an interesting aspect from a holiday perspective after all the heavy lifting that all of us are doing. Yeah, absolutely. Great time for all the coffee lovers and everyone who wants to get suits well-staged. Vietnam is the place to be. But what's happening with coffee prices is also pretty interesting now, right? Most certainly, yes. Well, in fact, we could get a discussion going on around the coffee prices too. But before that, we'll take a look at, I think we need to address, some disturbing news, and that is, in fact, Delta Airlines planes flips upon arrival and landing of Toronto's Pearson Airport. Now, Delta Airlines says that in a statement that the aircraft had 76 passengers and 4 crew on board of the time of the accident, and multiple people have sustained injuries after the crash on Monday. Local media reported 18 people, including a child, are said to have been injured in the crash, and 3 of these are said to have been in critical condition. And local police are said to be on the scene investigating, with paramedics forming a staging the area of the runway. And I think that is a bit of sad news to pick up early in the morning. All our well wishes with the injured and the ones who were on board as well. But let's quickly look at what's happened, Agam, in terms of markets yesterday, right? Clearly, after a long streak, a losing streak, Indian markets have hit a pause button in 2 years. And this was, I think, the longest losing streak that we had seen in the domestic markets as well. We've managed to close, towards the 23,000 mark. We're trying to inch towards those levels. 22,959 is where, Nifty 50 ended at. And it was mainly HDFC Bank as well as Reliance Industries that came to give that kind of support. Now, for 3 days in a row, I think in the recent weeks, 3 times, 22,800 is what Nifty is clearly defending, right? So that's being a clear support that we should be watching out for. And the immediate resistance that everyone is tracking right now is around 23,100 in terms of Nifty 50. Now, in terms of sectors, you had pharma as well as metals. These were the sectors that were rallying in trade yesterday. And overall, the trend was a weak opening and an intraday recovery.
Right.
Now, if a similar trend persists in today's session as well, that is what we need to watch out for. But clearly, 22,959 is what Nifty ended at, and around, we just missed that 76,000 mark in terms of the Sensex as well, in terms of yesterday's session. Now, what's happening with regards to FIs and DIIs? They've continued to remain net sellers for the 9th consecutive session. That's with regards to where FIs go. They've sold almost around 3,900 odd crores, whereas DIIs have remained net buyers for the 9th consecutive session, and they've bought little over 4,700 odd crores. So that trend with regards to DIIs coming to the support has continued, and the dependence on FIs seems like it's reducing.
Yeah.
And an interesting point we need to note over here is that tomorrow is Chhatrapati Shivaji Jayanti, so there will be no settlement in the markets.
Absolutely.
For any positions that will be taken today will be settled on the 20th, which is day after tomorrow.
Yes.
So that's going to be an interesting aspect that investors will have to watch out for.
Of course, of course. So we're going to keep an eye on that one. Now, I'll tell you a little bit more about how things are panning out as far as the markets are concerned. As Hiral has said, that there has been a little bit of a pause coming down to the benchmark indices. What we need to bear in mind is that right now there is a phase of consolidation, and it's not really consolidation because we are still making, well, lower lows on an intraday basis. Along with that, we have come off, the Nifty has come off from the mark of around 23,800 over the last, week and a half. And at the moment, we are sitting just shy of the 23,000 mark. 23,000 is not a support or a resistance, it's a fulcrum, it's a pivot over and around which the Nifty is going to expect to move within. And at the moment, the only issue with the Nifty that potentially could be that if it tests that 22,800 mark again and settles below that and closes below that, under those circumstances, we could be in a little bit more trouble. At the moment, there is a significant amount of resistance around the 22,800 mark. But if you look at the options market, firstly, the range that's been offered based on maximum open interest in, well, options, what we're seeing is, well, 22,500 on the lower end, and that is of course even lower than that resistance, that all important resistance of 22,700, 22,800, and on the higher end it is 23,500. Now 23,500 comes before the key daily moving average that stands at 23,650. That's the 200 daily moving average. We're still quite a bit far away from that particular mark. So as long as we don't cross above the 200 daily moving average, it's always going to be a little bit of a challenge as far as markets are concerned. And to tell you about the positioning of at least FIIs in index futures, at the moment, what we're seeing is still the bearishness continues. Their long position still standing at around just 16%, and it's been hovering. It's stuck at around this mark, moving at no more than 14%, and on the higher end we could potentially go to like about 17-18%, but it really hasn't moved away from here on. And because this number has been so persistent over the last few weeks, when the short covering comes, and that significant short covering, which will entail perhaps the Nifty to go towards 23,500, 23,650, that's where you start seeing a sharp up move. But for now, that looks like a probability which isn't there. It's the same for the bank Nifty. We're keeping an eye on around 49,000 right now. 50,000 again is a fulcrum. It's a pivot. It's not necessarily a resistance on the higher end, but it could perhaps change based on the kind of cues that we may get over the next few weeks. But for now, if we aren't seeing further correction, we certainly are seeing about consolidation. The probability of a very sharp up move for the Nifty is not that high at the moment, Hiral.
Absolutely. And if you see in terms of the breadth as well, Agam, yesterday, that was positive.
Yeah.
And clearly, I think that's telling you that the fall has relatively lesser impact on the frontline stocks versus what's happening in the broader markets as well, right? So probably the downside could be limited, and this could actually make your risk reward also pretty much favorable, right, for the bulls. And taking this into consideration, the other aspect is anything that the VIX is telling you.
Yeah, absolutely. So firstly, the VIX is at around 15, 16. Remember on budget day, the VIX had gone to around 17, 18. That was not very high. But it is still at the moment at a relatively higher place as compared to what we would be used to over the last few months. What does the VIX tell you? The VIX tells you about the fear, that is, the option premiums have expanded significantly. And when the option premiums have expanded significantly, it just tells you that at the moment, traders are bracing for a little bit more volatility. As compared to the VIX being somewhere around 11, 12, 13, that would be a market which is very, very stable. But considering where we are right now, it is indicating that we could perhaps see, or at least the traders are factoring in a little bit of volatility at the moment. Just want to mention one more thing and one more aspect with respect to another indicator that a lot of traders use is the RSI. We're nowhere close to oversold territory. So that's maybe something that everyone needs to keep in mind. And when it comes to some of your other indicators, well, it does indicate that there is still some space for the Nifty to come off. So, it's a wait and watch. I wouldn't say that we're going to fall from here, but like I said, the probability of gaining from here on, well, we're going to need a significant trigger for that to come through.
Absolutely. So it's going to be interesting to watch out for as to who wins. It's the bears or the bulls from here on. But let's quickly shift focus to the stocks that we will be talking about in today's session. So yes, of course, there are important ones like Bharti Airtel and Vedanta as well. But Anushi and Somat will be taking us with further details on that. But apart from these names, few of the other names that are on my watch list is on number one, you have all cargo terminals. Now their volumes have gone up around 11% on a year-on-year basis and 4% on a month-on-month basis. Now, they are facing challenges, and this is on the back of the market volatility. The stock actually hit a 52-week low amidst this kind of volatility. It's down almost 18% in the last 6 trading sessions. And there is zero holding from domestic mutual funds also with regards to this company. So, I mean, in spite of this being this large a company, you have no mutual funds that have any stake, Agam, with regards to all cargo terminals, and the downtick continues. The second one, in terms of business updates, you have a GMR Airports. Now, with regards to January, the passenger traffic has gone up a little over 11% on a year-on-year basis. The domestic traffic is up 11%. International passenger traffic is up around 12.5%. In fact, the financial performance in the third quarter of FY25 was also very strong for a GMR Airports, and this number is coming in after that. So again, a thumbs up probably with regards to where GMR Airports is concerned in trade today. And very lastly, a small name, but you have a Choice International that is in focus in today's session. And this is because one of their subsidiaries, which is Choice Equity Broking, has gone ahead and acquired Rita Capital Services. What's interesting over here is that the acquisition is for around 36 odd crores. Now, the revenue of Arita itself was somewhere around 158 odd crores, and the AUM on the back of this acquisition for Choice Equity Broking will increase from 1,090 to almost a 6,241. So wealth management and investment advisory services, these are the two segments that will actually get strength on the back of this small acquisition. So you could see some bit of a potential up move that could be coming in with regards to where Choice International goes.
All right. Well, on my radar, we have Paytm. Well, this is a thumbs up for Paytm because it's co-partnered with SBI Mutual Fund to launch Jan Navesh 250 systematic investment plan. I know that this doesn't look significant, but it actually does enable the relatively smaller investor to use Paytm as a platform to carry out their systematic investment plan, which is why it's going to be a thumbs up. Well, to what extent this actually works out is going to be a wait and watch, but this certainly is in the positive direction as far as Paytm is concerned, because through its platform, it does enable someone to, well, just carry out your systematic investment plans at the click of a button on, well, using your fingers. Moving on, we also have SBI Cards. And, well, from what we understand is that the company has appointed Salila Pandey as the managing director and CEO of the company. And Salila Pandey is presently the chief general manager at State Bank of India. And she had joined State Bank of India back in 1995 as a probationary officer. So she's someone who has been with the bank for a very, very long time. She knows how things work. In fact, at one point in time when SBI Cards was still a part of SBI, well, she will have probably also been very well aware of that particular business. And I reckon that at this point in time, her being appointed, and of course her 2-year period will be effective from the 1st of January of 2025, will consider to be a positive as far as SBI Cards is concerned. The final stock on my radar is Power Grid. Power Grid has emerged as a successful bidder for 2 projects, one under the tariff-based competitive bidding for 2 projects, and this is to establish interstate transmission systems under the BOOT business. And BOT basic stands for Build, Own, Operate and Transfer. The thing with Power Grid is that while it continues to get some of these projects, we haven't seen as much appreciation in Power Grid. It's become a little bit of a dividend play, but even besides that, we haven't seen as much capital appreciation in Power Grid. So that's something that we can keep an eye on. Do remember that all the positives have been priced in, and even after that, we aren't seeing too much going on as far as Power Grid is concerned. While this particular development is a positive one, don't expect too much out of the movement, because it does seem like this particular project, or rather these couple of projects, are also more or less in line with expectations. Hiral.
So these are interesting names we should be watching out for. But on to NDTV Profit exclusive, we have a Bharti Airtel that may see a stake sale. Somit joins us to tell us more. Somit, what are you gathering from your sources? The stock actually ended yesterday with, I think, gains of 2.5% or cuts of 2.5%, I beg your pardon. What are you picking up?
Well, as we had indicated in the dealer check also yesterday, that there was a potential chance of a promoter block coming in, and that's what we understand, that it's Indian Continent Investment, which is the investment arm of Sunil Bharti Mittal, that will be selling around 0.8% stake, that is close to 4.82 crore shares via a block deal today in trade. Now, the floor price for this block deal has been set at close to 1,659 rupees per share, which indicates a discount of just 1% compared to the current market price. The deal size is valued at close to 7,800 crore rupees, and the deal will most likely happen in the block window, given the discount size is around just 1%. Now, Jefferies is the sole banker for this deal, and to remember, Indian Continent Investment is Sunil Mittal owned promoter entity of Bharti Airtel. Now, earlier a promoter stake sale in Bharti Airtel was seen back in March 2024, but back then it was Singtel which had sold close to 0.8% stake to GQG, and this time it's Indian Continent Investment. Now, post this stake sale, the total promoter holding will come down to around 52.3%. Indian Continent Investment, which is the investment arm of Sunil Mittal, will continue to own close to 2.5% stake. Singtel directly will own close to 9.5% stake, and Sunil Mittal and Singtel combinedly via Bharti Telecom will own the remaining 40.3% stake in Bharti Airtel.
Okay, Somit, thank you so much for getting us all those details with respect to Bharti Airtel. But the other one on our radar is Vedanta. Now, Vedanta's creditors will meet today to give their final verdict on the plan to split the Indian mining conglomerate into at least 5 different businesses. Now, Puneet is joining us to give us more details on how this could potentially pan out. Puneet, good morning.
Hi Agam, good morning. So definitely it's a big day for all Vedanta shareholders, as you rightly said, creditors to meet today to vote for the demerger plan going forward. Now, both the secured as well as the unsecured creditors and lenders will vote on it. So the plan will need a majority of about 3/4 of the approval to go through as well. The demerger, which is of course was approved back in September of 2023, plans to demerge the big entity of Vedanta into 5 other listed entities, including the one that is already listed, which is Vedanta Limited. Now, for every 1 share that you hold currently in Vedanta, you will get a subsequent another 1 share in each of the other new listed entities as well. So eventually you will have holdings across the 5 entities once all the entities are listed. Apart from that, they've already received the no objection certificate from the BSE as well as the NSE. And earlier the plan was to demerge into 6 separate entities, but now that has been changed to 5 new listed entities. So effectively, there'll be 5 listed entities, including the one that's already listed. Now we look at 3 key aspects of this particular demerger plan. The first one's, of course, which will be the resultant entities involved. So Vedanta Limited will continue to house the Hindustan Zinc business, as well as the copper business of the company, and the aluminum business, which is the second listed entity, will have Balco Smelters, which is one of the key businesses in terms of the aluminum business for the company. The third one's, of course, the Kane oil and gas business will move into the oil and gas entity as well, and the fourth one will be the iron ore mines, which goes into that subsequent business, and finally the power business. So these are the 5 entities essentially that will get listed. It's essentially that the top 2 listed entities by market value will effectively be Vedanta Aluminum, where we'll have the Balco plant as mentioned, and the second one will be Vedanta Limited, which is the current listed entity as well, while the others will follow through suit according to MK Research. Now finally, what could be some of the potential benefits for investors currently? So investors will of course get exposure to 5 pure play companies going forward, and this could actually trigger a re-rating in some of the businesses such as aluminum, which is a very high margin business as well. Apart from that, they can currently be playing this via the holding entity right now, and they will also get a large an exposure to 3 demergers business at absolutely no cost. So it's effectively a very big update in terms of Vedanta shareholders. Watch out for this update, and because 75% majority is something to watch out for. It'll be key to going forward as well.
Absolutely, Vedanta is going to be key to watch out for as well, because clearly if you see Agavan, in terms of the stock price performance as well, I mean on a YTD basis itself, a 6 to 7% is the kind of cuts that we've seen on the counter, though 50-55% is the kind of returns it's given in the last 1 year. So there has been some bit of positive momentum, but it's not consistent, and that sustenance is something that the street is actually watching out for.
Yeah, absolutely. But while we are keeping an eye on Vedanta, we also have Rucha, who's joining us to give us an idea on the top brokerages that make for the recent market correction. Rucha, good morning.
Good morning. So definitely there's Morgan Stanley who's come up with a note on India equity strategy as a whole. Well, the brokerage house says that Indian equities continue to overlook good news. The broad markets are drawing down rapidly as the bid has faded despite the improving fundamentals. Though catching the bottom is difficult is what the brokerage house mentions, buying Indian equities could prove to be rewarding. So this is a big positive by Morgan Stanley. Well, they also say that the stock in terms of valuations are actually cheaper than they have been since the COVID bottom, and India should resume its outperformance to the emerging markets in the upcoming months, only if the global cues of course don't surprise negatively. However, they also mentioned that global news have turned better, including the situations like oil, war, etc., and therefore they are very much bullish on Indian equities. There's Citi also, which has come out with Indian equity, wherein they mentioned that Indian equities have corrected meaningfully year to date since their peaking levels. Now, post this correction, the valuations for large caps are reasonable. Remember, this comes around a situation wherein most of the people are concerned about valuations, and both of these brokerage houses mentioned that valuations are not bothersome and are cheaper. Therefore, the key stocks which Citi have rated as buy and prefer in this market is HDFC, Kotak, Maruti, Endurance, HDFC Life, Torrent Pharma, and Make My Trip. In terms of sectors, the key overweight sectors include banks, telecom, healthcare. However, key underweight sectors include IT, metals, consumer discretionary. Lastly, their December 2025 Nifty target is of 26,000 and therefore has around 13% upside from here on.
Thanks, Rucha, for getting us the views from Citi as well as Morgan Stanley. In fact, we also caught up with Amish Shah, head India research at BofA Securities, who is bearish on India and believes that India is going through growth moderation phase. Let's also listen in to that conversation.
I'm sorry to spoil the party, but we definitely are in the bearish camp. Meaning, as you would know, we went negative on the markets back in August last year. And despite the correction, we think Nifty at best is going to return single-digit returns this year. When it comes to mid and small caps, we are still in the camp of them providing negative returns even from these levels. So still more downside.
No, I mean, sometimes you just need, a very clear view. All right, so then what is the positional play over here? I mean, for long-term investors watching this right now, wealth creation opportunities come at bad times. Is this one of them, or there is more to go?
There's more to go. So think of it like this, that single-digit returns for Nifty is equal to you making that from a bond market.
Yeah.
Right? We all know equities are volatile, equities are risky. If you're going to make a bond kind of a return from an equity, I think you're better off with a bond right now. Fixed income is a better way to do it. And that is as far as the large caps are concerned. And mid and small caps, we argue, will be negative returns. It's best avoided at this point in time.
Wow. Amish, morning. So what is leading to this? Because we've seen, okay, let's argue that there are some internals out here in terms of lack of growth in the last couple of quarters. I believe your notes around Q3 as well paint to a low single digit or mid single digit growth. So earnings are definitely a problem. But I would guess that fund flows out of India, maybe into China, maybe into some other markets are also to be played out here. One question that nobody's been quite able to answer, and I would love to seek your opinion here. What's happening to FI flows? I mean, there is serious outflows. What are client conversations like? What are you telling your clients about where to park the money? And does this money come back at some point of time due to a catalyst, or will we continue to see outflows in the near term?
So Neeraj, for me, this answer is like a pure arithmetic. If you think about it, in the US right now, you can make a 4.5% return risk-free on a US Treasury. Right? So that's your US dollar risk-free return. Add to that another 2% of rupee depreciation that is likely this year, over and above 4% that has already happened in terms of rupee depreciation so far.
So clearly, in terms of the risk reward, that is what Amisha is talking about. But the stage, as we mentioned, is set for the inaugural edition of NDTV Profit Conclave themed Blueprint for Viksit Bharat at 2047 will bring together India's most prominent corporate and political leaders to explore the country's revolutionary roadmap to becoming a developed nation by its centenary. My colleagues Alex and Mahima are at ITC Parel to set up for the big event. Alex, Mahima, over to you. What's the mood check like?
Well, as things stand right now, it's the last sound checks that are taking place behind me, and the stage is looking really beautiful. But more important is who is going to be on that stage, and we've got a power-packed lineup through the day. You've already heard what the theme is. It's the blueprint for Viksit Bharat 2047, and this is something that matters to every Indian, but of course, more importantly, it matters to the Indian investor, because they're going to get a front seat ride through that journey to Viksit Bharat.
Absolutely. So we're going to be discussing, topics around the 5 pillars of Viksit Bharat 2047. That is your economic growth, your technological upgradation, social empowerment, sustainability, as well as, the overall infrastructure development. And we're going to be, joined by big corporate giants, stalwarts of markets like Ridhim Desai. We're also going to be joined by the Union Ministry of Commerce and Industry, that is Piyush Goyal. Also names like Anish Shah of the Mahindra Group,
and
as well as
Sethi of State Bank of India, because the banking sector, of course, we've been talking about this over the course of the last several weeks. They're going to be front and center through this story, both consumption-wise as well as funding infrastructure. But there's more, of course. There's a lot of discourse in the recent past about mutual funds and mutual fund investors. We've got a power-packed lineup of the frontline mutual funds in India as well. The likes of Navneet Munot of HDFC AMC, we've got Radhika Gupta, we've got Swaroop Mohanty, and we've got Nilesh Shah of Kotak AMC. And they're all going to talk about how things stand for the Indian investor. We've seen those flows every month, but what do they think about how things are going to go going forward? That's part of what we've got lined up. Of course, Mr. C.S. Sethi is going to be talking about the opportunities for the banking space as well. That's something that you will want to watch out for.
Absolutely, and AI will be the focus of this because that is something that is going to revolutionize the next decade probably, and even going forward. So AI, we'll have a power-packed panel on AI as well as sustainability, because without sustainability, I don't think that India is going to become a developed nation from a developing one. So, and we're also going to be live on YouTube, Alex.
Yeah.
So the entire conclave is going to be live from our YouTube handle of NDTV Profit as well.
Yeah, no doubt. And so some of those conversations you should definitely catch if you can catch all of them. Of course, they'll be available through the week as well. But why you should watch this is because it's going to give you insight as to how to plan your own investments. You're going to drill down into the details of how we're going to achieve this vision of Viksit Bharat by 2047. Guys, we're all excited, and I'm sure you are as well.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Welcome back to India Market Open. Let's take a look at some of the big moves ahead. Block deals are in focus today. We have Varsha joining us to give us that list and all the stocks which were in focus on the back of those bulk deals. Varsha, good morning.
Good morning, Agam. Let me start with TVS Supply Chain Solutions, wherein Allianz's FinNet sold almost 0.45% of stake at 128.86 apiece, while this was bought by TVS Motor Company, which bought those 20 lakh shares. Now, amongst the bulk deals, we have Azex Engineering, wherein Morgan Stanley IFSC fund sold almost 0.66% stake of the company. And next on the list we have Cyan DLM, wherein Sarwana Securities bought almost 6 lakh shares at 420.69 apiece, which represents almost 0.75% of the stake, while this was sold by SSPL Securities, which sold almost 6 lakh shares. Last on my list is Gensol Engineering. We know the issues of pledge going on in the company, wherein now if you see the Anmol Singh Jaggi, who is the promoter of the company, sold 2.15 lakh shares, which represents almost 0.56%. This was sold at 533.05 a piece, while the stake as of December 2024 of Anmol Jaggi stands at around 21.2%.
Thank you, Varsha, for getting us the details. I think these are few of the names we should be focusing on. Gensol is an interesting one as well. But moving on, you have ABB, the Indian arm actually reported numbers. The profits have jumped 56%. If you see in terms of the margins as well, they have expanded. Anushi joins us with the details. Anushi, what are you picking up with regards to ABB numbers? I know that the con call is still awaited, but the key highlights so far.
Hey Hiral, morning first of all. So now in terms of where the numbers are concerned, it continues on a solid trajectory in terms of where the revenue growth is concerned. We are looking at a 22% of an uptick at 3,365 crore. Even EBITDA continues to outshine the revenue growth as well. We are looking at a 58% of a growth at 657 crore, with margins inching upwards to 19.5% versus 15%. Do note that this is not a one quarter phenomenon. We are looking at a margin uptick in the last 3 quarters also. We are seeing margins in the range of 19%, and this is led by the higher gross profit margins overall, along with improvement in what is higher price realizations and higher volumes supporting the margin profile. Net profit is around 56% up. Now in terms of where the revenue growth is coming from, it's electrification which is leading mainly to the growth picture that is there. In fact, if you look at the segmental growth, electrification is seeing about a 33% growth, motions 22% growth, process automation saw flat growth, while robotics and discrete automation saw about a 30% growth. But coming to the order position, now this is an important one because this is where we saw a dip in terms of where the new orders are. Looked at a 14% dip at 2,695 crore, and this is on the account of large orders that were there in process automation and the motion segment last year. If you look at overall orders that have seen about 6% growth in the calendar year 2024, and order backlog stands at 9,380 crore with a 12% growth. Now what is to be seen is the mix of the base and the large orders here, so we'll get a sense on what the execution can be for these orders that are still there in the backlog. The company also announced a final dividend of 33.5 per share. Now again, overall, if you look at the key takeaways, book-to-bill ratio remains in the range of 0.76 times versus 0.8x times, and revenue growth and the margin profiles continues on a strong trajectory. So overall, a good set of numbers that we are seeing for ABB India.
Right. Thank you so much, Anushi, for giving us all those details with respect to ABB India. I just want to add in my 2 cents on ABB. Firstly, that as far as 2024 is concerned, it was a year of ABB, and that is because quarter after quarter it came up with growth, and it was very evident in the kind of margins as well as profitability as well. The management being extremely confident about the prospects of the business, which is why even in terms of valuations, the stock of the price, rather the price of the stock was soared in 2024. But towards the end of 2024, and perhaps October, November, December is when we started seeing a little bit of come off, and that little bit of a decline eventually led to even a further weakness as far as ABB is concerned. And that was, of course, taking valuations into consideration, we did see a little bit of an stretch in that particular area, and which is why at the moment we are seeing a decline. Not to forget that even the parent has suggested that there has been a slowdown in the global side of things, and India to a certain extent may see the repercussions. So while the quarter has been a decent one for ABB, we must remember that considering its current order backlog, the growth may now not be as strong as what we have been used to. But that's ABB's concern. Again, we'll keep an eye on how things pan out. Of course, ABB is currently testing a 52-week low, if I'm not mistaken, currently at around 51.70, 51.80. That's where its 52 week low is. So it could potentially will test that again. But let's move on and talk about Zomato now. And that, in fact, has announced the launch of Nugget. No, not chicken nuggets, but Nugget, that is an AI tool. And this is an AI-powered customer support-based platform for businesses across the globe. According to Deepinder Goyal, the CEO of the company, the tool is touted to be able to solve up to 80% of queries autonomously by learning and adapting in real time. To give us more information on Nugget, I have my colleague Rishabh joining us to give us more. Rishabh, tell us what Nugget offers and how the company makes use of it.
We have some latest news coming in from Zomato. What we're hearing is that Zomato has launched Nugget, which is an AI-powered tool which is meant for customer support. This was an internal tool that they were using for group companies across Zomato, Blinkit, as well as Hyperpure. But now Nugget will be available on a subscription basis for other businesses as well. Other businesses that will have customer-facing arms as well. What we're seeing is that this is an AI-based platform. It is highly customizable. It doesn't require any sort of a development team or a coding base. It can easily be operated. So it is a SaaS solution that is coming out of Zomato Labs, which is the in-house incubator that Zomato has opened up. This was a tool that was being worked upon for about 3 years within Zomato, and now it's being opened up to other businesses. So what this indicates is the fact that Zomato is willing to go beyond the food delivery and the dining out space. We've seen that with the launch of District, it is now entering the event space, but now we're seeing towards the tech side, Zomato now moving into SaaS-based offerings and making their platform sort of the go-to platform for anything to do with businesses. So this is one of the first launches that we're seeing as part of this SaaS suite of tools, and we will keep our eyes peeled for more.
Right, so that's a Zomato that will be in focus on the back of the AI tool Nugget that has been launched. Let's see how this impacts in terms of stock performance, how the investors take it. But moving on, let's quickly look at the stock list that will be in focus in today's session. First up, ABB will be on NDTV's watch list today. The profits have gone up 56%, a green on that one. Power Grid Corporation, a thumbs up. They've won multiple orders. You have a GMR Airports on the back of the Jan passenger traffic that has gone up 11%. Both international and domestic have been strong. You have Anant Raj. They've signed a pact with CSC Data Services, and this is on the back of the data center launches. So an interesting one because the stock has really gone beaten down. There could be some bit of a good recovery that could come in on Anant Raj. And you have a Maruti Suzuki, where Citi has gone ahead and hiked the target price on the counter.
Well, and among the other stocks that will be in focus today, we have Max Healthcare, where we in fact do have UBS, which has upgraded the company to a buy. And among those stocks that could be under pressure today, we have Matrimony, where CFO Sushant Aspire has resigned. Bharti Airtel promoter to sell 0.8% stake in. We also have Zinka Logistics, which will be in focus, where 5% of shares will exit in lock-in. So keep an eye on that one as well.
Right, so that's with regards to stocks which are on our radar. But let's also welcome in our guest, Sunny Agarwal, Head of Fundamental Equity Research, SBI Cap Securities, and Kunal Shah, Senior Technical and Derivative Analyst at Mirai Asset Sharekhan, joining in. Gentlemen, good morning and welcome to the show. My first question coming to you is with regards to Kunal. In terms of the way markets have ended yesterday, I mean, the longest losing streak over 2 years is what we've broken, that mild bit of positivity that has come in. What are the levels that you will be tracking in today's session in terms of Nifty as well as Bank Nifty?
Good morning, everyone. I think firstly, yes, after I think 9 days of selling, negative closing, what we got for the markets, finally a positive close, what we got in yesterday's trading session. But this does not change the entire trend for the market. The overall trend now from a downward trend now changes to a sideways trend. So still the trend has not changed on the upside. On the higher end, the resistance is placed at 23,250, which is the 20 DMA for the markets on the upside. And once we surpass that level on a closing basis, that would result into a change of trend. So my view is sideways for the from the current structure. Yesterday's lows needs to be protected now. That is very important. If we don't get any follow-up move in today's trading session, again we might see selling pressure coming back from the higher levels as well. So overall, the view remains sideways for the Nifty index. Similarly, for the Bank Nifty as well, the data also indicates the same. Bank Nifty is stuck in a broad range where 48,500 is a support and 50,000 is a strong resistance on the higher end. We are able to sustain above the mark of 49,000. I think dips into the Bank Nifty should be an ideal opportunity to go long into, where 49,700 to 50,000 levels could be seen on the higher end. The reason behind this is that on the monthly expiry in yesterday's trading session, 50,000 call writers unwinded some positions. HDFC Bank was positive in yesterday's trading session, a good setup for further longs to be added. ICICI Bank in yesterday's trading session on an intraday perspective breached the 20 DMA, but it was able to recover from those levels. So I think these two are crucial, where ICICI Bank needs to again witness follow-up buying action. HDFC Bank is already looking strong on the chart perspective. So if these two banks continue to move on the upper end, we can see Bank Nifty going towards the mark of 50,000, which is the initial sign. But as I said, it's early. The one day of buying cannot be considered as a trend reversal. That larger term trend still remains on the negative side. But this could be a pullback at least that could start, which would take the Bank Nifty index towards the mark of 49,700, 50,000. So I'm much more constructive or positive on the Bank Nifty right now rather than Nifty at the current.
Right, Kunal, and what about stocks that look interesting to you this morning?
So I think two stocks are there on the buy side. First looks SBI Life. I think in a volatile market in the last 6 to 7 trading sessions, what we got selling pressure. This stock has been resilient. We are seeing high tops, high bottom formation on the lower time frame. Plus on the FNO data, we have seen long positions that have been added. The stock is trading above the short-term moving averages of the 20 DMA. So all positive signals, what I see for the stock, I can expect this stock to go towards a mark of 1510 to 1530 on the upside, currently trading at 1476. One should keep a stop loss of 1450 on the downside for SBI Life. Second is from the pharma space, and Zydus Life looks strong on the technical charts as well as on the FNO data. On the technical chart, there is a double bottom formation which the stock has formed. So, and on the derivative data, there has been longs that has added in yesterday's trading session. So both the data looks positive. I expect this stock to go on the higher side towards 950, 970. It's currently trading at 924. One can keep a stop loss of 900 on the downside.
Right, so those are topics coming in from Kunal Shah as well. Sunny, good morning. My first question coming to you is, how would you advise investors to trade the current markets? Would you advise buying, or would you say stay on the sidelines right now?
Yeah, good morning everyone. Sorry, and thanks for having me on the show. I think what we are advising our clients is that if you have got 100 rupees to be deployed, fresh capital to be deployed in the market, then better do a staggered buying till the month of April, because what we believe is that when we start listening to the management commentary in the month of April and May and full year outlook for FY26, we are optimistic that the double-digit earning growth is something that will come out as an outlook from a management side. And at that point of time, I think all the uncertainty pertaining to the Trump tariff will also be behind us, and that should lead to optimism, at least in certain pockets of the market. So in case you have got a fresh capital, you can deploy gradually till the month of April. Few sectors which we are recommending are definitely banks and NBFCs. Within NBFCs, consumer-facing businesses, SME-facing businesses, case in point Bajaj Finance, or for that matter AB Capital, housing finance companies like PNB Housing. Within banks, ICICI Bank, Kotak Bank, among the PSU Indian Bank. So a whole lot of companies across banking as well as NBFC space. On the consumption side, hotel as an industry continue to look good, where we feel that again after a robust December quarter, the trajectory for next 3 to 4 quarters should also continue to looks pretty good as far as hotel industry is concerned. And we have seen a decent correction in terms of valuation also. So hotel as a sector also looks good. On consumption side, a few consumer staple companies are looking attractive. A case in point, ITC post demerger of hotel business, or for that matter, Imami, which has reported a decent set of numbers. So few companies across consumer staple. Yeah, so these are the few sectors which we are recommending to our clients.
Right. Sunny, we've had earnings from ABB India. The earnings look fairly good, but keeping valuations in mind at the moment, and also peers like Siemens, how are you rating this particular sub-segment? What would you do with it?
Again, yes, you rightly pointed out that numbers are pretty robust, but when it comes to valuation, again, trading at north of 50, 60 price to earning multiple. And in the current market scenario, we have already seen that even though companies that are reporting good set of numbers, trading at an expensive valuation are facing a lot of selling pressure. So I think I would like to remain neutral on the companies which are trading north of 50 and 60 price to earning multiple, at least for next few months, and at least we would like to see some time-wise correction also, although the price-wise correction is something which is already been factored in, but time-wise correction is something which we would like to see across the cap goods as a sector, although the sector continue to look good, whether it is in terms of order book, revenue visibility, or growth perspective, but valuation is something which is still not comfortable in cap goods sector.
That's to where the cap goods sector goes. Siemens, the stock ended with cuts of 2.5% in yesterday's session. But moving on, let's take a look at the top 3 stocks on Varsha's radar as well. Varsha, which are the 3 names that you are picking up in today's session?
Yes, Hiral. So let me start with 197 Communications, that is Paytm, wherein they've partnered with SBI Mutual Fund to launch Jan Nivesh SIP of rupees 250. The launch is to contribute to Vikasit Bharat vision, and it offers flexible SIP options for young professional and first-time investors. Then on my list is Karnataka Bank, wherein bank found issues with suspicious international UPI transaction checks, but they said that there's no impact on bank's operation or customer service, and the estimated impact on the bank in terms of financial numbers stands at around 18.87 crore, and bank will have has initiated necessary actions towards recovery of the amount involved. Last on my list is KIMS Hospital, wherein they've taken over the operations and management of UAIMS Hospital, which is located in Sangli, Maharashtra, and this strategic partnership will enable KIMS to exercise call option to acquire majority stake in UAIMS Hospital in the coming years. The strategic partnership at Sangli is in aligns with KIMS Hospital strategy to strengthen its presence in the state of Maharashtra. In Maharashtra, as a first step, it had acquired a hospital in Nagpur in 2022, and in 2024 also started operation at second hospital at Nasik. So they want to increase their presence in Maharashtra because KIMS is more dominated towards south. KIMS has already announced 300-bed multi-specialty hospital in Thane, slated to commence operation in the first quarter of next financial years. If I were to talk about a UAIMS, so they are in advanced quaternary care hospital with 356 beds, expandable to 500 plus beds, and they focus on critical care, and daycare oncology center is also planned, which will be in operational in 2025.
All right, Varsha, thank you so much for all those details of those are the 3 stocks which will be in focus. Let's pull up something like a Paytm, since that's been in focus, of course, for the update. But the question really is, where does it stand in terms of the fundamentals? So I'll take this question up with Sunny. Sunny, your view on Paytm now? It's corrected, of course, along with the rest of the market at this point in time. Do you think that valuations are good to entering, considering the business model of the company?
Yeah, I think the business is on the verge of turnaround, and post the regulatory hurdle, we have seen that a company has switched its business model also and trying to regain its mojo back. I think the fair value of the business at a current juncture is close to 900-950 rupees. But again, it's a high risk, high return kind of bet where we are betting on a business which is likely to turn around and again get back its market share, which it has lost because of the regulatory challenges which the company was facing. So I think maybe somebody who is planning to deploy money in a high risk, high return bet can look at Paytm with a small allocation in a portfolio. I feel the fair value is close to 900 to 950 rupees with investment horizon of 12 to 18.
Right, so that's with regards to where Paytm goes overall. In fact, another stock that we should be watching out for in today's day of trade, apart from the names that we already mentioned, is a Bharti Airtel. There was source-based information on the block that was going to be traded in today's session. Clearly, Kunal, what are charts indicating with regards to a Bharti Airtel?
Bharti Airtel, the chart setup looks very strong. I think even with the decline, what we'll get, say 1% on the downside, I think this is a very good buying opportunity. For me, I'm expecting the stock to surpass its all-time high as well. That this was when the market was correcting, this was clearly showing a relative strength. And I expect this to go towards a mark of 1750, 1780 on the upside. So currently trading at 1675. The lower end support for the stock is now placed at 1600. So till the time it is trading above this levels, the approach would be on the buy side. 1750 to 1780 is what I'm looking on the higher end.
50 is what you're looking at in terms of Bharti Airtel, so that's going to be an interesting one to watch out for. But let's quickly slip into a short break, and as we do that, let's just quickly look at the implied open rates right now for Nifty 50. You're just seeing a 30 points cut coming in on that front, so it's going to be interesting to see how we open up, whether the session is going to be like yesterday itself or not. But a quick break and we'll be right back.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company. Powered.
Welcome back. You're watching India Market Open. Clearly, a somber start is what the implied open is indicating, but probably that could just be the beginning. Whether we catch up in the remainder of the day is going to be interesting to watch out for. But clearly, 23,000 is what Nifty 50 is chasing so far. Overall, let's just pull up a M&M on the screens, because that was one of the stocks which was actually a downer in yesterday's session, and this was on the back of the bookings that it picked up with regards to the EV segment. Overall, in fact, let me head across to Kunal to get a quick view. Kunal, what are charts indicating with regards to where a M&M goes? Because clearly a downtick 3%, some bit of recovery did come in yesterday's session, but a very quick comment on M&M.
Yeah, I think if you look at the overall chart, the long-term trend still remains positive. Yes, the short-term trend has got deteriorated. The stock on the lower end can test the support zone of 2770, 2760 on the downside. But I think that would be a buying opportunity for me. So in yesterday's trading session, the stock had broken below its 200 DMA. If there's follow-up selling pressure in today's trading session, it will test the support of 2760, 2750 on the downside. But I don't think below that the stock should fall further, and probably from there onwards we might see some signs of reversal coming back. So I'm expecting again to go the stock to go higher towards 2900 or 2950 on the upside.
So that's with regards to where M&M goes, but clearly in terms of the pre-open rates, 22,890 again below the 23,000 mark is what we're tracking in terms of Nifty 50. I mean, it's still volatile. We'll have to wait for rates to settle in as well, right?
Yeah, so of course at the moment, like I said, while we're expecting a little bit of weakness here and there, consolidation on the Nifty 50, it's, as far as your crucial levels are concerned, Nifty is about at least a percent away from either levels. 22,800, but if the thing is that a lot of traders out there have sold the 22,800 put, and that will be for a substantial premium, considering option premiums in general have been quite wide. So if you consider 50 point or 100 point premium sold at around 22,800, that would still give a lot of leeway to those who have sold the 22,800 put at this point in time. So it's possible then the Nifty can see a testing of around 22,700. But that's going to be a wait and watch. For now, we're not saying that it's going to happen, but it's always a probability. And of course, on the higher end, 23,000 is that round number, which is a bit of a pivot moving across. But let's talk about maybe something like okay. So let's take up the benchmarks now. And what we are seeing in the benchmarks is that we had seen advances for Adani Enterprises and Adani Ports yesterday. Kunal, any view on Adani Enterprises specifically? What's the way forward here?
Yeah, I think if you look at Adani Enterprise, the larger term trend has been on the downside, where low top, low bottoms are still intact. Yes, yesterday was a sign where we saw some reversals in the chart. The short-term moving average, that is the 20 days, placed at 22,994, that is 2294. So if the pullback continues, it can go towards the 20 DMA. A close above it will lead to a change in trend, and then we will see further higher levels. So from the current levels, my view is sideways. But within this sideways range, the view will be on the buy side, where one can look for targets of 2290 to 2295 on the upside.
Right, so that's with regards to where Adani Enterprises goes. Two companies that have reported their business updates is All Cargo Terminals as well as GMR Airports. In terms of both these names, it seems to be a slightly stronger number. All Cargo Terminals in pre-open is up a little over 3%. GMR Airports is another 2.5% up move. Sunny, your views on both these counters?
Yeah, so GMR number seems to be a descent where we have seen kind of 11% year-over-year passenger traffic growth for this month. And if we look at the year-to-date number, that number is also 9% up year-over-year. Again, January month driven by predominantly Hyderabad airport. And again, year-to-date number also predominantly driven by Hyderabad. So I think a decent number as far as GMR airport is concerned, and we believe post this correction, it's a good opportunity. And in fact, the entire airline as an industry, whether it is an airport operator or airline operator, looks a decent bet at a current juncture. Coming to Alcargo, I'm sorry, that company is not under our coverage, and hence I would not able to comment on that.
But Sunny, tell me about BSC. You know, while we've seen sharp corrections of 10, 20, 30% from top, BSC has not corrected as much. And in fact, the valuations still remain quite well rich. What's the way forward here? How are you assessing this stock?
Again, the impact which was expected in terms of volumes or at least the value term in terms of transaction value, that has not come off significantly as far as the BSC is concerned post these regulatory changes which are being implemented since last 4 to 5 months. And that is the reason we have not seen a very sharp correction as far as BSC is concerned. And so that's one of the reason. And if you talk to other many capital market players or brokers, so they are pretty confident that over the period of next 3 to 4 quarters, the volume which has been lost because of the change in various regulation can be recouped over the period of next 3 to 4 quarters. And that gives a lot of confidence that maybe FY26 can be a slightly muted year in terms of earning growth. But then FY27 can again see a very high digit kind of double digit earning growth for all the capital market player. I think the fair value of BSC at a current juncture is close to 5,700, 5,800 rupees. No doubt trading at an expensive valuation at a current juncture.
Absolutely. Valuations are expensive with regards to BSE, but in the last 1 year, it has been a multi-bagger with returns of nearly 2.2 times coming in for the investors. But let's just quickly pull up the Indian rupee. It's weakened by 5 paise to open at around 86.93 against the US dollar. So that's the rate we're tracking. And the 10-year yields have opened absolutely flat at around 6.69. So that's a currency check quickly overall. But on to the big brokerage call of the day, which is our 905 special. UBS has upgraded Max Health to a buy rating with a target price of 1,200. Puneet joins us with the report. Puneet, why the upgrade and a target price of 1,200? Why is UBS positive?
Well, thanks for that. So, they've resumed coverage on this particular stock, and as you rightly said, target price of 1,200. This was 610 earlier on the stock, so it's almost a 50% jump of what they estimate, actually 100% jump from what they estimated earlier in terms of target prices. Now, the key aspect is that still, the stock is of course corrected roughly 13 to 15% over the last 2 to 3 weeks because of the correction, and that is something that they're mentioning is one of the key aspects. Apart from that, they're mentioning that, they believe that the market is currently not appreciating the kind of asset that Max Health has built in this particular time frame, and expecting that the strong visibility in terms of new bed additions is something that they are very positive on. Apart from that, they are mentioning 3 to 4 key reasons why you should have this stock on your radar. The first one is, of course, the efficiency as well as the turnaround. It's just taken about 6 to 7 months for the hospital to break even in the last 3 to 4 years that has come in. That's one of the key aspects. The second one is, of course, the track record on occupancy, which has increased steadily over the last few quarters, and of course leveraging the asset light model. They feel that the company is the market leader in this particular aspect, and hence seeing turnaround of new projects. They are estimating that the bed capacity should double over the next 3 years, and they will expect to generate 8,000 crores in terms of operating cash flow. So all these multiple positive factors on the stock, and hence UBS is positive on this company.
Right, so positive coverage coming in terms of Max Health. Sunny, how are you looking at a Max Healthcare? The stock in pre-open is indicating an upside of around 3%, an upgrade coming in from a UBS, a target price of 1200.
Yeah, I think, if you look at the entire life insurance as a space, that has been a clear underperformer during the last 12 to 18 months. And of late, the premium collection numbers are at least healthy for a few private player guys like Max, SBI, or for that matter, ICICI Life. So again, we continue to remain constructive on the back of a decent valuation at which all the life insurance majors are trading. So continue to remain constructive on Max Health as well as HDFC Life.
Right, so that's with regards to where SBI, the insurance space goes. Kunal, any picks that you see in terms of the insurance space where you're seeing value?
Yeah, I think firstly, I had spoken about the call that was SBI Life. I think that looks very attractive to me. I think still there is a decent upside left in the stock from the current levels. So that would be on my buy radar over here. Eventually, if you look for a long-term targets, I can see the stock going towards the mark of 1600, 1650 on the higher end. So 1476 is where it is currently trading now. So at least a 10 to 15% upside is what I'm seeing in the next 1 month.
Right, so that's with regards to where SBI Life goes so far. Can we just quickly have a ABB on the screens as well? Because clearly in terms of the fourth quarter, it's an interesting one, 3.5–4% coming in terms of pre-open. Kunal, a quick view in terms of ABB, what would you advise investors to do?
Yeah, I think it is already trading in an oversold territory, so definitely a technical bounce is due for the stock, which would come in. So the rally could extend, the pullback rally could extend the stock towards the mark of 5,800, 6,000 levels on the upside. But again, that would be a trading bet. What you'll be getting, 6,000 is somewhere you should ideally start to look for again booking profits. The stock can again come down to the levels of 5,500, 5,400.
Right, so that's with regards to where ABB goes. Apart from this, let's pull up a Zomato on the screens and see what the stock is doing on the back of the AI tool Nugget that has been launched. No major move, 0.6 to 0.7% higher. Let's pull up a Swiggy on the screens as well and see what Swiggy is doing in trade, because both these counters have been on investors' radars. Sunny, your view with regards to the quick commerce players and the delivery partners like a Swiggy and Zomato, with regards to valuations and the way the stocks have performed so far, what would you advise investors who are sitting with money on the sidelines to do?
Yeah, again, coming to Swiggy and Zomato, one thing is pretty clear that over the period of next 2 to 3 quarters, because of the increase in competitive intensity in quick commerce business, blended margins are likely to remain under pressure. So food delivery business may continue to do well. On the other hand, the margin will be partially taken off by the quick commerce business due to the increase in competitive intensity. So if somebody is a short-term trader or investor looking for a 2 to 3 month kind of bet, I would recommend them to stay away from the counter. But somebody is a long-term investor having an investment horizon of at least 2 to 3 years, then it's the right time to accumulate in a staggered manner. Maybe SIP is the right equity SIP is the right way, wherein one can accumulate both these counters over the period of next 6 to 9 months, with an expectation that once this competitive intensity is off in the quick commerce space, the margins will be back to a normalized margin during the FY27. So again, I feel the fair value of Zomato is close to 260 to 70 rupees, and investment horizon of 12 to 18 months. And coming to the Swiggy, again, the fair value comes to 450 rupees.
Kunal, can I come to you on these two counters as well? Zomato specifically, it does seem like it's moving sideways now. But if you were to take a long or a short, what would it be? Of course, Zomato is also available in futures and options space. Your view?
Yeah, I think Zomato, if you look on the lower end, it is trying to find a support around the 210, 212 zone. It is on the verge of breaking above its 20 DMA, which is priced at 222. So today's opening again will be critical. If we open above the 20 DMA and we are able to sustain above that mark, that will result to further upside into the stock. So the higher end targets, what I see, if we sustain about 222, then the next level will be 233, that is 233 and 238 on the upside. So wait for the stock to open. If it is able to sustain about the level of 20 DMA for the first 15 to 20 minutes, that will give you a positive setup, and then we will see the rally extending towards the mentioned targets.
Okay. And Sunny, now come in on the jewelry stocks. Now what we've seen is a very sharp correction in, names like Kalyan Jewelers, sharp correction in Senco. On the other hand, Titan hasn't always been up to the mark. Opportunities in this space, if at all, or do you think that there are still concerns out there when it comes to the jewelry sector?
Yeah, I think I would like to talk about Senco. That's under our active coverage. And what we have seen is that margins has come up in this quarter because of this hedging policy and mismatch of timing, whether it is in terms of hedging your gold prices in the terms of GML and taking a counter position on MCX and squaring off during the buy sell. So there is a mismatch in timing of both these hedging strategy, and that has led to the margins coming off for the Senco Gold. Again, we believe that the company is on track to deliver 15 to 18% kind of growth, led by both expansion of COCO model as well as franchisee model. And we believe the fair value of the business is close to 550 to 600 rupees. Although the margin overall analysts, if you take analyst estimate, the margins will be trimmed by close to 80 to 100 basis points for FY26 and FY27. After taking into account all these numbers, I think the fair value of this Senco Gold comes to 550 to 600 rupees with an investment horizon of 12 to 18 months.
Okay, I think we have less than a minute left. Kunal, any other quick stock on your radar at the moment?
Yeah, I think overall, I find Bajaj Fin's setup to be very good. Bajaj Finserv has already seen a sharp rally on the higher end. Now I think Bajaj Finance should follow up this rally, and I'm expecting the stock to go towards the mark of 8,700 in the very short term. So that is on the buy side. One can keep a stop loss of 8,200 on the downside.
Right, so that's with regards to Bajaj Finance. We're just around 20 seconds away from pre-open. So clearly, the way we open in terms of Nifty and Bank Nifty will be interesting. Few stocks that will be on our radar is Bharti Airtel and M&M from the top, the large cap space. Apart from that, Matrimony, Indian Oil, few of the other names we should be watching out for. But interesting moves that could be coming in. M&M is one that should be on our radar as well. Let's quickly look at the opening rates right now as we speak. 22,966 is what we've opened at in terms of Nifty 50. So pretty flattish opening is what we are tracking right now as well. If you see in terms of Bank Nifty as well, no major moves coming in on that front. So that's pretty interesting. 49,230 is what we're looking at in terms of Bank Nifty. Let's pull up the broader markets, the mid cap and the small cap index. Let's see if there is any action picking up there. There you go. Just a 1/10 of a upside coming in terms of mid cap 150, as well as if you look at small cap 250 as well. Again, a pretty flattish move. So currently, you're not seeing any major moves coming in terms of where markets go. Let's just pull up the sectoral heat map, and before that, the Nifty 50 heat map as well, to understand where the action is. There you go. The VIX is up around 2.4%. But in terms of sectors, it's pretty mixed. What's losing is the consumer durable space, oil and gas space, auto space. They are slightly under pressure. What is holding up is Nifty IT to the tune of around 0.5%. Real estate is seeing some bit of up move after the sell-off yesterday. Pharma, marginal uptick, and the private banking space, which is up 0.2%. But clearly, it's a 50-50 market, it seems like, from a sectoral perspective. Let's pull up the Nifty 50 heat map as well to understand. There you go. The advanced decline ratio absolutely in favor of the bears. You have Ultratech, which is losing out, NTPC, ONGC, BPC, also oil and gas companies on the downtick. You have Coal India, Tata Steel, SBI, Bajaj Auto, that's coming to my radar. Wipro is holding on. Apollo Hospitals is holding on. Bharti Airtel is interesting. The expectation was of a downtick. It was a thumbs down on a NDTV Profit radar, but it is up around 0.8 to 0.9%. Adani Enterprises is in the positive. Let's see what M&M is doing. Not really able to trace where M&M is, but that was under pressure yesterday as well. So, I mean, today again, major downtick coming in terms of M&M. No, around 0.3 to 0.4% lower in terms of M&M as well. So clearly, a few of the other names, was Indian Oil as well. So let's just pull up our Indian Oil and see what Indian Oil is doing right now. And that's on the target price miss, around 0.5% lower. So again, Agam, no major moves. We're pretty much on that flattish territory right now, not only in the large cap space, but also in terms of where the broader markets are concerned. No major trends emerging so far as well. I think we'll have to wait for the markets to settle down little bit and then see what happens in the broader markets from here on.
Yeah, absolutely. And broader markets, as you mentioned, Hiral, have not exactly been moving in tandem with the Nifty 50. Maybe this morning they are, but there's a marginal green in the mid cap index, the small cap index. Let's pull that up as well and see where that one is standing. Again, not too much to go in for. So, well, that's as far as your benchmark indices go. But the reason why you can't really base a lot of your assumptions on benchmarks, particularly in the broader markets, is because there are a lot of stocks out there which will be in these benchmarks, which will have very varied moves. Speaking of which, let's talk about some of these names which will be in focus in today's day of trade on the back of news. So we start by taking a look at perhaps, so we'll take Kim's, where it's taken over a hospital, but we have seen just a barely marginal move out here. Moving on, as far as GMR Airports is concerned, we've seen an 11% uptick in the January traffic, and that has led to perhaps a 0.4% increase in its share price. But again, not a very, very sharp up move is what we are seeing on the back of that. Let's move on and talk about Power Grid. Of course, Power Grid is a successful bidder in 2 projects. But as I was mentioning, a lot of these projects are, routine for Power Grid, which is why we're not seeing too much of a reaction of Power Grid either. And of course, PTM. This is a very interesting tie-up with, SBI AMC, where they are looking at a systematic investment plan, of about no more than a few hundred rupees, which is of course a positive, but again, PTM not reacting too much. Max Health is the other one which is on our radar. We do have UBS, which has once again put a target of around 1,200 rupees per share, in fact upgraded the company to a buy. And the final one on our radar is Borosil Renewables. Borosil Renewables has come up with earnings. It's locked in an upper circuit. It does seem like, investors are happy with what they're seeing with respect to this particular company in terms of, the fine print with respect to the quarter gone by. But again, very subdued cues, not only for the benchmarks, but for the broader markets as well as some of these names which are in the news. We haven't seen too much of a move except for Borosil Renewables. So I'd reckon that it's going to be that kind of a day here.
A subdued day of trade is what we're tracking so far. ABB, interesting moves coming in on that one that Agam mentioned. Few of the other names I would want to mention right now is Zen Technologies. Second consecutive session of cuts. Yesterday a 20% rout, today 8% is the kind of cuts that you're seeing on that one. Usha Martin is under pressure. Godfrey Phillip is seeing profit booking in today's day of trade as well. Gensol is down around 2 to 3% as we speak. And few of the other names which are holding up is Gokuldas Exports, a 5 to 6% up move coming in on that one. Senco is another one that is seeing some smart moves. In fact, Sunny, with regards to the opening rates that have come in so far, how are you looking at the day? What would what would your top picks be?
Yeah, so I think I would like to add M&M in a current correction in the portfolio Mahindra and Mahindra. I feel that the kind of the traction the company is showing on both farm equipment, that is tractor side, as well as on SUV side, and coupled with a decent booking of what we have seen on the electric vehicle portfolio. Although the electric vehicle portfolio may exert some margin pressure in the short term, but ultimately management has given an indication that in a long run, the margin for an electric vehicle portfolio also will be in line with its ICE portfolio. And it's a decent opportunity to add M&M with a fair value of 3,400 to 3,500 rupees. Again, as we have discussed earlier, hotel segment looks attractive. So Indian Hotel is the one stock which I would like to add in the current correction in the portfolio. On NBFC side, Bajaj Finance, where they have recently unveiled their growth plan for next 5 years, wherein their AUM is likely to grow by 23 to 25% over the next 5 years. I feel the fair value of the business is close to 10,000 rupees, so Bajaj Finance can be added in the portfolio. And just one clarification I would like to give. Earlier we were discussing about Max Healthcare. My bad, I misconstrued it as a Max Financial Services. So both are trading close to 1,050 rupees price band. So Max Healthcare is into the hospital business, and again we continue to remain constructive on Max Healthcare as an hospital entity.
Okay, so speaking of hospitals at the moment, let's pull up something like Yatharth and take a look at where that one is trading. I want to actually pull up a handful of these hospitals to see if any one of these is looking like an interesting one. So besides that, we have Apollo Hospitals. That's of course a part of the Nifty. The Apollo Hospitals in fact has gained it's done well on the back of earnings. And of course, we also have, Jupiter, if I'm not mistaken, that's the other one. And of course, several others which will, of course, remain in focus right now. But besides that, we also have very, very tough moves on still a lot of parts of the markets right now. So if we can actually pull up the list of BSE gainers and losers to see where there are gains and losses coming in, it'll give you a better idea of what the broader markets are doing. And if we can bring that up for you, there you have it. So you have La Opala and Godfrey Phillips along with something like a Campus, which continues to be under pressure. Carborundum is the other one along with Reddington, which is also down and out. We have an upper circuit. Actually, the upper circuit seems to have opened up for Borosil Renewables, but it's still very, very strong right now. ABB has advanced by around 2.5% on the back of earnings. Persistent Systems, Rajesh Exports, 5-Star Health, as well as PB Fintech is also looking at a little bit of a recovery. PB Fintech is another very interesting counter where it's also extremely susceptible to market moves. Sunny, come in on something like a PB Fintech, which at one point of time was trading at around 2,000 rupees per share and has now fallen considerably. Is this a time or an opportunity that you'd like to take this up or would avoid?
Yeah, I think post-correction now, valuation seems to be a descent as far as PB Fintech is concerned. And what we feel is that the fair value of the business is close to 1,800, 1,900 rupees. So yes, it's a good opportunity to add in this current correction in a long-term portfolio, obviously with a small allocation.
With regards to PB Fintech as we speak, but moving on, auto is going to be in focus today as well. You have Tesla India, which has actually started hiring in India for likely entry into India this year. Tushar joins us with more details. Tushar, what are you picking up with regards to Tesla and how do you see it impacting Indian automakers?
Good morning, Hiral. So very interesting developments this morning. Tesla on its website has listed 13 job openings from sales and service for Mumbai, which indicates that the company might set up its first store in Mumbai sometime later this year. That's what our sources have also told us. A low-cost model, as was initially rumored, is not in the works at this point of time, but the company will come with its entire model lineup from the Model 3 to the Model Y in India. But the Cybertruck will not come in India at this point of time. The companies that it will impact are majorly the German car makers, your Audis, BMWs, as well as Mercedes, because that is the ballpark price that the company will charge. Remember, they are coming into India, or their likelihood of coming into India is after a tariff cut that the government of India announced in the budget to about 70% for high-end cars, which means they'll come in about 50 lakh rupees for the Model 3 entry-level model. That's still 20 lakh higher than what Mahindra would charge for its XEV9e and the BE6. And it will be somewhere little lower than the Mercedes, Audis and the BMW. So their pegging would be around at about 50 lakh rupees. So you expect the Germans to face the brunt of the entry of Tesla, but the Mahindras and the Tatas will not be impacted immediately.
Okay, Tushar, thank you so much for getting us all those updates. And a very interesting one and also a pertinent one, given, when it comes to Tesla and making a move in any market is always going to, shake things up to a certain extent, Hiral.
Absolutely. But the question is going to be in terms of the timelines from here on, right? And what happens with regards to the new launches that are coming in the EV space in the similar price range.
Yeah.
Will people actually wait out to go ahead for a Tesla? And that would probably slightly put a dent in terms of the EV sales of the Indian other car makers in India as well. I think that's something we'll have to wait and watch and see.
Of course, we also need to make a mention of the price point, because
yeah, that's what I'm saying. It's going to be in that price point.
Right.
It'll be in the super luxury, I'm assuming.
Yes. But if we can, in fact, take a very quick view from Sunny as well. Sunny, at the moment, given Tesla's price point, anything that stands out for you here?
Yeah, again, I think the price point will be again on a higher end. It's a premium product, and one has to keep in mind that most of the domestic automobile companies, whether it is Tata, which is a kind of market leader on passenger vehicle, electric vehicle side, or the new portfolio launched by M&M, I think they have got a lower price point and have capability to migrate many of their other ICE model into the EV platform. So I think the impact should be minimal, at least in a mid-level to low-end car segment, where majority of the volumes are being driven in the domestic market. So I think the impact of Tesla should not be very significant as far as M&M and Tata Motor is concerned on passenger vehicle portfolio.
Right, so that's with regards to where the auto space goes. Tech Mahindra, Wipro, two IT names which are on the gaining front right now as we speak. Kunal, what are charts indicating? Good entry levels, or do you think these are selling levels now?
Yeah, I think IT first as an index I'll talk about. IT yesterday witnessed some reversal from the 200 DMA, and now it is witnessing the follow-up on the higher end, so looks positive on the chart. Tech Mahindra, if you talk about, I think the setup is good. Yesterday the stock had former hammer candle, and now the follow-up move is seen in today's trading session. So I think that is positive. This could head towards 1720, 1760 on the higher end. So that is positive from my end. And HCL Tech, if I look at it, the stock has been consolidating in a very broad range, taking a support at the 200 DMA. So you can say it is at a make or break level right now. And if we are able to surpass the 20 DMA in today's trading session, that is 1724, then we will see further up move towards 1800 levels on the upside.
Kunal, come in on InfoEdge as well if you can. InfoEdge is, of course, once again, seems like it's testing a lower, important daily moving average. How are your reading this one?
Yeah, I think over here as well, the stock is trading around the 200 DMA, facing rejection out there, plus trading below the short-term moving averages of the 20 DMA. So the momentum is on the weaker side. Bounces would be an opportunity to sell. The stock can test the lower levels of 6,900, 6,950 on the downside.
Right, so that's with regards to where InfoEdge goes as well. Apart from this, few of the other names that we have been watching out for is a Zen Technologies. Let's pull up that one on the screens and see what the counter is doing in trade. Clearly, a 10% downtick coming in today's session as well. Sunny, a quick one in terms of Zen Technologies. The profits, though, have jumped 30%. What is it that the market is not really taking positively for this counter? Absolutely beaten down in the last two trading sessions.
Yeah, I think one point which is worrying the street is lack of order inflow which the company was expecting in the December quarter, and that has got delayed. And however, the management is confident that order to the tune of 500 crore plus number is likely to flow in the March quarter, that is over the period of next 40-45 days, and that should give a lot of comfort. So during the analyst interaction yesterday, management continued to remain gung-ho, at least in terms of growth over the period of next 2 to 3 years. So 50% CAGR growth is something which management continue to reiterate, with 35% EBITDA margin and 25% PAT margin. Maybe I think a few large investors which have entered during the QIP at 1,600 rupees, maybe trying to exit or partially exit their position, and that is putting pressure on the stock price. But again, medium to long-term outlook continue to remain healthy as far as Zen Tech is concerned. And even during the current fiscal year, the guidance of 900 crore is likely to be met. So March quarter again is likely to be a decent quarter as far as Zen Technology is concerned.
Okay. Sunny, Kunal, we leave it at that. Thank you both for joining us and taking us through your views on the markets. And of course, we'll keep coming back to you all whenever, as and when we can. But for now, we shift the spotlight to, well, corporates. And we have Zen Technologies, which is in the spotlight, even as the stock remains under pressure for the second day, despite the company reporting a 30% increase in its net profit. Before we speak to the management, well, we have Anushi joining us to give us the key highlights. Anushi, over to you.
Hey Agam, so the big talking point for Zen Technology is not on the Q3 numbers that we are seeing. Now in terms of where the revenue is concerned, we did see a 53% growth at 152 crores, while margins stood at 29% versus 42.7%. This is also owing to the product mix of the company, and net profits saw about a 30% of a jump. But it's the lack of orders which was a concern amongst the street. Now if you look at the order book that stood at 816 crores. The company had earlier guided that they'll see 1,200 crores by the end of the year, but now currently they're seeing an order pipeline of 800 crores which could be realized in Q4 and the subsequent quarters of FY26. So ordering is something that we should be keeping a track of. In terms of where the other guidance numbers are concerned, the company expects EBITDA and PAT margin of 35% and 25% for FY25. In terms of growth, they expect the 50% CAGR growth to continue for the next upcoming few years as well. What was interesting in the quarter was also some of the key acquisitions which were made, which include acquiring Applied Research International ARI Labs. This is for 130 crores to strengthen the defense simulation capabilities. Along with that, the company also acquired Bhairav Robotics and Vector Techniques for advancements in robotics, aerospace and propulsion systems. So interesting would be on the outlook of ordering, how the margins are going to fare out with the new acquisitions taking in place and the revenue growth momentum expected over the next couple of years, which is in the 50% range.
Thanks, Anushi, for getting us the details. The stock down almost 9 to 10% in trade today as well. But to discuss more and understand what's going wrong and what is it that the investors are not really liking, Mr. Ashok Atluri, CMD at Zen Technologies, joins in. Mr. Atluri, clearly, optically the numbers do look good with the kind of growth that we've seen in terms of the profit number as well. A 30% jump comes in over there, and it's been aided by a higher other income. What is it that the street is not really probably taking positively? Because according to us, it's, I think, the expected orders that have not really materialized as per what was expected. How are you looking at it, and how are you looking at Q4 and then FY26?
So the orders, we actually anticipated that the orders will start in the end of Q3, and substantial orders will come in Q4, but they have got delayed, and I think that must have caused some concern. But at this point in time, we feel that the orders will start coming in Q4, but they may spill over to the Q1 and Q2 also. The order we're getting, but the execution will also start pretty early. So I think the lack of order is something the shareholders are a little concerned about. So I think otherwise the government is accelerating its purchases. We know a lot of product requirements that are coming up, and again, we have been saying that in terms of the average CAGR that we have aimed for the next 3 years, we are reasonably sure about achieving that CAGR rate and deliver what we have promised.
Okay, Mr. Atluri, talking about this ongoing quarter, can you give us an idea about what kind of awarding activity are we witnessing right now, and what could potentially be the order book for the company as we move into FY26?
So, no orders have been received till date, but in the next 45 days or so, we see that some orders will come through. I don't want to really give the numbers, but approximately about 800 crores of strong pipeline is there. That should, we expect that to materialize before Q2, around by Q2 at least.
When you mention about 800 odd crores, does that factor in exports? That's number one. And two, the earlier indication, if I'm not mistaken, was close to around 1200 odd crores. So do you think that gap will be filled in the fourth quarter?
Yeah, so we were saying that the 1200 crore inflow would be there. So out of that, we are talking about 800 crores domestic, and the rest we are expecting from the export order or export by way of export orders.
So with all of this said and done, with that downtick or maybe slower execution that you're seeing, are you confident of meeting that 900 crore guidance? Because the first 9 months we've seen around 650 odd crores that have come in terms of top line. So around 72% is what you've achieved.
Yeah, so our fourth quarter is usually heavy, and basically we would we encourage shareholders not to look at quarter on quarter, but yearly target we are on track as of now. We should be able to achieve 900 crores. Yes.
All right. So in terms of execution for the ongoing order book, can you give us some sort of timelines about how things could potentially pan out?
So, the order, I think whatever is the order book, we should be completing. Again, there is about almost 300 crores worth of annual maintenance contract out of in that. So, if you remove that, the remaining 5 to 500 plus crores will be executed during the current plus next 2 quarters. That will be exhausted completely.
Okay, and your 50% CAGR that you plan to achieve in the next 3 to 4 years, will you be on track to achieve that as well?
Yeah, so again, if there is the year which is muted, which like for example, if 26 is muted, we'll definitely cover it up in 27 and 28.
Okay.
So with the kind of orders that you see right now, do you think that there could be a change in the products and the services that you will be offering in maybe not, if not to FY26, by FY27, FY28, in terms of the newer trends that are picking up, your potential conversations that you're having with the government and other clients? If you could give us some sort of a picture here.
So we are completely focused on anti-drone systems and simulators at this point in time, and they're very huge market, especially anti-drone systems. And we expect we are also adding the new product, the new acquisitions like advanced ARI that we have done. That's going to give us almost the big fillip. And this is a completely area that we have ignored much, which is naval simulation. Now ARI is a leader in marine simulation globally. It's number 2 or number 3. But when we get in, the one thing that it lacks in their portfolio is the weapon systems that are required to make it into a naval simulation, and that's exactly what Zen has. So this synergy which will be created by this combination will, I think, lead to additional market. This was not factored in when we projected the 50% CAGR, so this will definitely add to what we projected. And Indian Ocean, typically, even though we are typically focused on the 2 friendly neighbors on the top, we forget that if we just turn it around, there is a small diamond, India, and the whole of Indian Ocean is available to us, and that's where the future wars will be fought. That's where the future power is, and that's where we are going to focus with ARI coming in. And with these technologies, we can definitely establish a leadership position, and as a country, aid other a country being bullied by our friendly neighbor to ramp up their training requirements and come on top. So.
Okay. And with all of this said and done, your Q3 margins have been below 25 guidance level of 35%, right? So do you still maintain that number, and why has that variation happened this time around?
One thing is because the turnover is less, the fixed expenses remain constant, so the margin is affected. But when you look at the 9-month total margin, they still remain at 35 and 25, approximately that much. So again, and yearly, we still stick with the guidance that EBITDA will be at 35 and PAT will be at 25.
So any potential of more business coming from abroad, from private players, from the private sector space as well?
No, in the sense that we may be collaborating with some companies to bid for certain tenders. So that would be the thing. But our customer is usually the end user, which is the government themselves of various countries. So yes, there may be opportunity to collaborate and bid. But as we speak, we are entering into the US market, and and we are setting up the manufacturing facility in US. And when with Mr. Trump pushing for the exports from America, I think we'll be one of the beneficiaries there too.
Balance sheet does seem to be a stable one at this point in time, which is why that do you foresee that you'll need to raise funds over the next 1 year and under those circumstances, or do you think internal accruals are enough for you to run your operations and even expand beyond what you have currently?
So we did a QIP, a few months back. I think that has given us a really healthy position, and we need to we said we're going to do some acquisitions with that. The acquisition process has started, but I really don't see any need to raise any more funds in the near future.
Okay. As you mentioned about acquisitions, Mr. Atluri, clearly, I think two of them that you've already announced with the earnings. With regards to both these acquisitions, what's the kind of incremental revenue that you're expected to garner?
So we have done 3 acquisitions. One is Bhairava Robotics, the second is Vector. Bhairava Robotics is in the field of robots, and they are into serious R&D at this point in time. Again, one of the reasons we try to invest in companies is when we feel that they can become a globally relevant player. So wherever they're just starting, I think the revenues from them will start only in FY27. The second company is Vector. They are absolutely, if you go and ask anybody in the drone space ecosystem about Vector or the promoters Karna and Prithvi, you will definitely know that this is a very, very leading supplier of both BLDC motors and potentially IC engines for tailor-made for drones. So this is a very big acquisition, and we think a lot of exports are going to happen in that particular field, and they have applied for relevant patents also. The third, of course, is the ARI that I was talking about, with which we will make a big bang entry into the naval simulation worldwide.
Okay. And very lastly, overall, if you see in terms of Trump's policies, how are you viewing it for a company like yours? Do you think it will open up new doors, or do you think there could be some bit of blips that could come in?
I think this is a great opportunity for India to buy relevant technologies, not outdated F-35s, which Elon Musk, his team member, has said it is the least value for money in the military history, and they have, he has trashed that product. But if India actually, under the current leadership, they will, I think, they really buy technologies and products that can win a war. That will be fantastic, and we think we will definitely benefit from that, in the sense that one thing under Musk's guidance is they will stop doing the cost plus model, and they'll say, listen, develop the product and we will pay the money, which is what he has done with rockets. You overtook both Lockheed and Boeing. They used to do cost plus model, and he offered that pay me only if my rocket flies. We specialize in, Zen specializes in that. We do our self R&D, and we are willing to offer to American forces what will work for them, and they can pay us only if they like it. So we specialize in. So I think that's a big opportunity for Zen in US too, and we look forward to the next couple of years in a very, very excited manner.
So Atluri, we leave it at that. Thank you so much for joining us and, telling us all about the business going forward. We wish you the best. Thank you, sir.
Thank you.
Well, another stock in focus today is Suprajit Engineering, and which in fact saw a profit decline in the third quarter, while margins did see a slight contraction. Before we get the conversation going on with the management, a closer look at the earnings, we have Puneet joining us to tell us more. Puneet, over to you.
Well, thanks for that. And it's a very important quarter for something like Suprajit, because while the headline number shows a 17% profit decline, it's a very strong set of numbers for the company. Now, in the previous quarter, they had acquired an entity called SCS, and because of that, the profits, shrunk almost by 96%. So, it was that cost was expected to come in Q3, and hence we saw the stock getting hammered post the Q2 results. Essentially, in this particular quarter, the company has managed to have 11% growth in EBITDA, despite the employee cost going up by 20% and the finance cost going up by roughly 30 to 40%, both because of the acquisition done in the last quarter. So while the headline numbers might tell you a profit fall of 17%, I think it's a strong turnaround from the previous quarter, where the company just reported 1 crore of profit. In this particular quarter, it's 33 crores. So on a quarter-on-quarter basis, it's getting back to that business aspect. Apart from that, there are a couple of things to watch out for as well, because the global outlook for the automobile sector as well as the auto components sector has declined in this particular quarter, and there has been numerous managements that have called this out. So that's something to talk with the management about that, as well as the company's strategy with SCS. They were mentioning that they will close a couple of plants, one of them in Europe, and rejig the employee cost. I think essentially we will be speaking to them about that aspect as well. And finally, on the tariff impact, is there a potential, because a lot of currently Indian auto component makers have some businesses in the USA. So that's something to watch out for. But overall, it was a very good and strong set of numbers for something like a Suprajit, and I think we can take this over conversation with the management as well.
Right. Thank you, Puneet, for getting us the details. The stock is seeing cuts of around 0.3% as we speak right now. Let's just pull up a 5-day and a 1-month chart of Suprajit Engineering to see the kind of performance that has come in. There you go. I mean, a 0.7% up move in the last 5 trading sessions, and in the last 1 month as well, 4 to 5% is the kind of up move that we've seen on the counter. And from an earnings perspective, let's actually first welcome in Ajit Kumar Rai, founder and chairman at Suprajit Group of Companies. Firstly, good morning and welcome to the show, Mr. Rai. My first question coming to you is, clearly from a quarter perspective, there has been pressure with regards to margins. There has been pressure with regards to profitability as well, down to the tune of almost around 16 to 17%, and a slight miss with regards to what the street was estimating. From here on, though the quarter has been better than the previous quarter as well, so multiple factors that we're looking at. So how would you rate this quarter? Would you call it a turnaround quarter for the company, or do you think some more improvement is still needed?
Good morning, and thank you for having me on your channel. We believe that we had a very good quarter, actually. Our challenge has been our international business, that is the Suprajit Controls division. I've been saying that the international business, if you are in the 6 to 10% EBITDA margin, I think that is good. But 10 is a very good. In fact, in the last quarter, for the first time, we did the double-digit EBITDA in the Controls division, giving a EBITDA margin of nearly 12%, which I think is exceptionally good. So I think the worst is behind us. I think what the number that you mentioned is largely because of our recent acquisition, and the costs of running it is involved. It has got nothing to do with our core business. This quarter has been a strong quarter for all our core businesses. What you said as a slightly negative is because of when you are doing a consolidated number, you're adding on the recently acquired SCS, which was taken from an insolvency case. And because of that, there has been certain losses. That would be overcome in the next couple of quarters. So we feel that the quarter that is just ended, Q3, was one of our best quarters.
And it's been qualified by our analysts who also suggest that it is in fact a very strong quarter for you. Of course, notwithstanding the recent acquisitions that you made. So, but am I correct in understanding that, that acquisition will normalize into your statement in a couple of quarters? Can you give us some more, outlines on this one?
Yeah, the SCS transaction has got 2 tranches. The first tranche was the European side of it, and second tranche is Canada and China part of it. The first part is it been done, which has got the plant now in Morocco, and of course they had earlier plants in Poland. That has been a completely loss-making side of that business, whereas the China and Canada part of it, which will be concluded by March, as we have disclosed, is the more profit-making one. When you look at together in the next 2-3 quarters, we expect the numbers to be a lot better than what you're seeing today at the SCS number. It's an insolvency case, so obviously they have been bleeding, and that has been now slowly and steadily getting cut down. And all the costs will be absorbed this quarter or so. Once all that has been done, I think we should be having a much better operational results going forward from the next couple of quarters. So overall, I think SCS transaction brings us significant value in terms of being present in Europe, very close to Europe, in Morocco, and also getting a plant in China, which will supply to globally.
So my colleague was also mentioning certain other restructuring that would perhaps include, maybe winding up or reducing some of your operations in nations abroad. Can you tell us a little bit more about that as well and potential timelines?
Yes, on the SCS side of it, I think the original production was happening in Poland. All of that is now been moved to Morocco, and the Poland plant will be completely shut down. The German was also originally a plant. Now it is more a warehouse and an engineering center. The warehouse part of it will also be moved out of Germany to Hungary to bring the costs down. So this is the 2 major things that we are doing. All the production getting shifted to Morocco, which is a low cost. The warehouse getting shifted to Hungary again, which is low cost, and Poland is being shut down. I think that is the third part. And of course, in the process, the German team, the total numbers will also come down, which will also add to the improvement of costs. So this is some part of the restructuring that is happening within SCS.
So, Mr. Rai, would it be right to say that the worst is now behind, number one, and two, with all the restructuring initiatives that are underway for the company so far, there could be some bit of margin pressure in the near term, but albeit a major improvement and operational efficiency that would kick in. And secondly, the second tranche of the SCS acquisition, which is already a profitable business, by when would that be completed?
I'll answer the second question first. I think the SCS transaction will be completed by end of March, give and take couple of weeks here and there, but it's in that final stage. So it will be done by that time. In terms of the margins, I think our stated the margin range has been 13 to 15% EBITDA margin and a double-digit growth. We have been doing a double-digit growth consistently now, and the EBITDA margins, because of the SCS, it has dropped below that 12 to 15% till the last quarter. But in this quarter, as you have seen, the numbers have gone back within that 13 to 15% margin. So we are back into what we have committed to our investment community. So in terms of quarter to quarter, there is always some fluctuation due to certain expenses and one-offs that happen in an organization that has got something like 25 plants all over the world. So that apart. If you look at operationally, I think the worst is behind us. I think Q3 was a turnaround quarter for us. And going forward, I think the margin guidance that we have given will be met, and the top line growth also will be met.
Right now, Mr. Rai, a final question then. Your exposure to the US, as well as several rhetorics coming from the president, the implications of any tariffs, if it may impact your company in any way?
Yes, I think if the tariff is really implemented, I think at this moment he has put it on hold for both Canada and Mexico for the time being. These are all negotiating tools. I understand from where the US government is coming from. As far as we are concerned, if there is a tariff to these countries, there would be some impact. There is no doubt about it. But please understand, we are not the only company who will be affected globally. Today, automotive supply chain is so complicated and so complex and so interlinked. There will be always a connection to China or Mexico or Europe or India. So it's very difficult to de-link. Whenever these disruptions happen, we'll end up going to the customers and telling us this is what it is and trying to convince them this is an issue that is beyond our control. So we hope it doesn't happen, but if it happens, ultimately we'll have to go to the customers. Will it have an effect? Yes, but eventually we are hoping that this will all be passed on, which will eventually increase the price of the product, which is a different story altogether.
Right, that's going to be an interesting take. I think we will have to wait out for April for all of this to take effect as well, and what the final conclusion is. But thank you, Mr. Rai, so much for joining us on the show and sharing the views. So clearly a turnaround quarter with regards to where Suprajit Engineering goes and all the restructuring that is paving the way for success. Let's see what the execution pans out as well. But let's quickly slip it on short break. On the other side, lots more lined up on NDTV Profit. And please stay tuned for the conclave which is taking shape, Viksit Bharat at 2047. That's the blueprint that NDTV will be bringing back to you with Commerce Minister Piyush Goyal, SBI Chairman C.S. Sethi, who will be joining us. We have Dr. Anish Shah, who's the Group CEO at Mahindra Group. Nadir Godrej, Chairman and MD at Godrej Industries, also will be joining in. Ramdev Agarwal and Ridham Desai coming in from the markets bid.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
कि अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है। AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए। पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hand.
Welcome back to India Market Open. The stage is all set for the inaugural edition of NDTV Profit Conclave themed Blueprint for Viksit Bharat at 2047, which will actually bring together India's most prominent corporate and political leaders to explore the country's revolutionary roadmap to becoming a developed nation by its centenary. My colleagues Tamanna and Neeraj are at ITC Parel to set us up for the big event. Tamanna, Neeraj, over to you.
Well, thanks, Hiral, and both Tamanna and me can't wait to have you guys here in a bit as well. But this is a big one, Tamanna, our first event, our first conclave. And I must say, the bevy of people who are participating as speakers and the turnout that we have already seen coming out here to get a sense of the macro and the micro is very exciting.
You know, this couldn't have come at a better time, and for everyone who's watching this right now, and I hope will tune in and watch all of the events through the day, it's carefully curated and crafted at a time when the street wants to know what is happening. From a markets perspective, from an economy perspective, you're going to hear voices from across corporate India, manufacturing perspective, banking. We have a superb lineup and also people who are out there to give the right message when there is a bit of concern, bit of panic on what is happening with the markets.
Yeah, markets and economy both, right? And therefore, Tamanna, I'm actually very excited because we would have an overbearing, rightfully so, of market people at events. This time around, we've got a heady mix of market guests, corporate guests, macro guests, and the startup flavor coming in as well. So there's a clutch of very nicely crafted, as you said, conversations that we have, and really looking forward to some of those, both as me doing the sessions as well as listening to some of them.
Yeah. No, so let's just take a minute to tell our viewers, and we're moving towards the event, so we'll give you a sneak peek of what that event is going to look like as well. We're here at the beautiful ITC Parel in Bombay. Let's give you a sneak peek of the venue as well as what the theme is. So I thought the theme was very interesting, Neeraj, and we went, of course, editorially through the process of thinking about what is the message we're talking about. And we have focused on Viksit Bharat. Now, it's Prime Minister Modi's vision that by 2047 we should be a developed nation. First of all, how do we define a developed nation? Is it just merely per capita GDP, as is the very basic definition? And what do we do to get there? So that's the overarching theme that we're talking about. How do you set a blueprint for Viksit Bharat? And I can't think of a more important time, Neeraj, than to talk about this than now. You have the start of the third term of this government, a very clear direction as well. And of course, we will be hearing from Union Minister Piyush Goyal, who has moved ahead with a very important set of bilateral trade decisions. That's the other big thing. We're talking at a time of US tariffs.
Yeah, and the scare around that one. But then also from the fact that for us, right, we are a year old, right? We are young. We are thinking of the next 25 years. Yeah. Viksit Bharat is thinking of the next 25 years. And therefore, in some sense, it's a right mix of the people that we are getting and the conversations that we are doing. So Piyush Goyal will set the stage from a political agenda. I can't wait to hear, for example, from a corporate India perspective, two heavyweights. We have Dr. Anish Shah, we have CS Sethi. So we have a banking name and a consumption name.
Mr. Nadir Godrej.
Mr. Nadir Godrej. So it's a heady mix of consumption, banking, capex, all put together, telling us how do they feel about the current economic momentum or the lack of it, and what is it that the government is doing? How is the government listening to them or responding to them to take care of some of the nitty-gritties? It's a very interesting set of conversations.
So let me just start by telling viewers about your first conversation this morning, which is about the coming of age of the Indian investor. And I thought this was very interesting because, what a power-packed panel you have. Ridhim Desai, Ashish Chauhan, Dinesh Thakkar, talking about how the Indian investor is no longer limited to certain pockets of the country, just the men of the family. All of that has changed across ages, across strata. I mean, just the fact that you can trade on your phone has been such a game changer. It is the coming of the shock absorber. This is something which has reached Parliament. That is just the retail investor that's holding up the markets, even as, FIIs have other ideas as of now.
Yeah, most certainly. The plank of the Indian market, to be very honest. And of course, remember in that conversation, we'll also ask Ridhim Desai because he's there, but because he's written a very bullish note this morning. So therefore, it'll be important to ask him as well that while the Indian investor has come of age, what is in its store for the Indian investor in the next few days, weeks and months. So I think that promises to be an interesting conversation. But Tamanna, looking forward to some very interesting conversations. Since we are talking about markets with you and Ramdev Agarwal as well.
Yes. Don't miss the conversation with Mr. Ramdev Agarwal later on in the session where, we want to hear how he's looking at what's happening in the markets right now. But here's the big set, since we've got it as a first reveal for our audience, the blueprint for Viksit Bharat 2047 at the NDTV Profit Conclave. We're very excited about it. You'll hear from Ramdev Agarwal. There's an excellent panel we have on manufacturing. You will hear from Wellspun, Ms. Dipali Goenka. You'll hear from Dr. Habil Khorakiwala. You'll hear from Keynes Tech. So all aspects of how manufacturing is going to drive 2047 dream. Because there's no doubt, unless you add bulk to manufacturing, you add those jobs, you start making in India for the world, then we're going to be stuck in that plateau, right?
Most certainly.
That's where the breakout happens.
Yeah, so that is interesting. We hear from Pernod Ricard about their ambitions in India, and that the liquor market is coming of age. So that might be interesting. Looking forward to the startup conversations as well, because that really is the big thing about India, right? The number of startups and the kind of opportunities that each of them has.
So that is a good panel to tune in for, and Hiral, of course, you will be spearheading that, where we're talking to companies that have disrupted the way consumers behave, the change in consumption patterns. And you've seen that all around you, whether it's a Rapido, whether it's a company which has changed the way we fix doctor's appointments. You're going to have all of those aspects coming in. So I think that's going to be very interesting as well. And that's the reality, right? That consumers have just changed their habits. Everyone wants something delivered in 10 minutes. Yeah. Whether it makes sense for the companies or not is a whole different story. Yeah. So a whole host of conversations that you should
including
not miss.
Kotak Bank as well a bit later on in the day.
Yes,
so it's a slew of very interesting conversations.
Mr. Ashok Vaswani, you will be hearing from him. So yes, there is so much. Do go to our website, NDTVProfit.com. There is a microsite where you'll find all of these details. There is a live YouTube stream, of course, if you're on the go for most of the day and want to catch it.
In fact, all social media platforms. So you'll hear it across X, across YouTube, LinkedIn, all of that. So yes, it's a busy day.
And across the NDTV network. We're very excited. We're very excited. We're set to start in just a bit, and we hope to see you there.
Back to you guys.
Absolutely. Lot of excitement that's coming in, and not to miss out the technology and AI-driven panel as well, Neeraj and Tamanna, where we have Puneet Chandok of Microsoft, Manu Chopra of Karya AI, and lots more who will be joining in to see how we can actually achieve Viksit Bharat at 2047 with AI and technology as an enabler. So that's with regards to the conclave. But moving on, you have a Bharti Airtel that continues to remain in focus. Interesting one, because the expectation was of a downtick, but now the stock has cooled off after opening in the green with cuts of around 0.6% coming in there. A block deal involving 5.1 crore shares that has taken place. This is worth around 8,500 odd crores. Sumit joins us with more details. So Amit, what are you picking up?
Well, as the block deal for Bharti Airtel has happened, and as per the exchange notification also, it confirms that Indian Continent Investments has sold close to 5.1 crore shares worth around 8,485 crore rupees. That is nearly 0.9% of the equity. But what is interesting that has come out from this notification is the fact that Bharti Telecom, which is the another promoter entity, has bought nearly 1.2 crore shares of this 5.1 crore, which was offloaded by Indian Continent Investment. Now, do remember that ICIL, that is Indian Continent Investment Limited, is 100% owned by Sunil Bharti Mittal, while Bharti Telecom is jointly owned by the Mittal and the Singtel. Singtel owns around 49.4% stake in Bharti Telecom, while the Mittal Group owns close to 50.6% stake in Bharti Telecom. So clearly a shift of hand coming in from the Mittal owned entity to the jointly owned entity, which also means that Singtel's indirect ownership or direct ownership in Bharti Telecom has now also increased. Now do remember that post this block deal, Bharti Telecom will own close to 40.7% stake in Bharti Airtel. And why this change of hand must have been done by the promoters? It could be because Sunil Mittal is looking to acquire nearly 24.5% stake in BT Group, which could cost him close to $4 billion. So some funding could be used towards that as well by Sunil Mittal, or this could also mean that Airtel could call for the balance payment of Bharti Airtel partly paid shares, and to make that payment, Sunil Mittal might have sold some part of its stake, because this partly paid shares were issued at around 535 rupees per share back in 2021, and current value of the Bharti Airtel shares is close to 1,670 odd crore rupees. So it's a clear win-win coming in for Sunil Mittal if he would have done that as well. Now some details about the rights issue. So far we do not know when Bharti Airtel can call this amount, because the last day to call this amount was October 2024, and they had delayed this given the fact that Bharti Airtel was not in need of any cash, and there is no clear timeline as such given by the company. These shares were issued back in 2021 at 535 rupees, of which around 107 rupees has been called by the company, while the the remaining amount of close to 422 rupees is yet to be called by the company, and this could be called going forward. Also, one more thing that could hint towards this is the fact that the derived value of Airtel partly paid shares stands at close to 1,632 rupees versus the current market price of Bharti Airtel, which is close to 1,670. So there is not much of a premium or discount coming in here, which could also hint towards the fact that Bharti Airtel could call for the partly paid amount anytime soon.
Okay, Sumit, thank you so much for joining us and taking us through that. And some pertinent points being discussed by Sumit. I do remember that while the stock did start the trade with green, it's eventually been sold into. But as Sumit suggests, that even if it is Sunil Bharti Mittal who has shed some of the weight here, well, it does seem like it's a win-win. But we're going to move on and shift focus to ABB India then, where the profit has in fact jumped around 56% and margins have expanded as well. We have Anushi joining us to tell us how things have panned out for this particular quarter. Anushi.
Hey Agam, so in fact if you look at ABB India, they have reported a strong set of numbers for the quarter. Revenue was up around 22%. EBITDA continues on an upward trajectory, about 58% of a growth, and this is supported by the higher price realizations along with some higher volumes also playing for the company. So 657 crore is what the EBITDA number is, which has led to a margin uptick to 19.5% as compared to 15% last year. Do note that the margin has been on the upward trajectory in the 19% range in the whole calendar year 2024. Net profit consequently seeing a 56% of a jump. But it's the order picture though which was on the muted side rather it was down about 14% for the quarter. Orders stood at 2,695 crore, and this order impact that we are looking at is on the account of large orders that the company had won in their motion and process automation segment last year. If you look at the base orders, they had reported a 4% of a growth. So base orders are with the execution timeline of anything between 3 to 12 months. If coming to the order backlog of the company, that's reported a 12% growth at 9,380 crore. So this takes the book-to-bill ratio in the 0.76 times, which is majorly in line with what the last year backlog book-to-bill ratio was also in 0.8x range. Coming to some of the key segmental performance of the company also, electrification and motion along with robotics and discrete automation had distribution solution exports had led to the revenue growth. So this is why we are looking at a 22% of an uptick. So overall a strong set of a quarter for ABB India. This is why it is in focus and is up in trade today.
Right. Thank you, Anushi, for getting us the details. The stock is up almost 5% in the next couple of minutes. You will get some details coming in from the con call as well. So that will be interesting to watch out for. But clearly, let's just quickly pull up Nifty 50, Bank Nifty, as well as the broader markets to understand what's happening on that front. There you go. We've given up, 0.3% lower coming in on Nifty 50, Bank Nifty as well, seeing cuts inching towards the day's lowest levels. And if you see in terms of broader markets as well, it's clearly underperforming the benchmark indices in trade as we speak. In fact, the small cap index is down nearly 1.5%. But staying with the markets, let's also welcome in Abhay Agarwal, Managing Director at Piper Serica Advisors. Abhay, good morning and welcome to the show. A good time to speak to you because clearly if you see in terms of what's happening, a major rout with regards to where the broader markets go. You have the foreign investors which have continued to pull money out of emerging markets, and it seems India is no exception. What would you have to say at this point in time? And do you think this is just a blip or a phase which will pass soon?
Yeah, good morning. I think what is happening with the FPI flows is not abnormal in that if you look at the longer term history, we have seen episodic pullouts by FPIs, a lot of money which used to be called hot money suddenly goes out because it is chasing returns in global markets. It is not India specific money. So that is the money that has been flowing out. And there are two reasons for that I can think about. One is, of course, the higher bond yields in the US are attractive enough for US dollar investors to lock in those returns and bet that those yields will come off. And when they come off, they will make good capital gains on the US dollar bonds. So I think a lot of money is going back to the US in bonds and in stocks also. US market cap is now at $65 trillion. The second bigger issue also is, a push factor from our side, because India is an insular market. It's not that big a part of the global economy. So the attractiveness for investors, global investors, of looking at India was to look at India as a very strong consumption market, that there is a very large population that is consuming more and more, and that will drive corporate earnings for companies that cater to that consumption. Now, with a slowdown in earnings, slowdown in consumption, that thesis is being put to test, at least in the short term. So there are worries that earnings will continue to slow down, especially of companies that cater to domestic demand. So I think till domestic demand comes back, and also the US bond yields come off, till these two things happen, I don't see a reversal of FPI money into the Indian market. What it does is, of course, while you're in it, in the correction phase is painful, but with a longer term perspective, it also gives an interesting investment opportunity to long-term investors who are looking to invest in Indian stocks.
Right, Abhay, an interesting point with regards to what could get the FIs back into the country. But on the domestic front, it seems that the investor confidence has remained slightly strong, because if you see the SIP and the mutual fund inflows as well, they have continued to hold steady. However, a significant portion of your household savings is still sitting in cash. I think deposits are exceeding nearly over 35 lakh crores. What would all of this mean then? Because clearly there is confidence in terms of where the DIIs are concerned. However, the markets are in a correction phase. Plus, you have the earnings expectation, which has now moved to single digits. Where would you find value now?
I think the point on domestic investors staying strong is pretty well made. And if you look at the historical context of that also, about 5% of household savings annually found its way into equity markets, 70% went into real estate, and that is changing a lot. And I think what we are still seeing in terms of domestic flows is still, we are, is pretty thin compared to what it could be. So I'm not at all worried about a reversal of domestic flows, because I think investors have also learned that whatever the markets are, it's better to keep a systematic investment plan in place. So I'm pretty confident that domestic flows will continue. And what will provide opportunities, I think across the board, what we are seeing, we have been underweight in banking sector, for instance, for last 1.5 years. We didn't have any bank in our model portfolio. We just added the first bank to the model portfolio. So we are seeing some signs emerge that banks, for instance, have been beaten down beyond their fair value. So they will emerge there. In insurance sector, in domestic consumption names, I think as there are signs of recovery that come in, we did channel check conversations this week where we found that cement companies are seeing good uptake. We also found that inventory levels with auto dealers are at pretty low levels now, about 15 to 18 days against 33 days normally. So I think if some demand keeps coming back, and with lean channel inventories, you will see uptick in consumption demand. So that will again drive credit offtake. So I think there are opportunities emerging, but investors will have to brace for further corrections if they are, while they are making their bets now.
Abhay, the other question, and I know that I don't want to set a question on just the Indian rupee. There is all sorts of expectations that the RBI will probably come in and perhaps set a limit at around 88 rupees, 89 rupees. As yet, it is a factor which is working against markets right now. When it comes to Trump and all the policies that we have, all the rhetorics as well that we have at the moment, how do you think that this trade could potentially pan out? Because it is something of a worrying factor at the moment for Indian markets.
I think RBI has realized that it is futile to fight the currency war, because we do not have the resources, and nor should you. You want to get to a point where rupees freely tradable, convertible, if not in near future, at some point of time. So using your forex reserves to fight a tidal wave of a global strengthening US dollar is futile. So I think while RBI will definitely step in if there is a sharp correction in the rupee, which we saw when it hit 88 levels, and then suddenly there was, within an hour, there was a recovery of almost 1%. But I think rupee slide depreciation moving towards 90 should not be seen as an abnormality. If the US dollar continues to strengthen, if the DXY gets to 110, I mean, it is pretty much expected that rupee will get to 90. Whereas if DXY goes back to 105, 103 level, which is not looking likely right now, the rupee may stay at the current level or may strengthen slightly. But I think that is where our corporate earnings and market participants have to find comfort with that. With the rupee depreciating, there is also an opportunity to further push the agenda of domestic manufacturing for the government to look at, what are we importing that we don't need to import through PLI schemes and build as much as we can in India, and also drive exports by welcoming foreign companies like Apple and Samsung, which we have done pretty successfully to export from India. So I think this crisis of rupee, if you want to call it that, is also an opportunity in disguise for us to act on and be more self-sufficient and self-dependent.
Abhay, in the broader market specifically, there are a lot of companies out there which have corrected 30-40% from the tops. A lot of these companies are still showing, rather expected to show growth of around 20 to 30% in their bottom line, about maybe 20% in the top line as well. But the question is that at one point in time, these companies would trade at around 70 times, 80 times, 100 times, and this is 1 year forward. Now that we are looking at a little bit of rationalization, the froth is out of the markets clearly. What is a good valuation that you may want to be okay with paying for a 30% bottom line growth, 20% top line growth?
This is a very delicate question, because we debate this internally that, look, what are the right valuation levels even for growth companies? What is, when we say growth at reasonable price, what does that exactly mean? And I think that is what your question alludes to, that there are markets which are bullish markets and people are willing to pay what they think is reasonable 70, 80 times forward multiples. We saw that a lot of new listings, especially catering to defense sector, catering to upcoming sectors, electronics, were trading at that level. And now some of that froth has come out. You're absolutely right. I think valuations have corrected, but some of these companies are still at 40 times forward, from 70 times forward. I think from our perspective, when we build our model portfolio, what we want to see is, first of all, we want to establish clear growth, because if they are catering to business to government contracts, there is delay. We have seen companies announce recently and the stocks have really suffered when there is a delay in government contracts. So we would like to stay away from those companies and focus on companies that are really benefited by a very strong tailwind, good management, good balance sheet, don't need to do QIPs, don't need to dilute, don't need to borrow to fund expansion. And then those companies become very rare. And I think that is the context. Then if you can get them, company growing at 20-25% for next 3 to 5 years annually, and you can get it for 30-35 times PE multiple, I would make that bet, because I think India is a growth market. That is where most of the money has been made by backing growth. So we would continue to do that. And I think this correction is again giving an opportunity for investors to do that.
Okay. And a final question then, Abhay. I know that you did briefly mention pockets of opportunity, and of course financials and banks specifically was one of them. Are there other areas that are looking interesting to you? If not now, then maybe a correction of another 5 to 10% from here on?
I think pharma as a space is very attractive. I think with a 5-year perspective, even where the valuations are, because we see that sector benefiting squarely from a rupee depreciation. It benefits a lot from its pipeline of products that it has over the next 1 year. There are companies that have 150 new product launches over the next 1 year. US is a very receptive market to Indian generic exporters right now. So I think that is a market that, and I think that's one of the reasons that it was the best performing sector in the last calendar year. And we are expecting it to outperform this year also. So pharma definitely. And the second one I would say is insurance as a sector, again, not given enough credit, but companies that have taken leadership position in health insurance, in general insurance, in life insurance, I think will all benefit. So I think these two spaces are where we are fairly bullish as an outperforming sectors for this year.
All Right. Well, we leave it at that. Abhay, thank you so much for joining us and taking us through your views on the markets. Of course, markets at this point in time continue to be challenging for investors out there. And, well, a lot of factors that we need to keep an eye on, watch out for. And I'm sure that there will be plenty of triggers out towards the upside and the downside over the times to come. But on that note, it's a wrap on this edition of India Market Close. Don't go anywhere. We have Ask Profit coming up next. Stay tuned in and we'll be back in just a bit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching NDTV Profit. My name is Puneet Zaveri and welcome to Ask Profit, a show where we get all your stock related queries answered from our fundamental as well as technical guests. Joining us today here on Ask Profit is our guest Astha Jain as well as Swati Honkar, AVP Technical Research, and Nirmal Bang. Before I come back to you, let me just do a very quick market check because we've seen a lot of stock movements today. While a few we're just getting done with the earnings season essentially, so just some fag and stock related movements. We've seen the Nifty 50 also down roughly about 135 points today, and we did see some slight recovery in the middle, but post that it has been a continuous red day. When you move on and also look at some of the top stocks reacting on the Nifty 50 on the gainers as well as losers side, we do see, ICICI Bank as well as the banking names of HDFC as well, somewhere in the green. M&M also continuing its downtrend for the second day in a row after, we did see the stock react yesterday on terms of tariff news as well as, its EV bookings. On the positives, not too much to speak about, Infi being one of them. Apollo Hospitals also reacting very mildly, I should say. Let's also quickly look at the sectoral heat map for the Nifty because, we have seen certain sectors doing well, Nifty Media, Nifty IT, but largely we can see that a few sectors very close, so jumping between the green and red, only the Nifty IT having some meaningful gains. While on the losers side, we have seen a lot of pressure in stocks, in metals, definitely down 1.4% today. Let's also look at the mid cap and the small cap indices, because in this earnings season, we have seen a lot of pressure, on stocks reacting to bad numbers. And, the mid cap 150 down 1%. I'm guessing the small cap will also have a similar moves. There you go. It's actually much larger than that at 1.6% down, almost 236 points. And let's finally look at the Nifty 500 as well. That's something, again, as mentioned, in this particular season, we have seen a lot of pressure. Laopala again on the downside, reacting to numbers. Campus Activewear again under pressure today. While we have seen, Godfrey Phillips being one of the lone gainers post its Q3 earnings in a very, very strong fashion. So if you can pull up, Godfrey's chart over the last month or two, we've seen some positive moves on PV Fintech as well. But let's pull up Godfrey Phillips first, because, while intraday, of course, the stock is up 5%. Let's pull up the 1 month and the 3 month chart as well. There you go. So it's almost up 70% in just the past month as well. So we did introduce Asta. Let's also get in Swati Hodkar as well, EVP Technical Researcher from Nirmal Bang. Ladies, thank you so much for joining us today. Let's jump into straight, our first query of the day. That's, coming in from Mahesh. He's asking his first query on WhatsApp. He's asking his opinion on Vishal Mega Mart. Now, this is a very recent listing. Stock's done well as well from its IPO price of about 76. So he's bought the shares at 101 rupees per share, and he's holding roughly 251 in terms of the quantity. Now he's asked if he should hold on or sell at the current price. Now, while he's not mentioned if he got these in the IPO, let me go into Asta first. Asta, this particular IPO saw very strong reaction, strong Q3 numbers as well. Any kind of outlook that you have on Vishal Mega Mart?
Hi, good morning to both of you. Yes, talking about this counter, we have recommended it in the IPO times also, and I have strongly recommended it. In fact, I have given the price target of around 120, and the stock has touched the all-time high of around 125. So now talking about this counter, because they have a very strong presence in the North India, and what we have seen that the growth is also very high, especially if I talk about their same store sales growth, and the numbers were also on the decent side. So all in all, this counter was looking good to us. But now regarding the valuations, I think the kind of fall which we are seeing in the market right now, the valuations are tapering off, and that is why my idea here is, if you have a longer term horizon of more than 6 months, then stay invested. But here horizon matters, because in the shorter term, since markets are in a pain, definitely this counter will also see some sort of effect. So in the short term, we might see some sort of downside momentum in the stock prices, but in the longer term, we are positive on this counter, recommending a hold with a price target of 125 to 130 at the highest levels.
Gautav, you asked, the next query that we have is also on WhatsApp. Sunita is writing to us from Hyderabad. She's asking a view on Apollo Microsystems. Now, roughly for a 3 month view, she's holding roughly 100 shares, bought at 140 rupees per share. Now, stocks kind of corrected from those levels, but while she's mentioned she can wait for roughly 2 to 3 months. Let me go into Swati. Swati, good morning. Thank you so much for joining us today. Any kind of view that you have with Apollo Microsystems? The defense pack as a whole has seen a lot of correction over the last couple of months. What does the chart suggest for this particular stock?
Yes, you have rightly pointed out that this sector is not performing from the last couple of weeks or say the month as such. We have seen a very strong selling pressure from 140 towards to 108 levels. My view is little bit cautious. Why so? Because the counter is trading in a low top, slow bottom formations on the daily chart as well as on the weekly chart. And the momentum indicators such as the RSI, which is a very popular indicator, it's showing a negative crossovers from midpoint of time. I believe this kind of a selling pressure is likely to be seen and can be extended towards 200 to 195 rupees on a downside. So I will not suggest to exit the long positions. Downside will be limited from here onwards. If possible, try to average it out of if the stock comes at around between the range of 95 to 100, so that your buying price will come down. Upside momentums can be seen only if the stock manages the breakout of a 120 levels on the closing basis. Any move above that level, we will see some sort of a positive movement momentums which might take a counter back towards to 140 to 150 levels. So at the short term period, the view is a little bit cautious. For the longer term period, definitely you can hold on for a target of 140 to 145.
Got that view, Swati. Next query actually we're getting is from a caller. Dheeraj is dialing in from Hyderabad. Dheeraj, good morning. What's your query?
Good morning, sir. This is Dheeraj Kiran from Hyderabad. I'm a regular follower of your show. Thanks for the support.
Thanks so much for joining in, Dheeraj. We appreciate your support as well. Please go ahead with your query.
My query is regarding NetWeb Technologies. I'm holding 110 shares of NetWeb Technologies at 1335.
Okay. And do you have are you looking for a long-term view?
No, sir. Actually, the stock performed really well during recent times.
Yeah.
It touched the highs of rupees 3,000 and it is like near all-time lows.
Correct.
So this correction is an opportunity. Should I accumulate more?
Okay.
Or should I hold more?
Got that. So let me go across.
One more small concern.
Sure. Please go
So
ahead.
when will the market be better? Like there is a bloodbath since almost 1.5 to 2 months.
Correct.
Like intradays, we are facing losses, and normally also we are facing losses. So all this, when will everything will get set right? Actually, how long will it take?
Dheeraj, I'm pretty sure that is a pain point for all investors, including myself. But let me go across to Asta first on your query, and then I'll try to get a market view as well. Asta, anything on NetWeb Technologies? Do you think that this is a good chance to accumulate at the lower levels? And anything that you can suggest for a viewer in terms of market view as well?
So regarding NetWeb Technology, the IPO came few months back, I suppose. And at that time, we were quite optimistic. Now talking about this counter, it is into the high-end computing, solution provider. And the results which they have posted were also decent because if I reduce the other income, then definitely the bottom line is on the higher side, but the top line has shown the growth of more than 30%. So in this kind of a market, when the top line growth is more than 30%, I think these numbers are really on the, decent side. Or the major problem about the counter is here that the market conditions are not in favor. And that's why we are seeing a fall in the stock prices. So I think partial profit booking can be done because markets are not in a good mood. So I don't want that one should lose entire capital. So partial profit booking is always recommended at these levels. But in the longer term, due to the good set of numbers, we are quite optimistic on this counter. And I think in the longer term, it will again go to the level of initially 1550 to 1600. So longer term is good, but in the short term, due to market mood and conditions, we are recommending to book some profit.
Swati, let me just come across to you real quickly. Do you expect any kind of positive movement on the charts if you want to move out of this counter? Anything on the charts that suggests some recovery near the 1500-1600 levels suggested by Asta?
Yeah, as of now, though, we have already seen a very sharp correction and the counter is just entering into the oversold zone. So the downside is limited from the current level. I believe 1300, 1280 will act as a very strong support levels on the downside. And from there onwards, we will witness some sort of a positive momentum. Upside, yes, 1550 will be the first target I'm looking forward, and beyond that level, 1650s can be tested. So if you're having long positions, since it's nearby the buying price itself, the stock is trading at, so you can hold on. My view will be to hold on the long positions as long as the particular counters hold the 1300 levels on the downside.
Got that view, and I hope Dheeraj answers your question both on the fundamental and technical side. The next caller is actually calling from Hyderabad as well. Shamok is dialing us. Shamok, good morning. What's your query?
Yeah, I want the entry point of the Zomato. So it's falling quite a bit. So when for technical issue and when we want it. Yeah.
So are you looking for a tech view or a short-term view on Zomato? Is that right?
Yeah, minimum holding for 5 years.
Okay, so 5 years. Okay. Asta, let me come across to you for this one. Zomato, has seen some correction. Any kind of outlook that you have on Zomato and anything on Swiggy as well? Because that stock is also now trading below the IPO price. Anything on these two counters?
So we all know that like there's a strong food delivery market in India, and that's why the company has been able to post improved profitability in their numbers also. But here the whole concern is regarding the valuation first of all. So I think, but now going ahead also their expansion plans are quite strong. So in the longer term, it is a good candidate to bet upon. But here the viewer want that whether he can enter right now or not. So my idea here is wait for some more fall to come and then make entry into this counter. Maybe 200 to 190 are the good levels to make entry into this counter. This counter is good for longer term. Valuations are a little bit on the higher side. In fact, the market's mood are not in a good form right now. So that is why the valuation are becoming more concerned for this counter. So idea here is to make an entry into this counter, but at the lower level of around 190 to 200. Talking about Swiggy, Swiggy is again a long-term bet, although it has fallen below its IPO price. But idea here is to keep invested in that counter if anyone has, because after IPO it has shown the jump of more than 100%. I suppose it was almost double. So I don't think whether someone has waited for such levels or not, because my idea is definitely profit booking will be was like the case for most of the IPO investors. But in the longer term, Swiggy can again go to the northward trajectory. But Zomato is looking better to us. And idea here is to make investment, but at the lower level of 190 to 200.
Got that view, Swati. So that's the levels to watch out for on Zomato. Swati, do you concur with this view of waiting for a bit in terms of charts, because Swiggy has fallen almost from 550, 600 levels? Does that suggest that some more pressure there?
Yes, definitely. Both the counters for a longer term horizon is definitely positive, but at the current momentum is under the selling pressure, and we are not finding out the exact supports level. Swiggy is currently, even though the selling pressure is likely to be continued, which might take a counter to 302 or say the 280 levels on the downside. So that levels will be a very attractive if we compare the risk reward ratio for the longer term horizon. And talking about the Zomato currently for a short term period, we can say that the momentum indicator RSI is showing a positive divergence from the oversold zone. So sort of a pullback rally can be witnessed into this particular counter, which might take a stocks to 240 and levels. So those who don't want to miss out any kind of a bounce back rally on the higher side, they can at least buy 20 to 30% at the current market price, because we never know from what level the particular market or the stocks will be show a spectacular rally on the higher side. So whenever the sentiments gets too negative at that point of time, only we hits the exact lows. So if you don't want to miss the opportunity, at least 20-30% can be accumulated in the Zomato at the current market price.
Got that view, Swati. The next caller is actually coming in from Bangalore. If I'm pronouncing the name correct, Gowda is dialing us. Good evening, Gowda. I hope I'm getting your name right. What's your query?
Yeah, I bought VATech Wabag.
Okay.
Shares, 303 shares at the price of 1,658 rupee. So currently this stock is trailing. So can I hold it for long term? What is the view on this stock? Actually, I bought it for a 6 months period, short term.
Okay. Let me get in a view, because Astha, we have seen this counter react on order inflow basis actually. This water treatment player. Anything that you have on VATech Wabag and any kind of outlook on the same?
Yes, I think you're absolutely right, because the order pipeline is very strong, of around over 2,781 crores, I suppose. So, I mean, if I round off the figures, so more than 2,700 crore order book is there. But what we have seen in the result that they have I had expectation on the top line, that is revenue front, but on the EBITDA, operating profit as well as net profit, the results were below expectation. So it was a mixed set of bag of the results which came in, and that is why the counter is not able to hold its strength. But in the longer term, due to the strong order pipeline, I think this counter will poised to show some more upside from here. So idea here is to stay invested in the counter, although cost price is high of around 1,600. It will take some time, but I'm quite optimistic that definitely this cost price will come in the time horizon of 6 months to 8 months. Remain invested in this counter.
Got a view, Astha. The next query is actually on WhatsApp. He's sending it to us from Singapore. So thanks so much for this, Kamran. He's asking a view on Deepak Nitrite. Now again, stock which reacted heavily on the downside in terms of Q3 earnings. And he's asking for a long-term view. So Astha, let me come back to you. Any kind of outlook that you have on this chemical player, Deepak Nitrite? And the call is asking, the message is for a 3-year view. So anything on the stock query?
So definitely the results were not on the higher side. In fact, we have seen the bottom line, showing the degrowth of more than 59%. And this is what I'm taking into account after other income and extraordinary items. So, pressure was there in the bottom line, and markets are not liking these kind of pressure, especially when the market sentiments are not in a positive mood. So definitely this stock was eligible to take some more beaten up from here. And that is why I think the stock prices have fallen more from here. But from the 3-year time horizon, the idea here is to stay invested, because 3 years is quite a long time. So hold this counter, but keep this thing into mind that results, since are not in the positive side, definitely this counter may take more beating up.
Got the view, Asta. We are actually getting a next caller from Bengaluru. Sandeep is dialing in with a stock query. Sandeep, good morning. What's your query?
Hey, hi, good morning, NDTV team. This is Sandeep here. And I was holding Hindustan Foods from around 300 shares I have.
Okay.
At 530.
Okay.
It's almost 2 years. It hasn't done any, has done any, it's not given any good returns.
Correct.
And after the, split, it got stuck over there.
Yeah.
So, and the results were, good, but I'm not sure about the expectations. So based on that, I think it is not moving.
So Sandeep, is it okay if you can, are you okay with holding the stock in case of any future recovery, or are you looking to sell out of the counter? Is that the view that you're asking?
See, the future recovery is there. I can hold even till the,
Okay, if
Gandhi's
the stock counter
become,
recovers. Got that.
become the Congress president, I can hold till that time.
Got that view. Asta, and I'm not sure if you track Hindustan Foods. Do you see any kind of recovery on this stock? Because our stock, Sandeep has been holding the stock for a while. Anything on this?
So I think the balance sheet is quite in a leveraged one, because the long-term and short-term borrowings, if I add both of the borrowings, then definitely the debt-to-equity ratio is almost on 1:1 basis. So the debt is higher. Although here the viewer is, or the holder is right, that the results were on a better side. They have shown good set of numbers with a rise in the top line as well as bottom line, but I think balance sheet is not very strong at this point of the time. So that can be one of the reasons that why the stock is not showing a proper upside momentum. But again, here the investment horizon is a longer term, so idea here is to remain invested in this counter.
Got that view, Asta. We're also getting a next caller from Telangana. Arun is dialing in with a stock query. Arun, good morning. What's your query?
Good morning. This is Arun from Telangana.
Go ahead with the query.
I have bought BEL shares at the price of 120, 300 quantity.
Okay. And are you
this price I have to enter again. I have to bought again.
Okay, so are you asking if it's a good opportunity to buy again with the recent correction? Is that your query?
Yes.
Okay.
I have to buy at this price.
Okay, Asta, again, let me come across to you, because this defense play has seen some, stock correct from the 300 odd levels. Would you suggest to buy again into this particular quanta, or wait for some more time?
So the order inflow of around 110 billion with a strong profitability which they have posted, which were ahead of most of analyst expectation, definitely makes this counter a very strong counter to make a long-term investment on. But I think right now the industry tailwind is not there, and that is why we have seen a sharp sell-off in the all counters which are related to defense or capital capex related stocks. So this is the case. So I think he will get the chance to buy at the lower level, since right now also the stock is falling. So idea here is, yes, one can make entry into this counter, but at the lower level of around 230 to 225, rather than entering at this point of a time. Or maybe if one want to allocate 100% of the holding, then just allocate 10% or 20% here and remaining at the lower level. So this can also be done as one of the strategies.
Got the view, Asta. And viewers, keep sending us your query on WhatsApp and dial in as well. But it's a time for a very, very short break. More stock queries on the other side.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
बजट भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है
Good morning and welcome back to Ask Profit right here at NDTV Profit. Our next query is on WhatsApp. Gul is writing into us and he's asking for a view on Tata Power, purchased at 405 rupees per share. He's asked for a long-term view over the next 2 years. So Astha, any kind of view that you have on this stock?
So purchase at 405, so definitely our long-term view is positive. So in the long term, I think the company has a much room to grow because they have commissioned 4 gigawatt of solar cell energy capacity in the Q3 of FY25, and now their solar manufacturing capacity is also reported a very, very strong set of results. So definitely these will help the company in showing good momentum in the stock prices also in the longer term. So definitely one can remain invested in this counter, although initial price target which can be set for this counter is 360 to 365. Here the cost price is more than 400, but there is no need to book the loss. Remain invested in this counter. After 365 level, we can again see some more upside from there.
Got the view, Astha. The other one that we're getting is Ganesh is writing into us with a view and question on Karnataka Bank. Now the stock has been, in a range-bound session. He's holding roughly 146 shares, average price of about 207 rupees per share. So definitely, trading below those levels at 171. Let me get in Swati. Swati, any kind of view that you have on Karnataka Bank as a whole? Stock seeing some correction over the past year. What's your outlook?
Overall, the banking pack itself is not working in the whole 2024. In the KTK Bank, I believe that the more downfall can be seen, which might take a counter towards to 165 to 155 level. That will be the levels where the stock may find out the support, and thereafter we can witness some sort of a reversals from the bottom line. At the current the levels, my view is little bit cautious, but definitely for longer term horizon, you should not exit the long positions at the current market price and book the losses. You can hold on for a time being. Upside, we can witness the positive momentum towards to 190, and beyond that level 200 levels can be tested. So for the shorter term and longer term horizon, definitely the view is positive. If possible, whenever you find the supports nearby the 165 to 150 levels, you can try to average it out so that your buying levels will come down and wait for a target of 200 rupees.
Got that view, Swati. The next query is actually from the IT play on Emphasis. Satya is, sending that query from Trichur. On Emphasis, holding roughly 220 shares at 3,000 rupees per share and asking for a long-term view over the next 1 to 2 years. She's also asking if it makes sense to switch to Cyient. Now, Cyient, of course, has seen a lot of correction after Q3 earnings. But Astha, any kind of outlook that you have on Emphasis as well as Cyient?
So I think rather than switching on Cyient, it's better either to stay invested or to invest in the big tech majors like Infosys or TCS, and maybe for that matter, in fact, Persistent System is also looking good to us. So first of all, this is the view if anyone want to switch off. Now regarding Emphasis, we are not very much optimistic on this counter because the performance was not up to the mark which they have shown in the Q3 of FY25. So I think that is the major reason that we have seen a strong sell-off in the stock prices as well. So now we have to really see how this company will going to perform in the Q4. So idea here is if one want to take risk, then remain invested in the counter. And if you don't want to take the risk, then switch to either Persistent System or Infosys for that sake, rather than going ahead with this space, because this counter has not shown strong financial numbers on fundamental basis.
Got the view, Astha. The next is also, of course, a WhatsApp query. Sadanand Nayak from Goa is writing into us with a query on Suzlon as well as IFCI. Now, he holds decent quantity, while he's not mentioned the stock, how much he holds currently. But Swati, these two counters, retail favorites has seen a lot of correction over the last few months. Any kind of outlook that you have on either of these counters?
Yes, my view on both the counters are a little bit cautious because the whole year we have seen the 2024, this counter has not participated in the rally, and we're continuously hitting the selling pressures from, we have seen the Suzlon has been corrected almost from 86 to 45 levels on the downside. But now what happened, both the counters are trading near the oversold zone. So the downfall will be limited here. So if the market shows any kind of a reversals or the mid caps starts participating into the rally or the northward direction, then this particular counter will also participate in those kind of a rally. So for a longer term horizon, definitely the view is positive on the Suzlon. One can hold on. I'm looking for a bounce back rally up towards to 60 to 65 levels. So you can hold on this particular counter. Talking about the IFCA, this particular stocks, we have seen a correction from the last few months, and it's not respecting the every support levels. More downfall can be seen into this particular counter, which might take a stocks towards to 35 and so levels. So after more correction, then we can see some time consolidation along with the price consolidation. Thereafter, some up move rally will be started. So it will take a longer time. So if you are having any long positions, you have to wait for at least 6 to 1 year.
Sorry, Swati. Sorry to interrupt, Swati, there because we were flashing downstairs the conclave. But it's get ready for something big, viewers, because the NDTV Profit conclave is here. And it's all about the blueprint for Viksit Bharat at 2047. This isn't just another business event. It's where India's top minds in politics and industry meet to sketch out our path to becoming a developed nation by 2047. We'll explore and how this vision is shaping up across key sectors, emphasizing sustainable growth, governance, and crucially, the youth empowerment. Joining us to unpack this ambitious agenda are some esteemed guests who help us understand how India plans to turn these grand visions into reality. Let's get into it with my colleagues Alex Matthew as well as Mahima Vachrajani, who are setting up the stage.
Centenary year. This conclave will discuss the agenda for Viksit Bharat 2047. It's a national initiative that's focused on the 5 key pillars: economic growth, technological upgradation, infrastructure development, social empowerment, and sustainability.
The conference will highlight how this vision is being realized in important industries, highlighting India's commitment to long-term, meaningful growth and global leadership. The topics lined up for today range from manufacturing, disruption in technology, and of course the global buzzword, artificial intelligence, and how all of this ties in to present a once-in-a-lifetime opportunity for the Indian investor in the markets.
Absolutely. It's a power-packed lineup. So, let's kick things off. But first, a big thank you to our sponsors for facilitating this fantastic meeting of the minds. Presented by Pernod Ricard, co-presented by Shema General Insurance, banking partner SBI, co-powered by Share.Market by PhonePe, premium menswear partner Reed & Taylor, state partner Uttarakhand Government, Summit partner Invest MP, and out-of-home advertising partner Lakshya Media Group.
And now for the first word of the day, please help me to welcome on stage Sanjay Pugalia, NDTV's editor-in-chief. Put your hands together, please.
Namaskar. Good morning and very, very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat. Alex, तुमने मेरा काम आसान कर दिया कि क्या एजेंडा है, क्या थीम है और क्या क्या बातचीत होगी ये बताने के लिए। मुझे सिर्फ इसमें एक दो बातें जोड़नी हैं जो आप हमसे ज़्यादा जानते हैं, लेकिन उसको रीआइटरेट कर देना बहुत ज़रूरी है। एक बात तो हमारे अपने बारे में, एनडीटीवी प्रॉफिट के बारे में, कि अब हम 7 चैनल्स इंक्लूडिंग एनडीटीवी वर्ल्ड, 7 चैनल्स और 15 वेबसाइट के प्लेटफॉर्म हो गए हैं, यानी एक बहुत बड़ा नेटवर्क हो गए हैं। उसमें एनडीटीवी प्रॉफिट का रीलॉन्च हुआ है। तो उसकी खास बात क्या है? उसकी खास बात यह है कि न तो ओल्ड लिंगो है, न ओल्ड जार्गन है, और ओल्ड ऑडियंसेस के बजाय बहुत तेजी से हम मूव कर गए हैं यंग ऑडियंस की तरफ। ऑडियंसेस हमारी ऐसी हैं जो इस वक्त ज़्यादातर लोग आप कह सकते हैं कि 18 से 45 साल के एज ग्रुप के हैं, जो मेजॉरिटी हैं। आपने देखा होगा कि जितने नए इन्वेस्टर्स इस वक्त बाजार में आ रहे हैं वो भी इसी डेमोग्राफी के हैं। जो पूरा एक मार्केट हमारा वाइडन हो रहा है, कैपिटल मार्केट, उसमें इन लोगों का बड़ा रोल है। और आप ये भी देख रहे हैं कि उनकी कंजम्पशन की हैबिट्स किस तरह की हो गई हैं, और उसको देखते हुए हम लोगों ने एनडीटीवी प्रॉफिट को इस तरीके से डिज़ाइन किया है जो यंग इंडिया से ज़्यादा बात करे, डिजिटल लेड हो, और ओल्ड क्लीशेड एनालिसिस के बजाय, मैक्रो के बजाय आपको इतना माइक्रो गाइडेंस दे सके बाय वे ऑफ inviting esteemed guests, analysts, commentators and institutional investors included on the panel conversations, जो आपको बिल्कुल पैसा कमाने में सीधे सीधे मदद कर सके। तो डीजॉर्गेनाइज करना, यंग इंडिया से बात करना, और इस बात का ख्याल रखना कि दुनिया भर में डिसरप्शन कितने हैं। अब आप देखिए, जितना हम लोगों ने सोचा था, उसके बाद ग्लोबल पॉलिटिक्स जो बदली, अमेरिका में जो रिजीम चेंज हुआ, उसके बाद अनप्रिडिक्टेबिलिटी कितनी जबरदस्त है। लेकिन उस अनप्रिडिक्टेबिलिटी में नोटिस करने की क्या बात है? नोटिस करने की बात यह है कि मोदी लेड इंडिया एक न सिर्फ ब्राइट स्पॉट है, न सिर्फ सबसे तेज ग्रो करने वाली इकोनॉमी है, बल्कि पूरे ग्लोब को, पूरे डेमोक्रेटिक वर्ल्ड को एक सैनिटी और सस्टेनेबिलिटी और एक स्टेडी ग्रोथ की तरफ ले जाने का काम हमारा देश कर रहा है। आने वाले दिनों में ये बात ज्यादा अच्छे से समझ में आएगी जब आप एक तरफ ट्रंप टेंट्रम देखेंगे, उसके कारण अनप्रिडिक्टेबिलिटी होगी, टैरिफ वॉर होगा, न जाने क्या क्या होगा। लेकिन अब जो ग्रोथ के बेसिक फाउंडेशनल वर्क को कंप्लीट कर दिया गया है, और ये बजट उसका इंडिकेशन आपको देता है कि हम किस तरह से एक ही डायरेक्शन में रहेंगे, स्टेडी डायरेक्शन में रहेंगे, और वो अपवर्ड डायरेक्शन है। यही वजह है कि जब अब मार्केट अच्छा है, प्रॉफिट बुकिंग करके अगर एफपीआई यहां से एग्जिट कर रहा है, तो इंडियंस बड़ी तादाद में आकर के मार्केट को डेप्थ दे रहे हैं, स्टेबिलिटी दे रहे हैं, और अपवर्ड ट्रेजेक्ट्री दे रहे हैं। मुझे मालूम है कि पिछले दिनों मार्केट में जो डेवलपमेंट्स हुए हैं, उसके कारण, ऊपर नीचे होने के कारण, एक प्रकार की फिर से एंग्जाइटी है, फिर ये सोचना समझना है कि अब आगे क्या होगा, वगैरह वगैरह। लेकिन हर गिरावट नए इन्वेस्टर के लिए, बनते हुए भारत के इन्वेस्टर के लिए तो अपॉर्चुनिटी है। इसलिए मुझे लगता है कि जो पहले होता था कि एफपीआई आएगा जाएगा, उस पर भारत का कैपिटल मार्केट, इन्वेस्टमेंट क्लाइमेट और ग्रोथ ट्रेजेक्टरी तय करेगी, उस हम्प से, उस बैरियर से हम पार कर चुके हैं। ये मुझे लगता है कि सबसे ज्यादा जरूरी और बड़ी बात है। ये विषय एक्सपर्ट लोगों के हैं, हम जर्नलिस्ट लोग हैं, एडिटोरियल लोग हैं, उनकी बातों को सुन करके आपको बताते हैं, तो इस पर मुझे आपको ज्यादा कुछ बताने की जरूरत नहीं है। लेकिन ये बताने की जरूरत है कि आज का दिन भर का जो हमारा लाइनअप है, फ्रॉम मिस्टर पीयूष गोयल, टू ऑल द स्पीकर्स, हमको पक्का अंदाज है कि आज हमको बहुत उनके विजन से, उनके गाइडेंस से, जो पॉलिसी मेकर्स हैं उनकी बातों से काफ़ी कुछ अंदाज मिलेगा, गाइडेंस मिलेगा, एक विजन डेवलप होगा आप लोगों के मन में, खुद के, हमारे एनडीटीवी प्रॉफिट के सारे दर्शकों के मन में, कि आने वाले दिनों में किन बातों का ध्यान रखें ताकि अपनी जो खुद की भी प्रॉस्पेरिटी की जर्नी है उसको हम आगे बढ़ा सकें। तो मैं एक बार आप सब लोगों का फिर से स्वागत करता हूं और एलेक्स को वापस बुलाता हूं।
Thank you, Sanjay sir. Let's kick things off with the first panel of the day. If there's one thing even market veterans are asking today, it is, market kya lag raha hai? Tezi kab aayegi? Right? And that's because it's been a rocky start to 2025. But the thing is, if you focus too long on that piece of the puzzle, you're likely to miss the bigger picture.
Absolutely. And that bigger picture is what we want our guests to paint for you today. Please join us in welcoming on stage market experts that have seen the reds and the greens and all the hues in between over the past several years. Ridham Desai, MD and Chief Equity Strategist India, Morgan Stanley; Dinesh Thakkar, Chairman and MD, Angel One Limited; Ashish Kumar Chauhan, MD and CEO, NSE. Joining them on stage, my colleague and a market veteran himself, Neeraj Shah. Ladies and gentlemen, please put your hands together on welcoming them on stage.
I'm here. Yeah. To the live audience who've tuned in right now on television and on social media platforms, thank you for tuning in. And to the audience out here at the venue as well, a loud round of applause for yourselves for taking the time out and participating in our first ever conclave. Now, from being counted as the least intelligent investor many years ago with a lot of handicaps, to becoming the plank on which the Indian capital markets literally runs these days, the Indian retail investor has come a long way. Regulations, availability of options, awareness of the power of investing and compounding in equities have all helped. The question is, can the next 25 or 35 years be as dramatic in terms of a shift as the last 25 have been, and arguably the last 5 years have been? And what do capital markets have in store for the Indian investor in 2025? As Alex said, even the veterans are asking, kya lagta hai? So let's try and answer those questions, all of them, over the next 30 minutes, with the panel starting from my left, Mr. Ridham Desai of Morgan Stanley, Mr. Dinesh Thakkar of Angel One, and Mr. Ashish Chauhan of NSE. Gentlemen, all three of you, thank you so much for joining in. And can I start off? I'll start off in this order. Ridham, we are going to get to the outlook ahead because Ridham Desai has on a timely note written a note today which speaks about how equities are overlooking the good news. Did you time it with the panel today, Ridham?
Yes, I did.
You did? Okay. And we'll get to that as well. But can we start off, Ridham, by talking about how you've seen the emergence of how Indian markets have come through in the last so many years? Because from a point of time when agar FI bechega, to market khatam, to that point of time now, as long as the DI is investing, we are in safe hands. We've come a long way.
See, Neeraj, I have to claim credit that I predicted this in 2015 when the Honorable Prime Minister paved the way for retirement funds to invest in Indian equities. And it was what I have called many times the 401k moment for India. The same thing had happened in the US in 1980 when Ronald Reagan allowed 401k plans, the equivalent of India's provident fund and pension funds, to invest in stocks. And what you got then was a 20-year bull market in America that only ended with the NASDAQ bubble. So this will also only end when we get a bubble. It will probably last longer than 20 years, starting from 2015, because we have a younger population than America. You know, by the time you got into the millennium, a lot of baby boomers in America started retiring. So they had to start withdrawing their funds. That's not happening in India for many, many years to come. So yeah, this is as predicted. It's par for the course, and it's got many more legs to go.
Okay, many more legs to go indeed. But the evolution to both of you, and I'll now go to my next speaker to my left, Mr. Thakkar. The evolution of how the markets have come has been quite dramatic, right? From shouting in the ring to screen-based trading, with regulations empowering it, exchanges playing such a vital part. We've come a long way.
Yeah, definitely, because I have seen all the phases. When I started my career, it was floor trading on the floor and all that, outcry system. And it was like a wild west. There was no regulation, no capital adequacy norm. If one broker defaults, it spills over the market. And markets were like very volatile, like going up 100%, 200% and coming down equally fast. So I think in some sense that Harshad Mehta scam gave us some kind of a sense of seriousness that we need a proper regulation in this market. And I know when this capital adequacy and all that were introduced, that time there was a big kind of like resistance from existing brokers. But we know that, okay, after all this kind of regulation came in, our market expanded. I remember in those days, BSE used to do volume of around 100, 150 crores. And by the time I think a government regulator decided that we need to bring in a modern system, NSE came into picture and we saw a big jump in terms of volumes and penetration. And then came a Y2K kind of like phase in India where lots of IT professionals started investing in India. But they were unable to understand how to really manage volatility of the market. We did not see as much penetration as we saw when digitization and digital India movement came. India Stack was very popular, UPI payment for stock market, and that gave a kind of like, I would say, access to tier 2, tier 3, where you saw a big surge. Like I'm talking about 2000 when there were just 20 lakh investors, and today as we speak, we have around 18 crore demat holder.
Yeah, it's been stratospheric, if you will, the last 5 years in particular. Mr. Chauhan, a word on that as well, because you've seen this through multiple lenses. And do you reckon, I mean, what to your mind has been one or two defining moments over the last 10, 15 years especially, when the pace of change has been very, very quick? And how do you see the next 5 to 10 years in terms of what exchanges would do to facilitate even deeper penetration of equities? And more importantly, even in terms of regulations, is there stuff that you anticipate will come in which could make the markets even stronger and better and safer?
I mean, I'll go back 30 years. As Dinesh Bhai said, he was on the floor side, I was on setting up the NSE side. It has been a sea change. Today, even those days when NSE was set up, it was a breath of fresh air for the world, not only for India. And NSE was not only the screen-based automated exchange which became successful in India, but it was also the first screen-based automated stock exchange to become successful in the world. It changed Indian stock market, but it also changed India's IT. There was no IT project worth showing in India before that. There was one railway reservation framework which was for internal to railways. Otherwise, normal Indians had no access to computers which could actually change their lives. And I recall many of the current stars of IT industries. They used to bring their potential customers to show NSE that India can do it. And that's how Y2K and all those contracts came. Why I'm telling you this, it was the first public digital infrastructure of India. It was the first fintech of India. It was the first large IT setup in India of any type, right? So it changed India, NSE changed India in many, many ways. But what it did for stock market is amazing. That time, India's market capitalization in 94 when NSE started was around 4 lakh crore. Today it is 440 lakh crore, 110 times. And probably dollar terms also it's more than 60, 70 times. What it got, things actually when revolutions happen, you get to see them upfront and then they peter out. When evolutions happen, they happen slowly, but then suddenly they become fast. You know, they gather pace after some minimum critical mass is obtained. And that's what India's stock markets have happened because of NSE. That I think we can give a lot of credit to NSE in terms of automating things, in terms of the trading part, trading, clearing, settlement, risk management, ensuring the defaults don't happen and stuff. But more importantly, the corporate governance cleanup that has happened. When I joined the business or as a job in 91, getting annual report was a pleasure.
Sure.
Quarterly results, you guys keep on talking, or the sort of material events which you keep on talking on TV every day was not even a thing, right? And most of the time the companies will actually combine 2-3 years and give you the results after 2-3 years. From there to come here, we are now better than the best in corporate governance. For me, the trust of the investors, because many times we think the stock market's job is to allow you to trade, which it is. But the main job is to actually ensure that the corporate governance takes place in such a way that it is always in the interest of the minority shareholders. And I think today, India is pretty much better than the best in the world in terms of protecting minority shareholders' right. I think that is where the confidence of individual investors, of institutional investors like America has a golden share. America has shares with extra rights, which India doesn't provide. For me, that is the true protection for minority shareholders, which we actually don't talk because we are assuming that has to be hygiene. But if we don't have that, slowly, when profits are sort of available, or one person with very little shareholding ends up making a lot of decisions, those rights actually will bring down the capital markets. And those are the things we need to watch out for in protecting our capital markets.
Okay. No, so I have a follow-up, by the way, but just a shameless plug here in terms of how proactiveness is happening. A very young researcher from NDTV Profit recently filed a story about 10 days ago about how a company with hardly any employees and hardly any revenue has some 7,000-8,000 crores of worth of market cap. And in about 4 days, we had SEBI come out and say that we are investigating this company as well. So some things are being taken. I urge you to actually read that story on our website too. But, okay, Mr. Chauhan, a follow-up now. What's expected next? AI, machine learning, a lot of things happening, right? What do Indian markets look forward to? You are at the right position to tell us what's to be anticipated in the next 5 years.
I mean, we have seen companies like, if you look back in 1970s, nobody thought a polyester company would become the largest company in India in 40 years' time, which it became. In 1993 or 94, a small IT company's IPO came. Nobody thought that IT is a thing. That issue failed. And today, it is basically, it made many billionaires by accident because they were underwriters who were forced to actually subscribe, right? That company's name is Infosys. So, and then pharmaceuticals, Sun Pharma, Kotak Bank. You have seen the waves of newer and newer companies. Today, you have Swiggy and Zomato and Nykaa and so many more who have come, right? So for me, it is as an exchange infrastructure provider, our job is to allow Sachin Tendulkar to also come, and then later on Virat Kohli, and then later on Rohit Sharma, and then Surya Yadav. We need to provide continuously good grounds, fair umpires, good facilities for people. That is what our job is. And as and when things keep on changing faster, the newer technologies will come, newer companies which will take advantage of that technology, that will keep on coming. And of course, the wealth gets created by newer technologies. So for me, whatever you say about AI or drones or 3D printing or newer sort of things which will come on top of that, exoskeletons and all, you are going to see a lot more companies which will come. Earlier, you required a lot of capital to create more capital. 1970s is first time where some of the young companies came, raised funds from the public, became large like Reliance, and then Infosys proved that you don't require a lot of capital to begin with.
Sure.
And now, newer technologies are not requiring a lot of capital. I call it capitalism without capital. And that's where you will see a lot of youngsters aspiring to become entrepreneurs in variety of areas. They'll come raise funds from the markets because despite whatever proclamations and page 3 of newspaper you see, the private equity and venture capital don't fund even 1% or 0.1% of the actual companies that want to be funded. And today I have 22 crore accounts of investors, 11 crore unique investors. 20% of all households in India are now trying to fund the dreams of entrepreneurs. Of course, they also are expecting returns.
Of course.
But basically, that is what...
Which are not there right now, but that's okay.
The beauty of India is that now every entrepreneur can try to come, raise funds. Some of them will fail, some of them will succeed. But they will create more jobs, more wealth for themselves as well as for the economy.
Okay. Mr. Thakkar, you've been at the forefront of disruption, if you will, right? What's next to be anticipated from a platform business like yours, or just in general from the Indian platform businesses which are facilitating investing and trading in all asset classes for the Indian investors?
Yeah. See, if you see, technology already came into our market way back in 93, 94, as Ashish Chavan told. But I think what helped was deeper penetration when we saw deeper penetration of smartphone, internet available to almost like 96% of villages in India. So what I am saying, today we were able to get this kind of like market coming to capital market, stock market, because we gave a good access to them. Sure. It was very easy for them to access the market. Because of technology, we were able to reduce the price, pricing came down. What I'm seeing right now, if you see lots of investors, although they have opened the account, but they are not ready to take their first step. So either awareness about this asset class is missing, or we have to build lots of intelligence in our app. So that is where like broking company like us are investing heavily on AI and machine learning. It will take some time to get that kind of an app to an intelligent level where a person gets his first salary or gets his first kind of an like income stream, and app is able to guide them on next steps, be it investment in equity, be it taking credit, being responsible in terms of their financial management. All said and done, this is my experience, when people in this financial industry also, they do not have kind of a time or kind of like full knowledge about what asset class are available and what's the right way of approaching in terms of managing their financial goals. So I believe AI is a best kind of like tool which can help personalize every journey. See, an app should be able to scan the whole ecosystem, what products are available across, especially for Indian market, for India. And how do we match or how do we kind of build confidence in investor to take first step? I think best step was introducing sachetization of the SIP 250. We have to reduce the cost. What is prohibiting us from introducing all this product in a very sachetized or tokenized or fractionalized way is cost of transaction. If you are able to bring it down by using technology, be it regulator, be it exchange, be it banks, I think that will create a big surge of new set of investors who will start investing 100, 200, 500 rupees. People feel that equity is only for rich, wealthier people. So we have to democratize, we have to build confidence, we have to build intelligence in our app so that it gives confidence to every person in India that even if you want to invest 100 rupees regularly, this can be invested on this app. I see a big kind of like future in terms of blockchain, where underlying asset is anything, not crypto, because crypto we are not comfortable.
Yeah, sure.
But I think I see a great future in terms of 5 to 7 years using blockchain technology so that underlying asset can be anything. It can be real estate, it can be painting, it can be wine, it can be whatever can be invested. And that can be fractionalized to a level where a retail investor can invest. I think you must have heard about Finternet, a project which is now kind of like, I would say, pet project of Nandan Nilekani, and we are also closely working with them. I see a great future in Finternet. It may take 7 to 8 years, but I am a big believer blockchain, an underlying asset, anything apart from crypto would be a great future, and that is what I think will bring all India to this market for all asset classes.
Interesting. Well, looking forward to some of that. Now the question is, will the market buoyancy be their rhythm for the Indian investor to realize that this is yet another period which will pass through, because the last 4 years have been different in that dips were bought into, people consistently stayed the course, right? This seems to be the current, now I'm talking about the present, the current seems to be the first one where people are actually a bit shaken up. I see that in conversations, we see that in our show that we do, a caller show for 1 hour, our call Ask Profit, wherein people are now questioning that should we even stop the SIP? I mean, this had never come before. How do you see this?
I'm sure you have tapes of your shows.
Yes.
Just check May 2022.
Okay.
Same thing had happened. Just 3 years ago, actually. So I don't think it's anything out of the ordinary. Markets do not go up in a straight line. They're bound to produce some volatility from time to time. The genesis of this particular one, I think, was the slowdown in growth that happened largely because the government started consolidating its fiscal deficit. And the central bank continued to pursue, I would say, quote-unquote, hawkish policies. And that, I think, set the stage for a slowdown which has, I think, lasted for 2 quarters. In my view, we are already out of that slowdown. The budget was a phenomenal one. I have titled it a magic budget. It continues to consolidate the fisc, but at a much slower pace, so only 40 basis points versus 120 in the trailing 12 months. It has increased capex share of GDP by another 20 basis points to another record high. And of course, it has cut tax rates as well. So it has got an incredible combination for the economy. And at the same time, most importantly, the RBI pivoted. And the market has just ignored what I think is one of the biggest pivots in modern central banking history of India. Where it has gone all out to convert liquidity into positive territory, cut interest rates, and taken the foot off the regulatory pedal. If credit growth doesn't accelerate from 11 back to 17, I'll be very surprised. So, this is like, I am just amazed that people don't see this as an opportunity. In hindsight, they would realize it. It's impossible to catch the bottom. I don't know where the bottom is, but we didn't know during COVID as well. You have to buy stocks. They will go down maybe another 5-7% and you buy more. And I think you come out quite good. Now, are there some things to worry about? Of course, there are lots of things to worry about. But I'm not really worried about President Trump anymore. I think he's put his cards on the table and they look very benign. So this is nothing close to what we thought could be the worst case scenario. I think India has done a superb deal with America last week, which should result in much greater trade cooperation and military cooperation. 2 wars are ending. A third one is being taken off the table. The tariffs which were coming on China don't seem to be coming. So if anything, I think business sentiment in America seems very solid and improving, and it will soon turn in India as well. So my worry was that global growth slows down because of policy actions, and that worry is ebbing at the margin. So that was the biggest concern. And we will get lower oil prices, no wars, potentially lower interest rates in India, a slower pace of fiscal consolidation, a slew of tax cuts, a lot of tax reforms, and higher capital spending from the government.
Can't ask for more, are you saying?
I may sound like a broken record, but I am very bullish at these
this
prices.
is great to know, and I see both gentlemen smiling, so I'm going to ask them as well. But Rhythm, I have a follow-up for you, which is a question that everybody is asking. Okay, FI वापस कब आएगा? Right? Everybody wants to know this.
देखो, in 2015, when the retail balance sheet started shifting, and by the way, it has not made such a big shift as people think. Trailing 10 years, in Indian households have still put more cash in their cupboards than cash into equities. They put more cash into gold than into equities. So we're still at the tip of the iceberg. We have really not traveled this journey. There are only 2 players in the market. It's either a domestic investor or a foreign investor. If every morning, even through this fall, at 9:15, if a $100 million bid is coming from domestic investors relentlessly, somebody has to sell. Otherwise, how do you get a trade? Even in the open outcry system, there was a trade and, there the market maker would go short. Somebody has to trade, right? Somebody has to sell. So unless the issuance cycle reemerges and the third player comes into the market, which is the corporate sector, comes and offers stock, I don't think foreigners can come to buy. Now, a couple of things let me just say here is that when we look at emerging market portfolios, the underweight position of foreign investors is now to an all-time low. So they are more underweight on Indian stocks than they have ever been in the past. The last position was in 2007. The other thing that I'll say is that India is hurting considerably because of its classification as an emerging market. The emerging market cohort is no longer the story that people dreamed about in the mid-90s. So it is unraveling, and a lot of assets in that cohort are shrinking, and India is facing some of that brunt as well. So it's important, if you ask me, I think India needs to diversify its sources of capital. We need to allow other pools of capital to walk into Indian stock markets, and that would then ensure more secular flows. But in the meanwhile, I think somewhere in the next few weeks or months, I think foreign investors will start coming back. India has considerably underperformed China. China is up 50%.
Yeah.
September 25th, and I have to say in hindsight, I underestimated the Chinese policy stimulus then. It seemed in the wrong direction, but it proved to be a bottom for the Chinese stocks and a top for the Indian stocks. And the relative chart now looks really juicy for India. So those who were waiting for India to get more attractive in valuation terms and in performance term, I think the moment has come. And one last point, I like to measure the Sensex in gold ounces. I've been doing that for 30 years. This is the cheapest the Sensex has been in gold ounces since November 2020.
Sorry, can you explain that?
How much Sensex can you buy with an ounce of gold?
Acha, okay, fine.
Okay. So this is the cheapest since November 20. It's like COVID.
Oh, okay. Okay.
So people like to measure the Sensex in earnings term, in INR terms, in dollar terms. I like to also measure it in terms of gold ounces. So
interesting.
This is the cheapest it has been in 4.5 years.
Wow. Okay. Well, two gentlemen are smiling with that. So, Mr. Thakkar, you've been smiling and wanting to come in twice. You want to add a point here?
Yeah. See, I have seen this market in terms of retail perspective. You have seen in terms of institution, they are far more knowledgeable. But retail are very emotional and sentimental. When a market crashes, next day call comes from customer, abhi kaun trade karega? And I remember in 2000 when this .com bubble happened, and SIP used to be like around 150, 200 crores per month. And .com bubble happened, everybody told that now nobody is going to invest in equity. And today as we speak, a SIP book is like running at the rate of 24,000, 25,000 per month. So what I'm saying, till that time, like fundamentals are good, retail would get lured towards volatility, market momentum and all that. But we know fundamental of the country is good. And every year we will see progressive, there will be some kind of a growth in corporate earning. And we are seeing inflation has been controlled. So retail investor is going to come back in a big way. And if you look at, as you said, can we see this next 20 years as shining or as lucrative as it was past 25 years? In fact, I feel it would be better than that. Because that time India was building in terms of infrastructure, in terms of digitization, in terms of, even if you see, demography also was not favorable. Today every household has more earning member than what used to be previously. Now if I fast forward for next 20 years, India would be having highest working population. So all this population who are earning would have no other way but to invest their saving in equity. Now if we talk about today's median age, which is around 28, 29, that means people have just, this young population I'm talking about, have just started earning. And next 20 years also Indian median age would be just 40, which is almost not even like, it is just closer to developed countries. So I think we are yet to see that phase where India, where it is, will go to that developed status. And that is where a serious relationship of family starts with equity, saving, long-term goals and all that, I feel that we are going to see far more better momentum and better phase than what we saw in past 20 years.
Wow. Okay. Mr. Chauhan, last word to you. And I'm asking you to wear a different hat. We have a world-class exchange system. We have world-class brokerages. We have world-class apps to trade. Would love to understand your view next 15 years. We have two bullish views out here. I'm asking you to wear a different hat than the head of the NSE exchange and tell us what do you think about it.
As an NSE head, I usually have no view on whether market goes up
Completely.
or down.
I'm not asking you for the markets. I'm just asking how do you see
as a person who has observed and also thinks about future, for me, the technology is the only change that creates wealth. Technology brings change, and that actually change brings wealth. Technology waves used to come very slow earlier, so we didn't realize that technology was the change. And technology waves used to come so slow that the wealth also used to be created slowly. Last 30, 40 years, first time in human history we saw in one single generation a full technology play from sort of computer not being there to computer being almost everywhere. And the next layer of technology changes are going to be even faster. So the wealth that is created in last 30, 40 years is way beyond what was created in, say, last 100, 200 years because of that faster change. But the changes are coming so fast that next 30, 40 years will create even more wealth than what was created in, say, last 10,000 years. And it happened in very many periods like Industrial Revolution in Europe and all. And this next 30, 40 years, who creates that wealth is young population. Because they understand new technology, they adapt to it. And basis that, they create new wealth. Of course, that economy had to have a capital. Today, technology doesn't even require new capital to be invested. So if you look at Japan, it's old. China suddenly became old. India, young and technology oriented. Europe is old. America will become old if they don't import people, right? So effectively, India is in a great position to take advantage of that technological waves and the wealth that comes with that, right? So 17% of young population, means 70% of world population, 20% of young population. If they create 25, 30% of the next wealth that gets created, India will have a chance to become rich before it becomes old in next 30, 40 years.
Cross fingers. And America, well, if it has to import people, then that also puts India in a great place, I would reckon. But I think we have time for maybe one or two questions if the audience has questions. So, Alex, Mahima, do we have any questions from the audience?
Where's Mahima?
Yeah, thanks a lot, Parag here.
Okay, we have one question here, yes.
So my question is for Rhythm. So while I completely agree on these two fronts, that government has started a bit in terms of giving a consumption boost in the budget, and RBI has done a lot in terms of providing adequate liquidity, and those are the foundations of a good growth journey, which we might see after 2-3 quarters. The results might be visible after 2-3 quarters. The only thing which keeps me worrying is US inflation. If because of whatever is happening, and if US inflation inches up, and again we head for a stronger dollar or a stronger US 10-year, then what happens?
Yeah, so I think the turnaround is happening now. It's not 3 quarters later, because you must understand that the government's spending got stalled in the first half of the ongoing fiscal. And a lot of it has come in the second half. So the turnaround is already happening. What they've done in the budget and the RBI's policy pivot will carry that momentum into the next 2-3 quarters. The second part of your question with respect to the US dollar, yes, that is obviously a concern if the dollar resurges as it did after the victory of President Trump. However, I think the signals are as follows. The current administration in America is very business friendly, and it is also very stock market friendly. So I don't expect them to do things that will actually derail the stock market. And including those in that list, things that get included are things that can upset US earnings. So my instinct is that the US dollar may have done its jig. So So that's my assumption, but the risk that it comes back for other reasons is very much a concern for us as well.
Okay. I hope that answers. Any other question? We have maybe time for one more. Yes, please.
Question to Ridham Desai.
Sorry? Okay.
Hello, my question to Ridham Desai. Nowadays, what is debt to GDP ratio of India, China and US? Approximately. Debt to GDP ratio of India, China and USA.
Yeah, there is no comparison. India is at 140% and the US and China are considerably higher. Clearly there is a problem with respect to debt in both the Western Hemisphere as well as in China and Japan. And they have aging populations. So if you ask me, the long-term outlook on global growth is not very good. There is a debt demographic problem which humanity has not faced before, and it will unravel at some point in time. It's very hard to predict when these things take place, but there will be a moment when of reckoning that will come. India, on the other hand, and I'll borrow from what Dinesh spoke about earlier, which is that we are actually on the path where our debt to GDP will rise on an aggregate basis. There will be a shift in the mix. The government's debt to GDP will fall. The private sector's debt to GDP will rise. What is debt? Debt is essentially borrowing from the future, which is spending the next generation's consumption today. So America has already spent its next 3 generations. We're about to start that journey, and that is hyper bullish for stock markets. It will end very badly, but it will happen after this room has left the planet.
Okay,
sorry, I may have assumed that made that assumption, but yeah, I think most of this room would have gone by then.
Okay, which is a fair point. Okay, we have maybe time for one last question, guys. Okay, whoever has, if somebody has the mic here, the gentleman, yeah, whoever. Fine, fine. Just give the mic, whoever, not a problem.
Hello. Very nice insights, but the only concern for the market today is that US markets have gone up considerably, and the valuation metric which bothers a lot of people is market cap to GDP ratio, which is about 207% higher than all the times in the past, even 2008 Lehman Brothers times, 2020 COVID times, dot-com bubble times. So that is the metric which even Warren Buffett follows, and a lot of fundamental analysts track that. So what's your view on that? Although we have a lot of growth triggers for the market, but the valuation concern, could markets still rise considering that valuations are so stretched?
Is this the question on the US markets?
No, I think the Indian market, the Indian debt to GDP. So
no, Indian market cap.
I said the valuations are stretched in USA, but there's always trickle-down effect on Indian markets also. So that's the global risk which could impact the Indian markets.
Global, yeah, indeed. Okay. Yeah, Ridham, why don't you start? Maybe
so India's correlation with global markets has reduced a lot. And there are fundamental reasons for that, and we don't have time for me to go through all those reasons. But in technical terms, the beta, the relative sensitivity of Indian stocks to the world is now down to 0.4. It used to be 1.3. So we are less affected by this. But of course, if America were to enter into a bear market, it is unlikely that the rest of the world does not react to it. It will.
Okay. Mr. Thakkar, you want to add to that before we wrap up? I mean, do these ratios worry you? I mean, you've seen many cycles. Do these ratios worry you?
No, not at all. I think currently, if I look at our ratio, it is like quite reasonable. And we have seen fluctuates from, say, like 50% to 150%. And currently, it would be around 105, 6% something.
It's down to 100 now.
Yeah, so down 100. So I think we are reasonably priced that way. We are just waiting for that kind of trigger point when he starts investing. And which is when he starts investing. Yeah, well, that's good to know. Okay. Well, Ridham, the onus is on you to start investing and your clients to do that. But no. But thank you, all three of you.
See, I'll make the final point. Every day, flows are net zero in the market. Flows don't matter. What matters is liquidity. That's different from flows. Liquidity comes from the confidence in growth. A moment will come in the next few weeks when people will say, oh my God, it's looking so nice. We are buying stocks.
आपके मुंह में घी शक्कर है सबके मुंह में घी शक्कर because you three have sounded so bullish. A round of applause for our lovely panel here. Thank you so much for joining in, gentlemen. Really appreciate your time. A past, present and future of the Indian markets and the Indian investor. Lovely talking to all three of you. And thank you all of you for listening.
Big round of applause, everybody, please.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
बजट भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत
Welcome everyone, and thank you so much. Now, let me set the context for our conversation today. India's manufacturing sector is just not only an economic engine, it is the foundation of our journey towards Viksit Bharat. Contributing around 17% to the nation's GDP, manufacturing is set to play a transformational role in India's economic future, with the government ambitiously working to raise the share to 25% in the near term. The Make in India initiative, which has completed a decade, has been pivotal in fostering and strengthening India's global manufacturing status by enhancing foreign direct investment, skill development, and updating manufacturing infrastructure. In fact, thanks to production-linked incentives, or the PLI scheme as we all know it, FDI in the manufacturing sector has surged by an impressive 76%. But India's vision now extends beyond Make in India. It is Make in India for the world. With shifting global supply chains, India has emerged as a strong alternative manufacturing hub as companies seek to diversify and reduce dependence on several nations, including China. A shift that has accelerated with Donald Trump's return as the 47th US president and his renewed focus on trade policies. The evolving landscape presents both challenges and unprecedented opportunities with this impressive growth potential. Our panel today represents 3 unique voices in manufacturing to discuss how India can sustainably achieve its goals and become a global manufacturing powerhouse. Let me welcome Dipali Goenka, CEO and MD, Wellspun Living Limited, Habil Khorakiwala, Founder Chairman, Wokhart Group, Rajesh Sharma, CEO, Keynes Technology India Limited. Now, in this panel, we have 3 distinct sectors, but all of them very, very crucial to this dream of Viksit Bharat. Look at it this way. Every time there is a requirement, it's the private sector asked to come up, put in the capex, create the jobs, and of course, drive us to Viksit Bharat. Let me start with that thought with you, Dipali. This claim or this assertion that the road to Viksit Bharat is paved by the country's manufacturing sector. Would you agree with it?
I totally agree with that, because when we talk about and when I talk about manufacturing, and we are talking about 1.4 billion people, and 30 to 40% of that is the youngest population in the world, definitely it is the path towards Viksit Bharat. When I talk about manufacturing and when I talk about Welspun and home textiles, let me tell you one thing. When you talk about the white collar and tech, that is another aspect for it. But the deployment of the grassroots level will be done by manufacturing, like example textiles, because after agriculture it is manufacturing in textiles that deploys the maximum people. And I think the highest, and after I think it is one of the highest revenue earner as well for India today. So yes, manufacturing will be an integral part of what India wants a journey towards Viksit Bharat, but there's a lot more to be done there, Tamanna. And I think I leave at that right now as we speak forward.
I think it's also important to set the context of why manufacturing is so crucial. From the last 75 years plus of India's independence, we have made our name in the world as a service sector powerhouse. We're famous for the back office of the world, the call centers of the world. It's time to shift gears. And Dr. Khurakiwala, let me come to you on that point. Can we really continue to rest on the power of our service sector as AI threatens some of those industries? Why has manufacturing become so crucial? And you see policymakers shifting gears as well.
One of the aspect of our industry, pharmaceutical and manufacturing, is ours is a very science and technology driven industry. So when you talk of our industry, manufacturing along with innovation is a very integral part of our industry, and our India's success of supplying medicine to US and other parts of the world is a result of a technology input over the years. And I believe that the health sector and medicine and drugs are undergoing transformational change over the years, and the future is very unlikely to be the same like the past. And there is going to be major technology shift from chemical-based entities, which is today bedrock of our pharmaceutical product, to moving towards the biological-based drugs. So new drugs which are recently approved in the last 5-7 years, 70% of them are of biological origin. So I think this is the area where already India has a base, but I think we have to build up the kind of strength we have done in chemistry, in biologics in the years to come to be successful. The other important aspect is that in our industry, if you have to make a mark in the world, two things are required. One is ours is a intellectually driven industry more than the people driven industry. So you need scientists, you need, and the IT certainly helps. AI and IT will certainly help the future of our industry. Therefore, what is important that we need to establish a good base where there is only a little beginning has been taken place, is finding new drugs. And therefore, research and innovation will be very important if India has to be recognized as a worthwhile a pharmaceutical company other than supplying medicine.
So, Sir's super hit Zenic is something that everyone's talking about, new innovations coming in from across the board.
Oh yeah, we have invested for last 25 years to finding new antibiotics. And today I can, without exaggeration, can say that we are in antibiotic space on drug discovery. Probably we are the most successful drug discovery company anywhere in the world.
That is amazing. That is amazing. Remember, we are going through a phase of antibiotics that are getting more and more resistant. So to put in context, an innovation coming out from India, from an Indian company, of an antibiotic which is at the forefront becomes very crucial. The other aspect of innovation. And Mr. Rajesh, the industry that you are in is so exciting. What's also exciting to hear from you is what happens when there is government and policy push. So, for example, the PLI scheme, and how much of it has ensured that in your space you can charge ahead and compete with the rest of the world?
So certainly, Tamanna, first thing I'd like to say, actually instead of Viksit Bharat, we should call it Reviksit Bharat.
Reviksit Bharat.
Reviksit Bharat, because if you read the history of India, in the AD 1 to 1000, India had almost 33% of the world's GDP share. And we are talking in 2047 to reach that level again. So if you're talking of that, and that's where something where the government is working towards, it's very important for the success of scheme like this where the industry leaders do come together. In addition to that, the government policymakers have to join hands together, very strongly supported by the financial markets. Because without financial institutions coming forward, a collaboration between these three segments is extremely critical for manufacturing to really become large in the country. Coming to your specific question, certainly PLI has given a great push to the Indian manufacturing. That was one of the areas, where when China was growing into the manufacturing side, the support from the government was very, very critical. Now, if you look at the infrastructure development, where the ports, the highways, the supply chain, etc., the logistics is improving in terms of integrated supply chain, which is very, very crucial to the whole thing. And then the talent pool, which is very critical. Now, Dipali already talked about the age of, the average age of the people in India, with average being between late 20s and early 30s, that workable age of employees that are going to be in India is very, very important for manufacturing segment. So the PLIs have certainly given a great push to the manufacturing in India, specifically in the scheme one of PLI, whether it was IT, whether it was telecom, has been a great opportunity for companies like Keynes and the other electronics manufacturing company to gain the advantage of that and make better offerings at competitive price to its customers.
So the EMS story is well known from a manufacturing perspective, from a stock market perspective, and we'll go around again to the next point, and I'll come to you, Rajesh, on this. When you hear about reciprocal tariffs from the American perspective, what does it mean for you, considering your company is now also foraying into semiconductors?
See, of course, the importance of semiconductor was very much realized during the pandemic time.
Yes.
When the whole world was completely shifting to the technology, schools working from home, the jobs happening from home, the need for your display fabs, your mobile phones, your tablets, your laptops, everything was in short supply. And it's not just India, the countries around the world focused on their semiconductor policy. It's not just that the India alone set up an India semiconductor mission. The many countries who actually established their specific semiconductor missions, making a push for the semiconductor policy of their country so that they can support the increasing demand for the electronics and technology for the country. So there could certainly be tariff pushes that will come up from the US and other countries. But I think more than reciprocal, the government has to work towards the bilateral tariff system with the countries, and that because it's not that everything either India could manufacture or China can manufacture or any other country can manufacture. It is, it's a global village today. We all talk about global village. Unless we all work together with bilateral tariffs, bilateral systems, that will be very, very important for the success of manufacturing.
Which is why the next few weeks become so crucial from the perspective of the manufacturing sector in India and the world. Dr. Khorakiwala, when you hear about reciprocal tariffs, what is your response? Are you worried or are you not?
See, our industry, pharmaceutical, basically to make a change in formulation, for example, takes roughly 3 to 5 years. So from that context, there is, unlike steel or cement, you can switch suppliers at a day's notice. You can't do this in our industry. So the view I have is short term. Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
Okay.
But long term, one doesn't know what happens after 3 to 5 years.
Yeah. No, let me repeat that. This is interesting. Any tariffs that are imposed on Indian companies will impact American consumers, not Indian companies, because we'll just pass it on.
That's right.
Yeah. So this is an interesting perspective. I suppose, Dipali, the concern is that does it make us less competitive? Because if it's reciprocal tariffs, then from that perspective, we are seeming higher.
So first of all, I think let's keep the tariffs aside, but let's talk about India in a position for me as a textile hub or the manufacturing hub. I think the world needs India, and as we're speaking about Viksit Bharat, I think India has been put on the world map and is being spoken about in all the boardrooms across the globe of all the countries for being an integral part of that supply chain. Mm-hmm. So for when we talk about America, I think, and when I talk about Welspun as a company, as an organization, I mean the complete integrated supply chain, one of the biggest manufacturing factories or company this side of the world, apart from China, creating the entire supply chain and the serviceability for all the retailers globally, and having more than 42 patents in home textile. Wow. I think I can just tell you one thing, that while we talk about the tariffs, I think, first of all, I think it's going to be more bilateral, because I think when we're talking about two countries, they've already come to a conversation where they're going to be talking about growth in both the countries, and it's going to be beneficial to both the countries. So I think for me, I am more positive about it. To Mr. Khurakwala, when he talked about it'll be passed on to the consumer, for us in home textiles, it is a very small part of that wallet share where, we are that towel or a sheet or that rug that they use, and it is very, very sensitive.
Yeah.
So I think it will be something that we will have to work mutually. But however, coming to Tamanna, coming to the tariffs, I think for India and US, both of them need each other, and I think the bilateral trade will be something that will be where we will be talking about more than anything else.
You want to come?
I want to add a point here.
Yes, of course.
If you look on the semiconductor side, the US has predominantly and has a very large share of the design-led semiconductor. The manufacturing focus was always on the Far East Asia, China, Japan, Korea, Taiwan, and countries like that. And then the supply chain was completely dependent on China and Taiwan. So with that as the scene, so what we are looking at is shifting manufacturing into India. And if you look at the design workforce, almost 20% of the design workforce in semiconductor and electronic space is Indians, whether based out of India or based outside of India.
They might as well do it here.
Yeah, so that's what would happen. So there's a lot of shift happening on design-led manufacturing and also on the manufacturing per se in the country.
I just would like to add, as far as pharmaceutical industry is concerned, we are one of the largest supplier of medicine worldwide.
Yes.
Our industry is about number 3 in terms of export earning today, and we supply 40% of medicine the American consumers uses.
Wow.
60% of vaccine worldwide it is supplied, and that is same happened in COVID-19. So it's a very, very significant player. We are already there. And therefore, from that point of view, if we keep up with technology and science, as we have done in the past, we can always aspire for more.
We should acknowledge the role of Indian pharmaceutical companies in supplying affordable medicines across the world to nations and people who have not been able to afford them. So that is a huge contribution of the Indian pharmaceutical industry, and that is something that we should acknowledge. But Dipali, since we were talking, and this is something Rajesh brought up, about being an alternative to China. So let's address the dragon in the room. We keep talking about India +1 or India versus China as an alternative to China. How do you see us getting there? In your industry, are we able to capitalize on what we are seeing in neighboring Bangladesh, which has been a textile hub and is undergoing some issues right now?
So, we always speak about China +1 for India, but I think the important aspect, let me point out here, is that, we are talking about the youth and the skilling here. There's a lot more to be done here. The government has leveraged, government has given us the opportunity for Samarth, even in the kind of budget when you're talking about government is talking about upskilling, skilling, the whole Gati Shakti being the, the logistics, because that's an integral part of the entire supply chain, the PLI, as we spoke about. There's something that we really need to do is about the culture in this country and the speed to market. Because it's not just about the investments in manufacturing, it's the investments in that, the manpower and the people. And I think there's something that we need to really look at as if we compare ourselves to China. There's lots that we've done, but there's still lots more to be done. And for us at Welspun, we deploy around 25,000 people. And if we are talking, and I think as corporates, and as we had spoken earlier, that it comes on to the privatized sectors to look at capex, look at how we are, taking on that, burden or an opportunity to take that forward. I think at Welspun, we actually are looking at skilling more people, looking at investing in technology, Industry 4.0, AI, and other investments. So while we talk about China, I think we ourselves are our own brand ambassadors. And I think at Welspun, we believe in that when we take that baton forward. And whether it is the supply chain analytics sitting in America, or the warehousing doing the vendor-managed inventories, or working on the patents, or different kind of innovations, I think that's going to be a very important aspect. Now, taking on the opportunity of investing in capex, investing in whether we need to make our fashion towels here, or fashion bedding, or it could be the utility bedding, setting up even the pillow plant in America. I think there are interesting things that I think as corporates we'll also have to take on. So while the government will leverage, will give us some more opportunities, but I think it is on us. How do we take that forward?
No, well said, very well said, in terms of what the role is of the private sector. But let me just come to you again on the point you made of what we need to learn in terms of quick turnaround. And if I can ask you to elaborate on that, because it's not as if there is no appetite for Indian goods. It's about whether we can deliver in the time and speed that is required.
So again, I think we all will agree here on the panel as well. I think the critical thing is about technology and digitization. And again, I'll just give a simple example of what we do. I have warehouses in America. For certain retailers, I do vendor-managed inventories. That's like literally writing the POs for them. Actually analyzing what the consumer is wanting and actually integrating the entire supply chain together. For all of us sitting here in this room, the key thing is that now it is about how you are going to contribute towards the Viksit Bharat. It's not just going to be the government working with you, but it's also going to be how you are going to be working towards that as well.
Let me come to you, Rajesh, on the point of should India be looking at, or should Indian industry be looking at itself as an alternative to China, competing with China? And is this moment ripe for it? How should we position ourselves in a global scale?
You see, in my opinion, we should stop looking ourselves as an alternative to China. We have our own strengths. We have our own market in India and outside of India. And that's what Indian Inc. should be focusing on, delivering with your capabilities. See, one of the advantages of how China positioned themselves was on scalability. If I look at electronics industry or semiconductor industry, if we talk of the factories in China and Taiwan and these places, they run into square kilometers. We talk about acres. If you have a 500-acre factory, we think it's like really big. And there we talk of, factories of Foxconn, which runs into square kilometers.
Right.
They talk of hiring 4 to 5 lakh people in one single factory.
Wow.
And we are talking of employment of a few thousand or maybe a few 100,000, that's it. So that is a huge opportunity if the scalability can be delivered.
No, so how do we deliver that scalability? How do we get there? Because this is, I think, the nub of the entire conversation. Everyone's clear we are getting to Viksit Bharat. Everyone's clear manufacturing is the driver. Now the question is about how.
See, the OEMs around the world are looking at India, so they are looking at Indian manufactured goods. Ever since the pandemic was over, the way we have been receiving the inquiries from some of the largest OEM brands around the world in various segments. When we talk about electronics, it's not just the white goods or the mobile phones or laptops, etc. We talk about automobile industry completely. We talk about electric vehicles. We talk about medical devices. We talk about railways. We talk about aerospace. We talk about defense. We talk about outer space.
Wow.
So these are 9 or 10 industries which Keynes alone caters to in the electronic space. So it's every segment that is open and available for you to explore.
Let me just add on here, being the thought leader. I think we just can't be followers, and we can't just be, doing just the manufacturing, but I think leading. And I think that's going to be a very key thing for us to work on. Now, whether it's textiles or, the semiconductors or pharmaceuticals, as, we are talking about, I think it needs to be that thought leadership that India needs to provide to lead also towards the Viksit Bharat.
Yeah, I mean, an example of the world as sustainability. I think one of the biggest examples, and Dipali, you alluded to this question earlier. When we hear from policymakers, we hear from economists, there are two things that come in time and again when we're talking about our economy currently. Why is private industry not investing enough? Where is the capex? The second part is, are enough jobs being provided? Now, I think entrepreneurs in this country are some of the most resilient people, because you have to go through so much to be successful and move on. That it takes real grit and determination. But the ask today is, please invest more, please provide more jobs, please provide higher paying jobs. What is the response to that ask? And I'll start with Dr. Khurakiwala on this.
It's a tough ask. One aspect basically is that as industry, at least I can talk about our industry, as industry, science and technology progresses and you move to a higher level of doing things with more science and newer technologies. And we are highly regulated industry in India and worldwide. One of the things I continuously observe, there are regulatory mechanisms and regulatory people who manage this hasn't changed in the last 30 years. So that itself creates a dissonance, what is needed to be done and how it is to be done. Many times the regulatory bodies are not aware of a new drug or innovation.
In India?
In India.
Okay.
How to be managed. So we generally go by what happened in Western countries. If that is the same, okay. If something innovated in India, they have 100 questions to ask on the same subject. So that is a very massive structural gap we have in the country. And that needs to be corrected. Maybe this is true in other industry also, I am not aware. But this is one area which needs to be corrected. Second aspect is in terms of capabilities. From a regulatory perspective, it is available plenty in the country. Because of the kind of system and the rules and approaches they have, they are not able to access those competencies within the private sector which is available. So I think this is a very major handicap which will be there for innovation and new work done, because it takes awfully long time. I'll just give you one or two examples to illustrate. See, if I have to do for a new drug a phase 1 clinical trial, I go to Netherlands, I need ethics committee clearance. If I go to US or Europe, a 30-day period. And if I don't hear, I go ahead and do phase clinical trial. Here it is 3 months, plus after 3 months they can raise questions, so it gets 6 months. Now in a new drug at every stage, there are so many stages of delay takes place, you eat away of your patent life and you become non-competitive. So many of us chose to get it done outside India, even though we have capability to do. Yeah.
No, so that's an important illustration of how things can, make business easier. Ease of doing business can be improved. But then let me come back to my core question on capex. So my question is on capex. The ask is for Indian industry to invest more and invest more domestically. Will we see that cycle?
Yeah, I think so. Capex, in fact, as far as the pharmaceutical and chemical industry is concerned, the need for capex is limited. But when it comes to chemical part of it or biological, the need for capex is high, because it's a fairly complex technology and facility. And I think people do invest significantly in capex. But our industry, whatever may be reason, is not a kind of most industry where your capacity utilization is important. I think we work on keeping a fairly wide margin of capacity and the demand so that you meet your demand every time.
Yes, your perspective.
No, I'll just say, so when we talk about capex, I think the important aspect, and I don't know about the other industries, but I think the key thing would be about even investing in the indigenization of the supply chain. Because a lot of things when we talk about, and let's face it, when we talk about manufacturing and the key ingredients still come in from China. There are a lot of things that, India still is dependent on a lot of other countries for the supply chain. And the important thing would be when you're talking about capex will be very, should be done, whether it's for automation, technology, or also indigenizing the supply chain. For example, I'll just give you a small example. We set up a flooring plant in Telangana. Our 80% of our supply chain was dependent on China. Today, I would say that it's reverse because we set up the entire ecosystem on the whole supply chain here because it is it's the first time that a flooring plant of this size was set up in India. So I think for all of us, when you talk about capex, I think it is relatable. I mean, it is related to what you need in your field. But I think fundamentally, whether it's technology or whether it's anything, indigenizing the supply chain will be a very key thing. And for that, I think the investments will have to be done. The other thing is about manpower as well. So when you talk about that intelligent manpower or whether that skilled manpower that the world is looking at, how are you investing in that would be also very key to what you do.
I think on the point of manpower, we have a huge opportunity here in the manufacturing sector, don't we, Mr. Rajesh?
Absolutely, and as what Dipali said, India as a country, if you look at the skillful talent available, there are more than 15 lakh engineers passing out every year in India. Now that is the talent pool that's available in the country, which can be used in-house, it can also be used for global servicing. Now when we talk about specifically coming back to your core question of capex investment, see largely when people talk about capex, we always talk about tangible assets, whether the factories are coming up, plant and machinery being invested or so on. If you look at semiconductor industry, if you take the top 5 players in semiconductor, 22% of their revenue is invested in R&D. That is capex. That is the intangible that is getting invested for the future growth. And that is where the electronics industry, where the EMS industry and the semiconductor industry is certainly investing a lot of money in capex through the intangible route, which also enhances the employability of the skillful talent that's available. So as I said earlier, 20% of the world's design workforce of semiconductor are Indians. So that is Indian talent and Indian investment going in there.
That's amazing. So if I were to ask you, and let me start with you, Rajesh, that when we're talking about building this path to Viksit Bharat and all of these components come in, we want more scale, we want to service the world, we want to create jobs internally. What are the 2 or 3 things that we need to do to move towards that from an industry perspective?
See, one is certainly the speed of delivery, which Dipali already talked about. The speed of delivery is very important. And the global logistics, the global supply chain has to coordinate with that very strongly so that the speed of delivery can be done. Innovation is another very important aspect because we can manufacture. The customer can give me any design, I can manufacture and supply. Unless we focus on ODM, and do our own designs and OEM related activities in India, that is what is to contribute to the global needs, create the need for those products around the world. Today we are only copying the products that the world need. But if I can start creating the products that I can make world need, that is where the shift of global manufacturing to India will be.
I mean, when we have the next DeepSeek or the next manufacturing innovation, I think we're pretty much there in a lot of spaces, aren't we, Dipali ji? We're moving ahead with innovation as well. Like you said, thought leadership is where we need to take it forward.
Yeah, I think, there's a lot more yet to be done, but I think the important aspect, and I'll take it from my industry and talk to you, like for us at Welspun, I think when I talk about thought leadership, this is what we look at. Whether it's the farmers who are the integral part of that entire supply chain, how are you looking at the traceability that comes in? When you have the MSMEs, because I'll tell you, we work with more than 200 or 300 MSMEs in the whole ecosystem. How are they being supported in the, because they are the bedrock, whether it's in the credits or whether it's in the terms of technology upgradation. I think these are very critical part of what we need to really look at. And I think being the industry first in the terms of solution providing, I think could be a very key thing, what India can do. And I think that's what Wellspun is maneuvering towards. And I think the important aspect of saying that being that thought leader, being that industry first, and it's not just an OM sitting out of India, it is a true manufacturing prowess who is industry's first or the world's first, and who can disrupt the world, as you gave an example of DeepSeek, is where it is a journey towards Viksit Bharat.
Amazing, amazing. Do we need to move towards being the cheapest in that case? That has always been the question, right? When we compare ourselves to large manufacturing hubs. And Dr. Khurakiwala, most efficient, cheapest. Is it time to change that rubric?
I think affordability is important. I'm not too sure being the cheapest. Because I think Indian drugs are very affordable worldwide. And in fact, 50% of Indian industry is export today. So we are no longer an India-based industry, it's a global industry, as I mentioned earlier also. But the challenge for the industry would be new science and new technologies absorption. Because that is changing quite dramatically the contour of the industry in the future. So one is moving towards 2 or 3 new sciences. One, I talked of biology as a new science. I think one would see more and more personalized medicine coming into as a new science with genomics and all these processes helped by the speed with which the IT and AI is accelerating the change and the progress.
How much of AI are you using right now?
In research, we are not using too much of AI at the moment, but the other part of organization, one is using to some extent. And therefore, one has to see to what extent AI will help, but it accelerates the process. The real innovation, still you require people, because I don't think people have yet to replicate the uniqueness of our own mind and intelligence.
No, definitely not.
So a repetitive aspect, yes, AI can help you a lot extent, and a lower level of intelligence, not the very high level of intelligence you require for drug. The other area is the whole new science emerging in the stem cell area, stem cell research. And I think newer medicine will come out of that knowledge. Already a few drugs have started coming in. They're extremely expensive, but that is how the new science would move. Mainly because both genomic and stem cell acts very differently than the earlier existing treatment, because they can bind to a specific cell and treat a disease. So obviously this will all add up to a few more years we will live over the years.
So longevity. If India can be at the forefront of the longevity movement, then we've cracked that code.
That is right.
Yeah, amazing. Dipaliji, on the use of AI, and because I'm just wondering, that's going to be the one parameter we need to compete, right? Or do we? We have a large population.
Yeah. I think AI is a very important aspect, and there are these conversations about they're going to disrupt, the entire space in the terms of people and jobs. But I think as, Mr. Khurakiwala, Dr. Khurakiwala just pointed out, I think AI actually will facilitate a lot of things. I'll give you a small example, and it is, we've been talking about technology, but I'll give you a small example in manufacturing. I have towel counting, and we do millions of towels every day. So, that towel counting leads to human fatigue. So we have AI installed there. So as a result, the human fatigue is not there, and my, index of right first time is over 98%. Wow. So, these are the things that actually help you to facilitate a lot of things. The ability to predict, the ability to see. I'll give you a small example what we leverage in India. Just quick, fast one. In India, in one of the catchment areas, suppose my ticket size of buying a towel or a sheet was around $2,000. We, after a lot of analytics, found out that no, the ticket size could go up to around $4,000 as well. So these are the things that can enable to actually speed up business or an opportunity. So everything will have to coexist together. I think the fear of letting go people or fear of, but I think it's going to add on huge opportunities, what we can see.
Definitely. And in your sector, I suppose, more than ever, you will have to inculcate artificial intelligence.
Yeah. So certainly, yes, Tamansi, I look at it two ways. The AI being used in the manufacturing technology itself, but AI also being used in the product offering to the customer, because both are as critical. Now, if I talk of both the aspects, now when we look at these very large factories in China, Taiwan, etc., you have a single shop floor of 200,000 square feet, maybe 50 lines of SMT operating, being supervised by 1 or 2 engineers maximum.
Oh.
These are called dark factories or light out factories. They just stand in a corner and see what's operating. AI controls the manufacture. They see whichever machine stops, they just go and address that machine. So that is the importance of AI in the manufacturing side. Now when you look at AI on the product offering itself that's being made, a couple of spaces where Keynes has entered into. One is the smart metering solution. Right now we are talking about smart energy meters on the electricity side, where it supports the government to ensure that there are no leakages, the revenues are recovered well in time, but also at the same time the opportunity that gives for the manufacturing side, not just for India but around the world. Second thing is we have seen about the safety requirement in the railways. So we have acquired a company based out of Europe, which is AI-based sensor technology is used for the railway safeties.
Okay.
So that certainly minimizes the incidence of accidents that can happen, the property leakages that can happen on the railways network that is in the place. Yeah. So AI is certainly very, very critical.
AI is definitely going to be included. As we wrap up this conversation, let's start with closing comments. And I'll come to you, Mr. Rajesh, on the thoughts of India as a manufacturing hub, manufacturing as the key push for Viksit Bharat. Is this a distant dream or a reality waiting to happen?
So I would make 3 statements for this. For me, it's very clear on India being a manufacturing hub. So the 3 statements are, one is, it's not why India, it's why not India. Second is, if India can become the manufacturing superpower, it's not if, it will how fast it can. And third is certainly India is not an alternative to China or manufacturing. It is going to be the global manufacturing leader.
That's amazing. A round of applause for that amazing statement. But Dr. Khurakiwala, your take.
I believe India is already a very important player in the world. And this is all driven by manufacturing. And one of the uniqueness of our industry is it is not a mass-produced activity, because you have so many drugs for so many disease treatment. And that gives us a very unique advantage vis-a-vis China or any large Western countries. We are not in a mass production like many items. We are on a small product, and therefore our ability and agility to deal with the complexity of changing and other things is not only it is driven by new technology of AI and other things where you can reduce your cost and operation, but our ability to supply a large number of products, and that advantage is a very significant advantage India has, and this is the one we should continue to capture, innovate in our technology and this flexibility which it offers, and we are very good at that.
Excellent. Yes, ma'am. As we close, do you agree with that statement? It's a matter of not why India, but why not?
And I totally agree and endorse to that. Let me just give you one thing. I remember the time when we set up the first terry towel plant in India in 1993. They didn't believe that there could be a beautiful towel be made in India. To being the fifth towel in America today, every fifth towel made or used in America is made by Welspun. I can tell you there'll be 100 more companies that will be here who will be making world-class products, whether it is going to be in the terms of textiles, apparel, fashion, and also being on that table to contribute towards the thought leadership is what I can say. So I can definitely say India's era has begun, and it is that journey towards that Viksit Bharat we will see.
Wow, excellent. Thank you so much to all of you. Thank you so much to all of our panelists for speaking so clearly and eloquently and laying out the roadmap really of what we will see to Viksit Bharat 2047. With that, it's a wrap on this session. But before we exit, just request you for a quick photograph. Thank you.
Going to be at the forefront of India's growth journey going forward. Lots lined up for you. We've spoken so far about the markets and the direction that they're heading. And I thought that the insights that you got from that first panel are quite encouraging. The turnaround is not in the offing, it is here and it is underway. Don't miss the bus is the message that I took from that. Manufacturing, you heard from three very core participants in that manufacturing process in India. Certainly the pharmaceutical industry, of course, the textile industry, and the future, which is semiconductors, and hopefully we get more of the slice that you have that is currently concentrated in certain pockets in the world. It's going to be a very core leg of the manufacturing journey going forward. Now, what do you have lined up for the rest of the day? Of course, we're going to talk about certain insights that you can get from the mutual fund industry. We're going to talk a little more about how to open up the opportunity to invest to a lot more people. Currently, it's concentrated, if you think about it, in a very small part of the addressable market. So how do you widen that? We've got all of that lined up for you. But we've spoken about manufacturing. I do want to draw your attention to the fact that agriculture was a predominant contributor to India's GDP for a very long time. It has declined in the recent past, but it remains a very, very integral part of the Indian economy. And so it's therefore important to talk about India's farmers and providing guidance and insurance for their future, which is critical in keeping this sector on the growth path. May I now call upon the stage to deliver his keynote address, Mr. Nataraj Nukala, who is the founder and chairman of Shema General Insurance. Sir, please.
Good afternoon, distinguished speakers, delegates, and esteemed guests. It's a privilege to stand before you today at this pivotal moment in India's journey towards becoming a developed nation. Viksit Bharat 2047 is not just a vision, it's a commitment, a collective responsibility, and an opportunity to shape a better future for India of tomorrow. As a founder of Kshema, I'm deeply invested in this mission, not just as an entrepreneur, but as someone who has seen firsthand the transformative potential of financial power empowerment in rural India. So at Kshema, we are pioneering technology-driven, affordable, and most importantly, hyper-local rural insurance. Our insurance models impact where it matters the most. By providing customizable insurance solutions, we are ensuring that rural communities can withstand income shocks. So Kshema aligns very well with the Government of India's climate action goals like National Mission for Sustainable Agriculture, Biodiversity, and most importantly with our regulators' mission of insurance for all by 2047. The Bima Vistar program of the IRDAI to minimize the protection gap is a critical step in this direction. So let us work together to build a Viksit Bharat where every business, every citizen, and every idea finds its place in a stronger and more resilient India. Thank you all.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in?
customer that understands the risk, that is looking for a solution, and they know that insurance is one of the ways in which that can happen, right? So that's how we thought, like, probably that's a place where we would want to play. Because today, if you see, the market is there, because there are about like 38 crores of acres of arable land in India, right? But only 30% of it is insured, right? And there aren't any companies that are focused specifically on providing customizable products to the farmers directly.
No, 1 minute. Let me
Yes.
go back to that.
Sure.
You're saying only 30% of agricultural land or farmed land in India is insured.
Yes, as of now, correct.
So that shows you the extent of people whose livelihood depends on farming, completely dependent on vagaries of weather.
Absolutely, yes. And most of them are part of the PMPA program, like you said, right? Because before that, the awareness of insurance among farmers, it's not as high. And definitely IRDA has, with all these programs, right, has raised that awareness considerably. But still, there is a lack of having customized products that a farmer should be able to opt in versus just having to go with the flow is lacking at this point in the industry. And that's where we are trying to make a play using technology as our key focus area.
So how do you go about this? How do you go about this mitigating risk? Because that is a big part of the insurance bucket, right? You have to insure premiums, you have to mitigate risks, and there is already a large government-run program. How do you how do you dovetail rather into that?
Absolutely, very great question actually, right? So the government program definitely helps, right? But there are a lot of perils that are still very local, like what Nataj was saying, right? What we are looking at is providing customized products that are hyper-local, right?
Okay, well, that's the conclave coming in, telling us all about that's in store. But well, we shift focus to markets right now, and as far as markets are concerned, it's been a very, very quiet day of trade. So as far as the Nifty goes, we are looking at a 0.4% cut. I would say 0.3% cut for now. It's not exactly been a very volatile day of trade either. Don't go by the chart because it's actually in a very narrow range. And it's the same for the Bank Nifty. So after the initial sell-off that we saw in the first 1 hour of trade, we aren't looking at too much traction as far as markets are concerned. Let's take a look at the heat map for the Nifty, or maybe the contributors for the Nifty, to see where there is a pull and push with respect to the markets and the benchmark specifically. So we do have ICICI Bank, M&M and Trent weighing down on the index. On the other hand, HDFC Bank, Infosys and Tech Mahindra providing some amount of green, but it does seem like ICICI Bank and M&M are the two of the more weaker counters while dragging the indices downwards. It's not much of a change there otherwise. Let's take a look at the advanced decline ratio as well and how things are faring there too. And that will give you a better idea of the market breadth. So on the NSE, it's a significantly higher, number of declines coming in, around nearly 1900 as against just about 350 odd advances. The advanced decline ratio is not very favorable towards the advances on the Sensex or the Nifty either. So that's the other thing that you need to keep in mind. So, the market breadth is not favorable. That's clear for you to see. And the question really is that where we can go from here. But I also have with me my colleague Puneet Javeri, who's also joining us on the show here. Puneet.
Good afternoon, Nagam. And, before we move on, I think one stock that we want to talk about is, of course, Vedanta. Now, that's in focus again on the back of, its creditors coming together to meet today to vote on the demerger plan of the India entity. And that's very key because, the approval was received back in September of 2023. Today, both the secured as well as the unsecured lenders will come together to vote on it. And the plan needs an approval majority of roughly 75%. So 3/4 of the majority is needed for this demerger to go through. Why is this key? Because, for every one share that you hold currently in the listed entity Vedanta Limited, you will get a subsequent share in the other 4 listed entities as well. So eventually you will have a subsequent shareholding in the new listed entities which are essentially going to be 5, including the one that's on your screen right now, which is Vedanta Limited. Now, earlier the plan was to demerge the business into 6 entities. That has been now reversed to 5. I want to talk about, the resultant entities which will become, because the first one's, of course, Vedanta Limited. This will continue to house the Hindustan Zinc business as well as the copper business as well. The other one, which is key across all the 5 businesses, is the Vedanta aluminum business. Now, this will have the Balco smelters as well. So, the resultant entities for Vedanta is on your screen right now. When you look at the aluminum business, that will have Balco smelters as well as the bauxite mine as well. The third business essentially is going to be the oil and gas business. That will have, of course, Kane Oil and Gas that the company had which was in the news back in the 2000s. Vedanta Iron and Steel will be the 4th entity. This will house all the iron ore mines that the company have essentially in Goa, Karnataka, as well as the international mines in Liberia as well. And finally, the 5th and final entity will be Vedanta Power. Now, it will include, of course, the power plants which are owned currently by the company. So, these will be the 5 listed entities going forward. What's important is that the 2 of the 5 entities will be more than 1 lakh crore in value. That will be Vedanta Limited as well as Vedanta Aluminum. Vedanta Aluminum will be roughly about 1.1 lakh crores in terms of market value post its listings. And there you go. The other 3 entities also having a sizable share. So it's going to be a tectonic shift in terms of shareholding of this particular company. And just want to talk about finally what is the benefit to you as a particular shareholder, because you will now get exposure to 5 listed entities which are pure play in its nature. So the risk as well as return will vary across your metrics, and also the new formed entity will have a strong case for re-rating. That's something that analysts are penciling in as well, Agam. So these are some of the key facts you need to know about Vedanta Limited and the demerger. Watch out for some approvals and news flow coming on this aspect.
Yeah, this is a huge, of course, clearly game changing for investors of Vedanta, as Puneet mentioned. But on that note, let's get in Raghvendra Kedia, the founder of Prosperity Advisors, who joins us on the show. Raghvendra, good afternoon. Thanks for joining in. What are you making of Vedanta at this point in time, the prospects which could lead to the demerger, or rather which would be the results of the demerger? Your view here.
Good afternoon, Agam. Broadly, we currently see Vedanta Limited as a parent holding company, and which always, as a trend of the market, the parent holding company always trades at a significant discount. Whenever this holding company goes for a demerger, history has its way where we can see that there is a great value unlocking. So the sum of the part SOTP valuation kicks in, and which is also expected to be the case in Vedanta's proposed demerger. Also, earlier plans of demerging it into 6 entities was revised with, we believe, shareholders' input, also the lenders' input, where now the revised demerger entities will be 5 companies. So broadly, from a pure play commodity holding company, it will be a ferrous, non-ferrous, oil and gas, mining, and power company into separate listed entities. So we believe that this demerger plan would see hopefully an approval from the lenders, secured, unsecured, both sides, as well as a shareholders approval. And in a 1-year horizon time, we expect Vedanta from current price post this demerger to give a 20% return for a target around 500. Company has had a very great history of generous dividend payout. They have gone for significant debt reduction, and this demerger plans also would act as a positive catalyst. So we are upbeat about the corporate actions taking place in Vedanta, and we believe that once approved, this share would see a double-digit return in the next 1-year investment time horizon.
Got that view, Raghvendra. But another stock that's in focus is Bharti Airtel. After a block deal involving 5.1 crore shares of the telecom maker was in focus, worth roughly 8,475 crores, took place on the bourses today. My colleague Swami joins in with more on this.
Well, as the block deal for Bharti Airtel has happened, and as per the exchange notification also, it confirms that Indian Continent Investments has sold close to 5.1 crore shares worth around 8,485 crore rupees. That is nearly 0.9% of the equity. But what is interesting that has come out from this notification is the fact that Bharti Telecom, which is the another promoter entity, has bought nearly 1.2 crore shares of this 5.1 crore which was offloaded by Indian Continent Investment. Now, do remember that ICIL, that is Indian Continent Investment Limited is 100% owned by Sunil Bharti Mittal, while Bharti Telecom is jointly owned by the Mittal and the Singtel. Singtel owns around 49.4% stake in Bharti Telecom, while the Mittal Group owns close to 50.6% stake in Bharti Telecom. So clearly a shift of hand coming in from the Mittal-owned entity to the jointly owned entity, which also means that Singtel's indirect ownership or direct ownership in Bharti Telecom has now also increased. Now do remember that post this block deal, Bharti Telecom will own close to 40.7% stake in Bharti Airtel. And why this change of hand must have been done by the promoters? It could be because Sunil Mittal is looking to acquire nearly 24.5% stake in BT Group, which could cost him close to $4 billion. So some funding could be used towards that as well by Sunil Mittal, or this could also mean that Airtel could call for the balance payment of Bharti Airtel partly paid shares, and to make that payment Sunil Mittal might have sold some part of its stake, because this partly paid shares were issued at around 535 rupees per share back in 2021, and current value of the Bharti Airtel shares is close to 1,670 odd crore rupees. So it's a clear win-win coming in for Sunil Mittal if he would have done that as well. Now some details about the rights issue. So far we do not know when Bharti Airtel can call this amount, because the last date to call this amount was October 2024, and they had delayed this given the fact that Bharti Airtel was not in need of any cash, and there is no clear timeline as such given by the company. These shares were issued back in 2021 at 535 rupees, of which around 107 rupees has been called by the company, while the remaining amount of close to 422 rupees is yet to be called by the company, and this could be called going forward. Also, one more thing that could hint towards this is the fact that the derived value of Airtel partly paid shares stands at close to 1,632 rupees versus the current market price of Bharti Airtel, which is close to 1,670. So there is not much of a premium or discount coming in here, which could also hint towards the fact that Bharti Airtel could call for the partly paid amount anytime soon.
Thanks for that, Somit. Raghavendra, let me come straight across to you. Any kind of view that you have on Bharti Airtel currently?
Good afternoon, Puneet. Broadly, we believe that in terms of valuation metrics, Bharti Airtel still looks very expensive. If you compare it from the current price of 1660, it is broadly trading at 11 times its book value. In the last 3 years also, if you see the return on equity has been not impressive at around 11 or 12%. So at 1660 also, in terms of the earning per share, we believe, which is currently the EPS stands at around 40. So we are getting a price to earning PE multiple of around 41, 42, which makes it again very expensive. So in terms of a high ROE or a high price to book value or a low ROE or an expensive PE multiple, we believe that on valuation metrics, 1660 Bharti Airtel is an avoid. Considering this block deal, we believe that this is largely done in terms of paying for the partly paid right issue, because it's money on the table in terms of around getting the share to the promoter at around 525 rupees versus the current price of 1660. So hence the current block deal to raise some funds to pay for the partly paid rights issue. But from a standalone perspective at 1660, we would still not be very impressed at current valuation metrics and avoid at current levels for Bharti Airtel.
Right, Raghavendra, stay with us as we jump back to the NDTV Profit Conclave, where my colleague Alex Matthew is involved in a fireside chat with Ujjwal Jain. He's the CEO of Share Market at PhonePe.
Approach to this problem statement, saying that while we solve for access to markets and we are seeing the green shoots where typically you will expect a physical touch point to get into SIPs, but our platform, we are able to make that person trust the platform and do their KYC and set up the SIPs or open a broking account. Our next actually focus areas is actually how we take that wide space of providing access to knowledge and access to research at a massive scale, because that's a problem statement industry has not solved. I'll talk about a very unique number that you see, right? 5 crore PANs doing 20 crore folios, which means access to fund manager brought a lot of confidence in people, so they continued to invest more in SIPs, right? But more than 12 crore PANs, 20 crore demat accounts, average active user on a yearly basis around less than 4 crores.
Yes.
So access to knowledge and access to research is still not there at a democratic level. I think that's a problem statement that technology, computer science and AI will solve, and that's also a problem statement we are solving while we are solving access.
it's a problem that we're also trying to solve through the shows that we do. Incidentally, we do a couple of shows that directly talk to the mutual fund investor, and we've gotten a lot of traction. We get a lot of traction, as Sanjay sir was pointing out earlier today, on the query shows that we do as well. So, and people calling from various parts of the country that you probably hadn't heard of before, right? So we get calls all the way up from Kashmir as well as down south, and a lot of calls down south as well. But having said that, what I'm trying to get next is, and you spoke about this, you spoke about access to information. Some part of that is what we're trying to do on an ongoing basis, but you need so much more than that. What you're trying to do is create a differentiation from what somebody else might do, in that you're providing information that is cutting edge, that is easily accessible, and that is insightful, right? What is the role that you think artificial intelligence will play there? Because this is a little bit of a developing area. We don't know where this is going yet.
So we have been using AI for a while. So we actually categorize AI across a couple of broader categories. So one is how AI enable access to markets, as we were talking on that aspect. The other is access to knowledge, which is an opportunity to solve, access to research, access to insightful information. And third is access to personalized experiences on a DIY basis. And those experiences not only is about providing contextual experiences, but also about providing trust and safety.
Yeah.
So when it comes to access to market, if you know that on KYC, one of the biggest bottleneck was liveliness detection. Like a lot of innovation has happened on machine learning models to innovate on that, and that is why the entire KYC journey is largely foolproof because of the ML models that have been deployed for liveliness. So that I think will continue to improvise as an industry level. Regulators will further build confidence on those journeys. So I think access to markets will be benefited by AI. Then comes to access to knowledge and access to information. There, the interesting part is AI is a very natural extension to quant research. Now we have been building quant research platforms since 2016. To make it available to retail investors. Because institutionally, if you see, there are a lot of, globally also, it is well served by most of the institutions to affluent family offices and etc. But how do you make that available at retail level? Same like institutionally, that quality of information, but because your reach is at a consumer internet scale, you can build a great business also while you provide that right information. I think that is where we are extending our quant stack to enable AI, because quant research uses time series data.
Yes.
So we ingest data across the board from all exchanges, etc. And when we look at the natural language, when it comes to social media, when it comes to exchange filings which are still in PDF formats or unstructured data formats, we have started able to ingest that into our systems and bring that into an actionable information form. So we just launched sentiment factor also on those analyst sentiments. So I think AI is helping us to actually even leverage unstructured data, refine it to a level. Right now we are using it under our research models. At some point, some of these will come on in our chat experiences and etc. So I think AI will help on that access information.
And from
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Welcome back to Profit Buzzers. UBS has upgraded Max Healthcare to a buy rating with a target price of 1,200 rupees per share. Varsha joins in more on this report. Varsha.
Thank you, Puneet. 18% of upside is what we are speaking about, as UBS has upgraded Max Healthcare to a buy from neutral. Now, this is on the back of strong growth potential and efficient execution of expansion plans that the Max has. The brokerage firm believes that the market is yet to fully appreciate Max Healthcare's visibility on bed addition, which it sees as a key driver for the valuation going forward. And UBS has also highlighted the hospital hospital chains' ability to ramp up the occupancy rates and achieve the break even efficiently. Also, Max Healthcare has different, so they venture into different hospitals which is going to be break even. You have Lucknow, you have Dwarka, which just which is into the break even mode. The Max Healthcare's asset light model and strong operational cash flow generation further bolster its investment case according to UBS, and UBS expects the company to generate 8,000 crores in operating cash flow over FY 25 to 28, which will help its capacity expansion further.
Thanks for that, Varsha. Let me go across to welcome and actually Akshay Bhagwat, a Senior Vice President at JM Financial, who's joining us in the show again. Akshay, thanks so much for joining in. Let me get in your view really quickly on Max Healthcare, a stock that's done very well for its investors. Any kind of outlook for you on this particular chart?
Good afternoon. So the price setup front, if I look at the weekly charts of Max Healthcare, the trend is absolutely perfect and strong. It's in a healthy uptrend. It's just that the last 7-8 trading sessions have been slightly choppy, but considering the broader trend, I believe 950 is a very strong support for this stock. And eventually, I'm looking at targets of 1200, that is with a time horizon of a month. And further, if it moves up 1300 to 1350 is what you can look forward to. So till 950 holds, you can be on the buy side or consider building a long position in this stock at the current levels.
Got the view. Raghvendra, would you concur with this particular view?
For us, Max Health is a total avoid. If we look at the valuation metrics, the full year EPS is at around 10, earning per share of 10 rupees on the full year basis. That gives it a P multiple of more than 100, which is astronomical valuations in terms of the P multiple. So also the current shareholding is around 24%, which is also not impressive. So on the valuation metrics, it's an avoid at current levels. Unless the stocks correct significantly, we would continue to avoid it purely basis on this 3-digit P multiple, which is currently trading at.
Well, let's put the spotlight on Zen Technologies then, which of course is reacting to earnings right now. And we have Anushi, who's joining us to tell us about why the stock remains under pressure, despite the company reporting an almost 30% increase in profit. Anushi.
Hey Agam, so if you're looking at what has happened with Zen Tech, now the company is in focus after its Q3 earnings, and the major talking point about this is the lack of new orders that it has seen by the end of the third quarter, wherein there were high expectations built that from Q3, Q4 onwards there would be an uptick in terms of where the order inflows are concerned. Now, firstly, if you look at the broadline numbers, now revenue has majorly remained in line with what the guidance is, 53% growth here at 152 crores. The company has achieved almost 72% of its guidance by the end of 9-month FY25 picture, which is a guidance of 900 crore, which remains unchanged. EBITDA has seen a 4% growth, but margins stood at 29% as compared to 42.7%. But as highlighted in the earlier quarters as well, that for a company like Zen Tech, margin profile has to be, the guided range is given in 35%. Due to the product mix, there are variations in terms of where the quarter-to-quarter performance is concerned. That is why we are looking at a variation. But overall, if you look at the 9-month FY25 margins, again, they are in line with the 35% of a range. Now, coming to the order book of the company, the order book stood at about 16 crores by the end of December 2024. The expectation was that the company will clock in orders of around 1,200 crore by the end of this year. But currently, as per the management commentary, they are currently looking at 800 crore worth of orders in terms of where the domestic orders are concerned by this time, and these would be executed, these would be in the pipeline till the second quarter of next financial year. So it's the lack of new orders which is a concern amongst the investors in the street, and that is why we're looking at a significant terms of a downtick for Zen Tech's performance in trade today.
All right, Anushi, thank you so much for getting us all those updates with respect to Zen Technologies. But we, in fact, did catch up with Ashok Atluri. He's the CMD at Zen Technologies, about the prospects of the business looking forward. This is what he had to say. Listen in.
The orders, we actually anticipated that the orders will start in the end of Q3, and, substantial orders will come in Q4. But they have got delayed, and I think that must have caused some concern. But at this point in time, we are, we feel that the orders will start coming in Q4, but they may spill over to the, Q1 and Q2 also the order we're getting, but the execution will also start pretty early. So I think the lack of order is something the shareholders are a little concerned about. So I think otherwise the government is accelerating its purchases. We know a lot of product requirements that are coming up, and again, we have been saying that in terms of the average CAGR that we have aimed for the next 3 years, we are reasonably sure about achieving that CAGR rate and deliver what we have promised.
Right, so that's the management of Zen Technologies telling us about the order book. Ravindra, do you track Zen Technologies? Your view on this particular company as well as the sector?
Broadly, specific to Zen Technologies, if you see what we don't like, I'll just cite out those reasons first. The promoter holding has gone down, currently stands at 49% from earlier around 52%. That's a yellow flag. There has been a significant jump in the other income, so which makes the earnings very volatile. The margins have come down, and in spite of this great stellar earnings this quarter, still the current EPS of the company is at around 24, so which gives it at expensive valuations in terms of the PE multiple. So based on a reducing shareholding pattern, volatile other income, margin pressure coming into play, we would continue to avoid Zen Technologies at this juncture of around 980, unless the stock corrects at 15 to 20% in terms of a price correction. We would revisit their levels again. And broadly, also on the defense sector and IT defense sector, we have a wait and watch approach currently based on the froth in terms of the valuation and P multiples.
Okay. Akshay, come in on the defense sector. Actually, let me talk about one company which is at the foremost of the defense sector, and that is BEL, Bharat Electronics. This is also part of the Nifty 50. After a brief pause, it does seem like it's continuing to fall once again, and it does seem like it's making another low, recent low. How do you read into this? Do you think, one, would you initiate fresh shorts at this point in time?
Well, looking at the price setup, the short-term price setup definitely is negative. If you look at the week-on-week charts, last week we broke the level of 256. So that just was the momentum trigger for the stock to be on the sell mode. And further, with the broader market breadth weakening and the sectoral outlook being slightly negative for the short term, the chances look high that the stock is heading for levels of 220 to 225 on the short-term price chart. So there is where the stock is heading for. Right now, we would not recommend a buy. It's still weak on the short-term trading chart. So if you are keen on the short-term trading front, 225, 220 is the downside targets you can look forward to, with a stop loss of roughly around 257 on this trade.
Okay, well, on that note, we are going to jump back to the NDTV Profit Conclave, and this time my colleague Mahima Vajrajani is in conversation with Ajay Agarwal. This is a fireside chat. Ajay Agarwal is the Group CEO of Reed & Taylor. Listen in.
If we were to double our capacities, we have to double our trade, we have to double our manufacturing capacities. What I would need is a trained workforce. The trained workforce will not come just overnight.
Right.
In that, I think the government needs to take up that objective very, very seriously and get this, and it will not only generate employment,
Right.
it will generate employment in villages,
Correct.
in small towns, and putting up manufacturing capacities in terms of apparel manufacturing capacities.
You rightly mentioned that, putting up manufacturing facilities and trained labor is something, that will really boost when it comes to the textile space. Product-linked incentive schemes, this is one of the things that has been a game changer for a lot of industries, including the textiles, right? I want to know as to, how it's been a game changer, first thing. And secondly, what more, policy changes that you have in mind can government actually, take into consideration that will boost, the textile sector overall, and we reach that 350 billion mark by 2030, earlier than 2030, like you rightly mentioned.
See, the PLI scheme has played a very crucial role or critical role in boosting productivity, capacity utilization, and at the same time putting up new facilities. See, what has happened in terms of technology upgradation, the existing units which are there, let me put it at my own end. In Reed and Taylor, we have basically doubled our capacity in last 2 years just by virtue of, with incentive of PLI, secondly, technology upgradation, and trying to rationalize processes with the help of AI, with the help of new technologies which are coming up. And that is what is the most game changer.
Right.
Secondly, recently government has come out 2-3 years back, that PM Mitra scheme. That has also is going to give us a results starting down the line 2 years, 3 years. And the last year government came out with textile parks in various places. They have allocated some 10,000 crore which for setting up this textile parks in various cities and other things. And I'm sure this is going to evolve a new manufacturing capacities coming up in the respective areas. Till now, let me also say one thing. We are having 23% of the world's share of cotton production.
Right.
We are the largest cotton producing country in the world.
Right.
And we are also largest cotton exporting country, either in the form of fiber or in the form of yarn. If that fiber and yarn is converted into the fabric and apparel in India itself, the delta is 3x. So that is where we need to concentrate on and need to move on.
Right. You very nicely mentioned that automation is kind of reshaping the way things are being manufactured, and not just being the manufacturing field. In fact, even when it comes to training people, things are changing. What has that change been like in the textile space, and also how is Reed and Taylor as a brand adopting those changes, and what are more changes that you look forward to when AI comes into picture?
See, when you look at AI, the AI has been majorly in textile industry, been helpful for two aspects. One, the biggest contributor is CRM, the customer relationship management.
Right.
That is something which is very, very critical, and AI has helped a lot in customer relationship management in terms of looking at their behavioral purchases previously, then augmented reality, virtual realities basically. Those things have in fact giving us a history. With their browsing history, I am able to understand what is my customer's preference, which area the customer is looking at. Now let me put it this way, in last 1 year, what I have been seeing that the customer preferences in tier 2 and tier 3 cities.
Okay, that's the management of Reed and Taylor telling us about the role AI can play in CRM, that's customer relationship management. But I'm going to put the spotlight back on ABB India. Well, it's reacting to a good set of numbers. What we have seen is about 22% growth in its revenue. Its EBITDA margins have expanded considerably to, in fact, coming in at around 19.5% against 15%. And this is on a relatively high base, mind you. So this time last year, we already were seeing good improvement in ABB India's numbers. And it does seem like that traction continues there. Now, ABB India currently, the price, it does seem it's gone into the red. But that said, it did start the day with some good price action, positive price action. Net profit consequently is moved up around 56%, but of course there are certain one-offs as well which play in favor of the bottom line. I'm going to give you a quick update with respect to what was said in the conference call as well. So firstly, they did say that revenue growth was led by electrification and distribution solutions. They also saw margins uptick will continue in the quarter, and that was largely on account of better price realization and leverage of higher volumes. Moreover, orders, while they were down 14% on account of large order in the motion and process automation last year, well, on the whole, the order inflow also looks good at the moment. In fact, its current order backlog stands at around 9,380 odd crores, which gives them that much more visibility with respect to what is there in store. Now, that's as far as ABB India is concerned and how things have potentially panned out. But I'm going to go across first to, well, Akshay, and ask him about what he makes of the price action and the charts on ABB India. So, Akshay, this one is for you.
Well, see, the trend is still negative. It is just that there is a temporary trading support around the levels of 5,000. It is just a matter of time today after how the reaction would be to the stock post the results which you mentioned, whether it manages to hold 5,000 or not. In case it breaks, mostly we are heading for levels of 4,700, and that would be a proper level to take an entry in the stock from a risk reward perspective. So at the current levels, it's not to be bought. Let some momentum catch in. If not, doesn't break 5,000, maybe slightly on strength about 5,500 is what gives me comfort to buy. But at this time, it's an avoid. Wait for levels of 4,700 to take a fresh review on the buy side in the stock.
Got the view, Akshay. Another stock that's in focus is Suprajit Engineering. Now, the company did report its Q3 earnings in the last week. Why it is in focus is because it was a very strong performance by the company in a quarter that was not expected to have too much going for the company. And the reason is that in the previous quarter, they did an acquisition of SCS, which is from the insolvency proceedings in the export market. Now, specifically, they had a lot of manufacturing facilities in Poland as well as in Morocco, but it also impacted the profits. So profits in Q2 was down 96% to almost just about 1 crore versus about 40 odd crores. So, that's one of the key aspects that was expected to continue in this particular quarter. Expenses as well as the rejig of manpower there was expected to have impact on its EBITDA. But in fact, the company's reported a 14% growth in revenue. It's also increased its EBITDA by 11.2%, which is a big surprise in this particular quarter, coming in at 96 crores versus estimates of 85 crores. This is, of course, increased the margin range, while on an overall basis, it's down by 37 basis points. But, on the divisional side also, you see the domestic cable business has helped the margins, and net profit was down 16%, but that has to be taken in conjecture that despite employee cost going up by roughly 20%, finance cost going up by 45%, both because of acquisitions, it's a very strong quarter for Suprajit, and we've seen brokerages come out and upgrade the stock as well post its downgrades in the last quarter itself. So overall, while the share price performance over the last week has been, somewhat subdued, but, it could have been a much weaker quarter in the context of auto component makers. And, in fact, we even spoke to Ajit Kumar Rai, the founder and the chairman of Suprajit Group, about their growth plans for the coming quarters with exports in mind. Listen into that conversation.
The SCS transaction has got two tranches. The first tranche was the European side of it, and second tranche is Canada and China part of it. The first part is it been done, which has got the plant now in Morocco, and of course they had earlier plants in Poland. That has been a completely loss-making side of that business, whereas the China and Canada part of it, which will be concluded by March.
And now we move back on to the NDTV Profit Conclave, where my colleague from NDTV, Nikunj Garg, is involved in a fireside chat with Prasanna Mohile, the National Head of Corporate Affairs and Executive Board Member at Pernod Ricard India. Listen in.
Tell me something that your journey in this country, that is Pernod Ricard's journey in this country, has been almost a 3-decade-long journey. What have been your lessons in that journey? How do you see the company going forward? How do you see the entire industry of conviviality, since you are a major player in that industry? And as we have been hearing a lot, the premium segment of the economy growing, and that segment also grows in your industry and makes your company all the more an important player. How do you see the last 30 years and going forward, your journey in India?
Thank you, Nikunj. As we all know, Pernod Ricard, many might not be knowing, but my convivial folks, they know Seagram's more. So in last 30 years, our journey started in 1993, immediately after globalization and liberalization era. And it was founded in 93, and I think the production started in 94. And from there on, I think we take pride in saying that the premiumization was introduced in India by Pernod Ricard there. And we initially started from, say, a volume of 1 lakh cases to 65 million cases today, and leading the industry in India. So our journey, we have always partnered with the growth of this country. As the economy of this country consistently grew, we also grew with the economy of this country there.
So you are the one who made alcohol expensive for all of us, basically. You are the one who brought expensive alcohol to this country.
So we introduced, as I said, premiumization was something which was introduced by Pernod Ricard to the Indian consumers. To get that kind of a quality to our consumers, that experience, it was Pernod Ricard who initiated that. So with premiumization, there comes a cost.
Yes, I mean, jokes apart, premiumization and better quality and a global experience is something that the Indian consumer today demands. And almost every sector we have now companies which are global companies like yours, which Pernod Ricard is a global giant in the industry that you operate in.
Yes, so we've been a responsible company in this field, and we knew that there is a lot of scope in the country to grow in the premiumization segment. And year by year, if you see, there's been a lot of potential for the whole industry today in premiumization segment in India. And that is where, in a very planned way, we went ahead year by year, and this is where we are today.
And Mr. Mohile, I must ask you this question because yours is a sector which is seen more from the prism of revenue in this in various matrix. But the theme of this conclave today is Viksit Bharat, a blueprint for 2047. And our Prime Minister has been very insistent that by that time he wants to see this country as a developed country on all the global platforms. In fact, that reminds me that he recently went to France, met the French President, Mr. Macron, where your leadership was also present in those meetings. So how are you partnering, your sector, your company partnering to see a developed India's journey coming to fruition by 2047?
That's a nice question, Nikunj. I mean, recently, as you've seen, the Prime Minister had been to France. There had been certain bilateral discussions there. Our group CEO, Mr. Alexander Rika, was also present there as one of the speakers. And you would see that almost around 850 companies today are investing, French companies are in India. I would say that in terms of volume and scale, Pernod Ricard would be somewhere around first 3 or 4 companies in India who's invested so much here and being part of the growth story of this country. So we always have played a very, very important role in getting the French investments here. My Pernod Ricard India CEO and Managing Director, Jean Touboul, he's also the President of Indo-French Chamber of Commerce and Industries, who guides the French companies to come here in India and invest in various parts of the state. So we are doing our bit also in other sectors in guiding the other French investment coming in. So Pernod Ricard has been one of the very, very important, we have a very important role to play in the economic growth of this country today.
That's very nice that, not only your company has been driving the growth potential of the sector that they are in, but they are also inviting other French companies to invest in India, partner in our growth story. Now, let me also ask you, since we are talking of growth dynamics and since we are talking of growth potential in the country, what are the kind of revenue contributions and what are the kind of revenue projections that you see of the sector that you operate in? And how is it helping? Look, a large part of the state government's revenue is obviously dependent on your sector. So how is it contributing in the social aspect of job creation, education, and densification, so to say, of the work that you do in the various industries and fields?
Well, Nikunj, this sector plays a very important role in contributing to the economic growth, as I said. In terms of job creation, industry as a whole, I would say, direct, indirect, taking the induced economic theory into place with the complete value chain, we generate as an industry almost 50 lakh jobs. And
50 lakh jobs annually.
Annually. And Pernod Ricard contributes to that almost 9 lakh jobs. And out of those 9 lakh jobs, 6 lakh jobs are into the agriculture sector. If I talk about the revenue contribution, the industry contributes almost around 3 lakh crores. Annually. And Pernod Ricard directly contributes almost 23,000 plus crores. And to the GDP, it contributes almost 39,000 to 40,000 crores today. So that's the kind of contribution we do to the growth of this country. And when you asked about how we contribute, if you have seen the times of COVID, when the entire economy had collapsed, at that point in time, it was this Alcobev sector who stood by the government there. And this was the only source, I must say, for government for the revenues that time. And we stood by all the state governments in whatever bit we could do. So that is the kind of potential this sector has.
You were talking about agriculture job growth and 6 lakhs job annually being created in the agriculture sector. Look, at the bottom of the pie, and particularly as our previous speaker was also talking, in tier 2 and tier 3 cities, in smaller towns, job creation is a challenge. It is a challenge that Government of India also wants addressed. Various state governments also want that challenge addressed, and through multiple initiatives and schemes, all the governments have at all points in time tried to answer that crisis or try to sort of respond to that crisis. So do you think, Mr. Mohile, that your industry has been able to make a positive impact as far as the agriculture sector is concerned, because a lot of your raw material actually comes from the agriculture sector?
Yes, you are right, Nikunj. Basically, if you see, as I said, out of those 9 lakh jobs, 6 lakhs are into the agriculture sector. So my main byproduct is grain. And today, if I see that most of the job creations which are done are on the urban side, but on the rural side, there is not much investment which has been done. So Pernod Ricard now, as I put in sometime, I was to tell you that we are also going to invest further here in India, especially in Nagpur, for the 200 million euros malt maturation plant in time to come. And if you see, we would be needing almost 5,000 tons barley per month there. That is 60,000 tons around annually. Our rough estimate says that it will contribute almost 80 to 90,000 farmers in the state of Vidarbha, where there is a lot of distress today in the farming sector, in the agriculture sector. So Pernod Ricard is one who basically believes that, until unless the rural economy is not linked with the urban economy there, then the real sustainable development and the dream of Vikasit Bharat will never come true. So there has to be a proper linkage between the rural economy and the urban economy mixed together, which will really, we will see the dream of Vikasit Bharat coming true.
Well, that also is something that the policy makers have almost always spoken about, that if the country has to develop, the rural areas, the Mofussil towns, the smaller towns have to develop fast. But I'm glad that you bring me to this part of the sustainability aspect of your industry, Mr. Mohile, because one of the criticism of your industry sometimes is that while you are making your own segments premium and a lofty urban picture is there, but in the end use where you are drawing your raw material from, the sustainable practices remain a challenge. Have you been able to, since you are such a giant in the industry, since you are such a you have such a legacy in the world, not only in India, have you been able to move your operations in the sustainable directions, and if yes, what all have you been able to achieve so far, and what are your future plans?
See, we've done a lot of initiatives in this. Sustainability is basically is a core value for Pernod Ricard today. It's in the heart of Pernod Ricard. We value our Mother Earth and the community at large. By eliminating our monocartons today, we have reduced the carbon emission by 7,310 tons annually. That means conserving almost 250,000 trees annually there. And by 2030, we aim to reduce our packaging emission by 75,000 by 2030. So we are very conscious about the environment. We are very conscious about the community around us. So we do a lot of initiatives in farmer upskilling, helping them for a sustainable farming there, on how best they can get their yield. We focus on women empowerments. We focus on digital educations. We've also had a tie-up with the Marycom Foundation to promote the rural sports. So Pernod Ricard has been very conscious about the role Pernod Ricard has to play for sustainability.
And when you talk of sustainability, one of the important parts is that you mentioned in brief, but I want you to discuss it a little more about it, about the farmer upskilling or the upskilling of your partners, as you call them, on the ground. So in terms of rural economy upskilling overall, are you investing there, or are you taking people out to get trained, or are you showing them new sustainable practices in the farmland? What is the approach that you're applying? I mean, how is it that you think that your practices, which largely draw from Mother Earth, become more sustainable in times to come? Because sustainability, as I said, is the way to go forward, and it will always remain one big initiative for a corporate giant like yours.
Yeah, of course. And as I said, we help them train the farmers that how best they can get their yield, how, the wastage of water should not be there, how it can be used optimally, and basically help them also get the right value for their produce today, which is a challenge in the farming sector, in the agriculture sector. So Pernod Ricard also plays a role in helping them develop a sustainable farming in this way.
Not wanting to take too much of your time, but let me ask you last one or two questions, Mr. Mohile. One of the questions is that you say that your industry contributes a large pool to the revenue side of the state governments, also to the various other activities that you undertake from social welfare, etc. But yours is a very highly regulated industry. Going forward, as the country moves towards a Viksit Bharat, the experience of the developed world in terms of dealing with this industry is something, I would say, completely different from what we have in this country now. Do you think, in your mind, as the industry leader, as the as an important player of the industry, do you think that that experience should change your interface with the governments, your interface with the consumers? What kind of change that you would desire in coming years, and what is it that you will think in your mind that will change the contours of the industry?
A very good question, Nikunj. I'm happy you asked this. As I told you, the contribution of the alcobev sector to the Indian economy today, to further grow, I think today this sector needs an industry status. We are struggling to get that today, and if this sector comes into the mainstream sector, then you would see more investments coming in and the sector growing much more faster than what it is today. So we need government's focus basically to get this sector into the mainstream sector, give them the industry status which is required. This industry is a very, very heavily regulated industry. So I feel that government, rather than seeing it only a partner to earn revenue out of the alcobev sector, they should help in ease of doing business also, because today there are so many multiple regulatory hurdles we face across the country in various states. So if government helps us basically to grow, then they have to also look at doing ease of doing for this sector, which can promote further growth.
And you're right, because ease of doing business is something that every government, state government champions, Government of India champions, every state does its investor summits and says that, we are the most investor friendly state. So probably they can also look or consider your demands which can be logically or reasonably met. Now, let me ask you my last question, Mr. Prasanna Mohile, of the day. As I said, you are a friend of NDTV and we will keep asking you various questions. But you said that you are making a big investment in Maharashtra, Vidarbha, Nagpur, where you have made some 200 million euro investment already. So do you think that going forward, your bigger investment plans are around this region or other regions? Do you find something more attractive in the western region that makes it more investor friendly for you, or do you think that you can expand this into various parts of the country provided the governments become, as you said, more into ease of doing business?
Well, we've invested more here in Maharashtra. Maharashtra is a very progressive state. Like other states also today do have a very progressive policy, but then our initial investment of the manufacturing facility started here in Nasik. So after experiencing the success in one location there, our future plan of investment, we thought that should be in and around Maharashtra in the central part. And Nagpur was selected because it is locationally, we have that advantage of Nagpur being in the center of the map, and logistically also it will definitely help us doing it. And the important factor always while we invest in any part is how progressive the government is, because this industry does require a partnership with the bureaucracy there, with the administration, the government there, the policy makers. So today, when we see very recently our Honorable Chief Minister of Maharashtra, Mr. Devendra Fadnavis, had been to Davos, and there were almost 15,70,000 MOUs were signed for Maharashtra. That shows that, there is a lot of euphoria which is generated in and around Maharashtra today because kind of speed they are approving various projects. And similarly, basically it was this also that under his dynamic leadership of Mr. Devendra Fadnavis, we thought that our investment would be safe if we invest further in Maharashtra, and that too in Nagpur.
And you think other state governments are also kind of expanding that horizon where you can work in? My last question to you. And where you can expand your horizon, or do you think that there's a different kind of landscape that operates and that needs to improve?
No, as I said, all the state governments today, after 2014, once the ease of doing index started and it was monitored by Niti Aayog on various parameters, each state started competing with each other. So there was a very healthy competition between all the states there. So everybody tries to see that, how best I can compete on various incentive packages which we can offer to the industry. So there is quite healthy competition coming in. So I would say yes, Maharashtra, because we've experienced success in Maharashtra, we have come here. But other states also are not lagging behind. Everybody has good dynamic industrial policy in place today. And if you would have been to Davos, you could see all the pavilions of India were completely chock-a-block by various investors visiting them.
Shortly we will have a Davos in Bombay, and we will have it with NDTV. Why go to Davos all the time, Mr. Moile?
Yes, I think if this dynamic leadership continues and the political will is there, I think Davos will definitely come here. 15,70,000 crores is not a small amount, Nikunj. So I hope it happens someday.
Thank you very much, Mr. Moile. Thank you very much for joining NDTV.
Thank you, Nikunj. Thank you for having me once again. Thank you.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
कि अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research.
Are there for you and other groups to really enhance the Indian manufacturing prowess? Because without that, the goal of Viksit Bharat might not quite be achieved.
So we feel very confident about that, especially after what we've seen with our electric vehicles and what we've seen with our tractors. So India clearly has the ability to manufacture at scale, to manufacture at a lower cost. It does require a few more efforts for that to happen, but we've been able to show this with our products. And we've had many questions over the years around how will you compete with all the foreign companies coming into India. There have been many who've written us off at multiple times over the last 20, 25 years as well, saying that the entry of such and such company is going to be the death knell for us in either automobile or in farm. And our teams have been able to show that they can manufacture in India at strength and be able to compete with the global majors in a very significant way. Over the last year as well, on electric vehicles, there were a number of questions saying, how are you going to compete if such and such company comes into India? And our response has always been, our products will speak for themselves. And that's what they're doing today. And this is a strength that not just us, but we see other Indian companies also bringing to the fore and essentially setting up the opportunity for India to be a manufacturing hub for the world. And that is what we aspire to, and that is what we feel confident we will be able to deliver in our path to Viksit Bharat.
Okay. And I'm going to make this equal parts manufacturing as well as services, because less Mahindra and Mahindra, I mean, yes, the dominant share is auto. There's lots beyond that, right? And would love to talk about that too. But just for a moment, because you mentioned that point, I can't not invoke that conversation, right? This whole talk of one Tesla coming in, the Chinese companies, BYD, etc., making their presence felt. Now, your numbers, booking numbers speak for themselves, but I'm still trying to understand, not just for Mahindra Group, but for others within the auto ecosystem. How would the industry face up to deep-pocketed global car companies or vehicle companies wanting to create their foothold in India? Just trying to understand.
Neeraj, that's a question we've been answering for the last 25 years. Because that's exactly the question that was there 25 years ago when various deep-pocketed global players came into India and Mahindra was written off as dead, saying you're not going to be able to compete with them. Right? That's happened on multiple occasions. Today, we have the products that speak for themselves. And in fact, we went to the extent where at our launch, at our test center in Chennai, we actually had some of the best vehicles in the world there, along with our vehicles,
And we invited the folks at the launch to drive all of them. And our vehicles stood up extremely well against some of the best vehicles, some of which were priced 3 times or 4 times our vehicle as well. So that confidence today comes from the people we have, from what they've done, from what they've developed. And therefore, we feel fairly good about the fact that we can compete with various folks. And I'm glad you were talking about services as well, because we do remind everyone we talk to that auto today is just 1/3 of what we do. Mahindra plays in 70% of India's growth over the next decade. And we are in multiple sectors, and some of those are growing very well and contributing very significantly to our businesses as well.
Yeah, most certainly, and I'll come to that. Just so sorry, if my question came across that Indian companies will find it difficult to compete with global brands, no, because in some sense, Indian companies are global brands unto themselves. Your tractors in the US, I mean, making a mark, right, and Indian tech companies making a mark globally. So I didn't mean it that way. What I was just trying to understand, because a lot of these global brands are very famous per se, and there might be an allure for that. But I get the answer. You're saying that the products for you and for other companies will speak for themselves. Now, my question is the current economic momentum in India, which is maybe a bit slacking in Q2, picking up slightly in Q3, conducive for Indian companies to think big in the near term? Is this a passing phase, or is it difficult to say whether this intermediate slowdown that we have will get over in a hurry or not?
So there, Neeraj, we feel that the fundamentals in India are very strong. And they are further strengthened by some of the actions over the last few years. The digital stack today makes it much easier for us to do business across multiple sectors. Improvement in infrastructure is starting to bring logistics costs down. And a combination of all of these will enable the economy to grow even faster. We see this recent slowdown as a blip, and with some of the actions taken, we feel that we will be back on track. I personally do expect that we should be seeing growth north of 8% in the near future as well. And that's something that I think the Indian economy will be able to deliver, because we've grown at 6.3 to 6.5% over the last 30 years. And there are a number of positives that we have in place today that we didn't have over the last 30 years. So we should be able to see a faster growth rate. And we're investing in a significant manner across multiple industries. And we feel very bullish about the India story.
Yeah, there's some bit of pivot that this budget has taken, if you will, right? That there is a focus on consumption being given. It may be a small portion of the overall economy size, but it has a multiplier effect. The moves taken in the budget, if you will. Do you reckon that this move towards 8% growth, and I heard you say near future, it may be 1 year, 2 year, 3 years, depending on where you believe. In fact, would love to know that as well, if you have a kind of time gauge in mind. But 2, would consumption and manufacturing both play an equal part into this, or can it ride on the plank of manufacturing alone?
It has to be both, because consumption is what will drive further private sector capex. And there has been concern, and rightly so, that private sector capex hasn't quite kept up, and government capex is really what has taken the economy forward over the last 3 or 4 years. But private sector capex comes in when capacity utilization goes higher. That's driven by consumption. And therefore, we feel that this is the right path to take. And this consumption boost will enable private sector to put in even more capex, and that creates a virtuous cycle that allows the economy to grow faster.
It's been elusive, sir. I mean, this capex, and I'm not blaming the private sector, right? The private sector will put in capex. I'm not talking about you, but in general, the private sector will put in capex when they see the right kind of IRRs for the project. But private sector capex has been elusive. Do you believe that we will sooner rather than later see this again? I mean, is there some estimated timeline that you reckon, maybe in 2025, 2026, that there's a higher probability of private sector capex coming back with a bang?
So the one metric to look at is capacity utilization across sectors. Right. And that has been inching up. In a number of sectors, it's over 75%. In a few sectors, it's over 80%. So as it starts getting over 80%, that's the right time for companies to start thinking about capex and making sure that they have enough capacity to meet the demand going forward. As consumption increases and we see further growth, it only accelerates the need for private sector capex. And you're right, for us, we've tripled capacity in the auto business in the last 4 years. We've added significant capacity to farm, to a number of other industries as well. And that's because we've seen demand for our products, and that will drive further private sector capex. So again, we feel that India is well positioned right now. The actions that we've seen the government take have been for the long term and to create stimulus for the economy in the recent past around the short term for consumption as well. And that's the right set of actions that will enable private sector capex to come in and provide a further boost.
Okay, you are an industry captain, but a lot of our audience are investors. I would love to know. The worry seems to be that we are not getting out of this growth quagmire. I know I'm maybe repeating this question, but I'm just trying to understand. We've seen a bit of an uptick in Q3 numbers relative to Q2 numbers. The hope is that Q4 and then Q1 onwards, some of these moves that the government has taken will bring about an impact. Do you reckon, I know you mentioned that there's no reason why India can't grow at 8%, but I'm not going that far. I'm trying to understand, do you in your wisdom believe that, let's say Q1 FY26 or maybe Q2 or Q3 onwards, we will actually see meaningful growth come back? Is there some estimate around the timelines that you have?
So if you look at rural India, we've seen growth coming back already. So our estimate for the fourth quarter is that tractor sales will be 15% higher than the previous year from an industry standpoint. And that's a fairly significant level of growth for tractors. It's in a very good place at this point. We see some of that momentum continuing into next year as well, though it's a little early to call next year from a rural standpoint. There is a lot of positivity around that. We've seen some slowdown in urban, but there again we feel that's more of a blip right now. So we would feel very confident that by Q1 next year we're going to see the economy on a faster track from a growth standpoint.
Okay, does the budget kind of try to address the urban slowdown as well? Because in effect, a lot of that taxpayer savings that happen impact, I would presume, the urban consumer.
That's correct. The tax effect as well as the rate cut, a combination of both of those, will provide a stimulus from an economic standpoint. The key is to ensure that inflation does not come back, and that's a fine balance. And then therefore the RBI has its task cut out, but it's a balance I think they've handled very well in the past. And as they do that, I think we will be in a good place to see growth coming back.
Okay. I'm sorry if I'm putting you in a bit of a spot, but because you have US business interest as well, and I'm just trying to understand, what are your thoughts on the India-US meets that have happened? There is, I mean, tariffs, reciprocal tariffs, what have you. Rhythm Desai was here in the morning and his note suggests that the risk of a large impact of reciprocal tariffs is very less. Would love to understand, one, that from you. And two, somebody invoked this thought and asked me to ask you this. I mean, what if there were trade agreements which were nearly equal to a free trade agreement between India and the US, and if all of those moves were to happen, what are the impact for Indian industry per se? Any thoughts?
So the starting point is that the relationship between India and the US is very strong. And I think that's a very important factor. Each country is going to take actions based on what is required for that country at that point in time. And on a longer term, we want the world to be completely free from a trade standpoint. And that's positive. We've seen the benefits of globalization in doing that. But we've also seen each country, and whether that's the US or China or Japan or Thailand or India, take actions based on what makes sense for every industry at a particular point. And our sense is that will play out in some form. I don't see a world where there is no tariff at all across the board. Right. That doesn't make sense for multiple countries because it depends on their phase or their life cycle at that point. And so I think we will come to a place where it makes sense for both countries. There will be some industries that are hurt more than others possibly, depending on what finally happens. But I do feel that it will be in a place where it makes sense because India has to protect manufacturing in a significant way as well. And that's an important lever for India's growth for the next decade.
Yeah, I mean, and which is why my concern was that could that have an impact? Because for the last 3 years or 4 years, we've been talking about the China +1 benefits coming into other ASEAN countries. Some of them have come to India as well. Do some of these trade agreements or reciprocal tariffs impact that manufacturing ambition in a meaningful way? You don't think that?
Given the relationship that we have between both countries, we feel that India will be possibly in the net gainer category. But as with the world right now, everything is unpredictable, so we shall just have to be agile and ready to respond.
Okay, let's move beyond manufacturing, Dr. Shah. I mean, and beyond just tractors and autos, which are, of course, doing very well for you. And by the way, I mean, it was great to see some of the large companies like yours, very few in Q3, which delivered very strong numbers, right? What's your sense about, the overall console performance for your group in the times to come? Because in some sense, it will do slightly better than GDP growth, but it will be a mirror or a reflection of what the inherent growth is. You are constructive on growth picking up for the country. Would that be safe to assume, therefore, that you are constructive on growth looking better for M&M in FY26 over what you've done in FY25, which has been a commendable job already?
That's the problem with doing well, and we've had that discussion at our board as well, saying that just the fact that you've done well raises expectations significantly. So the one thing I will say is, if you look at a Q3 results, it's our businesses beyond auto and farm that have actually grown much faster, and that's really helped. And auto and farm have done very well also, so it's been a combination of all of that coming together. And we feel confident that we can continue this, because from our standpoint, it's more about operational excellence and ensuring that we're delivering everything we can by having our teams perform well on the ground. We have signed up effectively for growth at 2x GDP, and that's something we feel confident we can continue to deliver over the years.
But this is a mix of a lot of businesses, or at least one key business which is also very global in nature, and therefore maybe not as aligned to the Indian GDP growth as maybe to the world GDP growth, right? In Tech Mahindra, etc. So when I look at the console, you reckon being 2x of GDP is a bit of a conservative estimate that you're putting right now? Under promise and over deliver?
Well, if 2x GDP is under promise, then I think we are in a good place.
No, I didn't mean it that way, but just by virtue of what you've done in the recent past, it seems that 2x is a bit of an under promise. Just that, nothing else. Okay, what about the GEMS strategy? We spoke about that briefly while we were together in the World Economic Forum as well. But now that you've just completed your Q3 numbers, how did you feel the rest of the non-auto businesses are doing for the group? And if you can just extend that argument for whether you see growth in those respective industries for the sector as well. I mean, whatever brief 50,000 feet view that you may have.
So we are seeing them do very well, actually. So if you go beyond auto and farm, first I'd start with Mahindra Finance and Tech Mahindra. Both are on a very good turnaround track, and in fact now we are talking about going beyond the turnaround to achieve full potential. Both have underperformed in their markets, and that is where the growth really lies for us, to get to industry average first and then go beyond industry average to be one of the industry leaders. If you look at our growth gems beyond that, hospitality is one area that's growing very well in India. Logistics is a second one that has significant tailwinds, and especially as we think about manufacturing growing in India, logistics will logically extend that growth rate as well. Real estate continues to be on a very strong path, and that's benefited our business. Renewables continues to grow at a dramatic pace, because generating power from renewables is much cheaper, in fact, than fossil fuel. So there's an economic argument for that, and from a company standpoint, we are moving from 26% of our power being renewables to over 60% in just this year. With our business Sustain setting up various solutions for us, and that 60 will quickly go to 80 or 90% as well. And that was a very easy decision, because it's actually cheaper for us. We save money by going to renewables. So you'll see more of that happening in that space. And therefore, we see multiple businesses, multiple sectors now well poised for significant growth.
Interesting. Some people go as far as to say it's a very small part of a business maybe, but that the next couple of years might actually be years where logistics businesses do really well. I know it's a small part of a business, just trying to understand. Any thoughts out there? It's a very niche question, but still.
Yeah, and not just next couple of years. I'd look at that for the next even 10 or 20 years. As manufacturing grows, as infrastructure becomes better, we're going to see logistics businesses grow at a much more rapid pace.
Okay. Last couple of questions, Dr. Shah. One is for this goal of Viksit Bharat, and as you said, both consumption and manufacturing have to contribute. For manufacturing, the issue that some people have been citing is that there is a skill gap in that yes, there are jobs, yes, there are people available, but the right matching of skills isn't happening, and that's a problem for corporate India. Is that a problem that you are facing as well, and if so, how to resolve that?
It's clearly something that needs a lot of attention. It's not a problem we are facing today, but we will if we don't give it the due attention. So our focus is to do a lot of work with ITIs. We've in fact partnered with a number of ITIs to develop skilling programs for various people. The Mahindra Group is also focused on skilling for women. And we've taken on a target to skill and provide jobs for 1 million women. We're not going to provide all the 1 million jobs. There will be various other companies that do that. But we're going to focus on skilling, and that is an important contribution to society. So this is clearly an important part. If there are any companies out there that want to hire women across the country in various areas, please reach out to us. We're setting up skilling centers, and we'll be happy to work with you on that front. Because this is something that we feel is an important part that India needs to do.
Why are men being left out?
Because we need to get equality in the workplace, right? So from that perspective, we need to have a lot more skilling for women.
Lovely answer. No, I didn't expect anything less. Okay, final thoughts really, Dr. Shah. And one is for all that India is doing on manufacturing, making in India for India, in some sense making in India for the world as well. Do you reckon that pie will grow larger as the decade rolls by? India's share of manufacturing for the world. Any thoughts there?
Yes, that has to grow larger because that is really the growth area for India. As we look at the goals for Viksit Bharat, manufacturing has to grow 16 times over the next 22 years. And I would say that companies in India are ready for that.
All right. Well, great. Lovely talking to you, Dr. Shah. Energizing conversation as always. Thank you so much for taking the time out and being with us.
Thank you.
Check. Loud round of applause for Dr. Anish Shah and of course Honorary Dr. Neeraj Shah. Gentlemen, if you can stand for a picture, then we can get both the doctors in the frame.
One, this was a delightful opportunity, but we also had a wonderful opportunity to hear Dr. Mohan Yadav, Honorable Chief Minister of Madhya Pradesh, on the Invest MP, the forum to raise investments, opportunities for that state by bringing all the main stakeholders on one platform. As we wrap up this conversation, let's listen into that piece as well.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
बजट भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए।
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters
Welcome back. This is India Market Close. I am Agam Vakil and with me is Anushi Vakharia. And we're here to take you through the final trading hour, well, a little less than that, of markets at the moment. And markets currently are under a tad bit of pressure. There's a little bit of recovery from the bottom, but also way away from the top. But don't let that fool you, because it's actually been a relatively quiet day of trade. We haven't seen too much traction in general overall, and even the Nifty is down by just around 0.2%, and the Bank Nifty again, we haven't seen too much movement there either. Perhaps the crucial part here is that the India Volatility Index touched 16 in the middle of the day and has come back below the mark. What we really need to keep an eye on is the broader markets. That's not panning out well. But I'll, save that for Anushi. Let me take you through what's happening in the benchmarks. So the Nifty, as I mentioned, is marginally in the red. We are taking a look at the constituents of the Nifty to see where there's a pull and push. And earlier on in the day, there was a little bit of pressure coming in from ICICI Bank, M&M, and HUL. And on the other hand, you did have HDFC Bank who are providing a little bit of support to, these benchmarks, along with NTPC and Tech Mahindra. So that's what you have in terms of how things are going to pan out as far as the benchmarks are concerned. Before I hand it over to Anushi, let me take a look at the advanced decline ratio as well, and that will give you a better idea about how things are panning out. So at least as far as benchmarks go, the advanced decline ratio is not a good one. We have more losers than gainers, and if you go by the Nifty 50, maybe 2 gainers for 3 losers. Of course, I'm going to leave the rest to Anushi, because the broader market advanced decline ratio is also not looking good. In fact, nearly 370 stocks advancing as against over 1900 stocks declining. Anushi, good afternoon. How are the broader markets looking?
Hey, afternoon, Agam. So it's not a surprise when I say that the broader markets, the pain continues over here, especially in the mid-cap and the small-cap indices. In fact, if you pull out the mid-cap indices, currently off the day's lows, but the pressure still continues. It is seeing cuts of around 0.9%, and this is with a lot of stock-specific action also that we are seeing. In fact, what is dragging down this index is a couple of defense names, Mascow, Bharat Dynamics, seeing cuts of around 6% in trade today. Along with that, we also have something like a Kalyan Jewelers, which is seeing about 5% of cuts along with RVNL. RVNL had reported a weak set of numbers. Since then, the stock is under pressure, down about 4% in trade today. In terms of where the small cap index is looking at cuts of over 1% in trade. While yesterday we did see recovery in the second half of the market, today the pain continues for the small cap indices. Currently, in fact, it's over 2% down now and currently at the day's low, point of day's low currently. If you had to see what are the couple of stocks which is pulling down this index, PTC industry is seeing about a 10%. It's down, locked in a 10% of a lower circuit. Sword Energy is down 8%. Along with that, we have something like a Garden Reach and a Power Industry seeing 6% cuts as well. So pain continues in terms of where the small cap and the mid cap indices are, Agam. Yeah.
Well, fair enough. On that note, let's get in our experts for today. We have Amrish Baliga. He is the independent market analyst, as well as Kush Bora, founder of kushbora.com, who joins us on the show. Good morning, good afternoon to both of you, and thanks for joining in. Kush, I start with you. How are benchmarks looking right now, both the Nifty and the Bank Nifty?
Hi Agam, hi Anushi. I think the markets are also taking a pause because of the conclave. I think most of the participants are perhaps busy watching that. It's a great show that the team has put on, and I've been catching glimpses of that, and a fantastic show. I must say. I think for the selling to stop, or rather for the markets to start, taking a pause here, the first thing is that the selling has to stop and then the buying will resume, right? Now, there are early indications, there are early signs that the selling is perhaps, at least for the very near term, stopping. I know the mid cap and the small cap segment of the market is not painting that picture, but let me just give you some data points. FIIs are still short 84% on the index futures, but they've been that for the last 3 sessions, right? In fact, just before that, they were 85% short. So what that is suggesting is that they are not building or piling on fresh short positions in a heavy way, which means the net short position remains more or less around that mark. Also, on the index or on the futures, on the stock future segment, you've actually seen FIIs be net buyers for the last 4 consecutive sessions, which means if they've gone short for a while now, they're starting to cover those. So that's what the stock future segment is suggesting. So as I said, the cash market might not suggest that. The small and the mid cap segments might not suggest that, but definitely the future segment is suggesting that the selling from a near term perspective is coming to an halt, and that is what we are seeing on the index, where the Nifty is taking support near the 22,700, 22,800 mark. I, for once in this market, as I've maintained for the last couple of sessions, will play for a rebound rally because of the couple of reasons that I mentioned, and also because of the fact that the risk reward ratio from here on is fairly attractive. On the downside, you've got supports near the 22,500, 22,600 zone, but a recovery or a revival sort of a rally could take the Nifty to 23,300, 23,500 kind of a mark. So I am not going short on the Nifty yet. I'm playing for a rebound trade, but that is only from a very near term perspective. I don't think we're out of the woods yet.
Right. And Kush, in that case, if you could also tell us about a handful of ideas that you have at the moment.
Sure. Given the texture of the market, where I believe that recovery is around the corner, at least from a short covering perspective, both the stock ideas that I have today are on the long side. One of them is JSW Steel and the other is Abbott India. JSW Steel in the metal pack has actually been doing rather well. It's not seen the kind of volatility that the markets have seen, nor has it seen the kind of volatility that the metal pack is witnessing. So it's going from strength to strength. So from a near-term perspective, my targets on JSW Steel are 990 and 1005, 960 being your stop loss. Abbott India has seen a good revival. It's been fairly volatile, but it's taken support near the 200-day moving average and the 50-day moving average band, and bouncing back on the back of good volumes yesterday and today as well. So from a near-term perspective, again, 29,750 and 3,300 are your targets. 28,500 is where you place that stop loss.
Okay, so these are the couple of picks from Kush that should be in focus. But let's go across to Amrish as well and understand his outlook on markets currently. Hi Amrish, welcome. First of all, your overall outlook on markets. Now, there has been a lot of narrative about the stance shifting towards the large cap versus the small and the mid cap space currently. What is your view on the same?
See, in fact, as far as the markets are concerned, I've been cautious for quite a while. And in fact, we went wrong about 6-7 months back when we were saying that the markets are too expensive, time to take money off the table. At that point of time, I was suggesting about 30 to 40% in cash. But then, yes, I mean, we went wrong for a couple of months. The markets kept on moving up. But then those who exited at that point of time and sat on cash, I think this is a huge opportunity for them to again restart investing. Because, I would surely not say that this is the bottom. It's very difficult to call the bottom. You can say that that's the bottom only after the market have moved up. But as of now, I believe that we still have some more downside. Yes, we can have a couple of bounce backs in between, like what we're just discussing, that we could have a bounce back to 20,200, 300 levels. But then if you're talking of the next month and a half, 2 months, I think we could see levels of about 22,000, 22,500. That band on the Nifty may be a bit lower also. But that does not mean that one has to wait for those levels to be reached to start buying. If you're sitting on cash, I think it's a great opportunity to keep buying in small quantity. As and when the markets are coming down. And when you see a decent bounce back, maybe one can book some profits there and again get into cash to a certain extent. Overall, I would say if you're talking of the possible future of the next 2 to 3 years, I think this time, in the sense over the next 2 or 3 months, could be an extremely good window for you to pick up stocks and construct or reconstruct a portfolio. Because I think if you're talking of longer term, you really can't go wrong on Indian economy, India markets. And if you're talking of the large cap and the mid caps, I think the way the mid caps and small caps have cracked, I think there are a decent number of good mid cap and small caps. You just can't generalize. But then, because of shortage of time, I would surely say that the stocks or the sectors which you are tracking very closely, you're confident on those stocks, and they have corrected majorly. And at this point of time, if the valuations are decent, you should look at buying. It's possible that we could see either 10-15% cut in those stocks, but then every fall should be a buying opportunity as long as you're confident on the stock.
Okay, well, that's the view in terms of where the markets are headed. But in terms of where the action today is in some stock-specific action, and this is on the back of earnings. We have ABB in focus, and this is on the back of their fourth quarter calendar year 2024 earnings. Now, they've reported a very strong set of numbers, and we are looking at a revenue growth of around 22%. Net profit saw about a 56% of a jump. And the revenue growth, if you are seeing, was led by the electrification and distribution solution export business. Along with that, but margins have expanded considerably, 19.5% versus 15%, and this is on the back of higher price realizations as well. It's the orders which were a concern. They have seen a 14% of a downtick in the quarter at 2,695 crore, and this is on account of larger orders in the process automation and the motion segment last year. With the company overall orders, if we are seeing, we are looking at a 6% growth here, and order backlog stands at roughly 9,400 crore. So overall, a very strong set of numbers that we are looking at. Kush, I want to come to you first. A counter like ABB India, it has continued to remain in focus, and quarter after quarter, we are seeing EPS upgrades in terms of where the margins are concerned. I want to understand your view in terms of where, in charts, how is it looking like?
Not too encouraging. I think this is the first day after a while, and by that I mean after a good 2.5 months that the stock has actually crossed the 20-day moving average on the back of good numbers, but on the back of the price action that it's seeing. But even that has given way. That's true for the entire sector. If you see, the peers are also the peers also haven't done all that great. So from my perspective, I think this is still a space that you should perhaps watch, but not go out and buy just yet. Normally, when you start buying, is that the price action continues lower, but the volumes start to thin down. That's not the case. That's not the case with, as I said, ABB. Even if you consider something like a Siemens or a Cummins, that's not the case. So I would wait and watch. For me, the next level to watch for on something like an ABB comes close to the 5,000 mark. Once that is taken out, perhaps even a 4,800. So wait and watch on this one. Volumes are still piling on, so not the best time to go out and accumulate this one just yet.
Right, Amrish, come in on names like ABB India and Siemens. How are you evaluating stocks or potential in these companies?
No, see, the potential surely is great going ahead. And if you look at the sort of revenue growth they have shown, the margin expansion they have shown is excellent. But the issue, at least in the short to medium term, especially as far as ABB is concerned, the numbers which are released by the parent some time back clearly puts a question mark on the order flows as far as our geography is concerned. So from a short to medium term perspective, I think that's what is going to play on ABB India. And we could see further correction, but at lower levels, I think one should be looking to buy.
Okay, Kush, just a follow-up to your earlier assessment on the benchmarks, where do you see a technical bottom at this point in time?
So, typically, even as Amrish was saying that, the bottom is generally known after it's made. But if you go by the historical averages and the trends that the market has witnessed, I'll give you a very broad range. The 21,500 to 22,500, the 1,000-point range is where perhaps the market could attempt a bottom out. There are a couple of reasons for that. One, if you go and see the 500-day moving average, I know that's not a number that someone usually tracks, but if you go out and check the 500-day moving average, every time the markets have gone significantly past that, divergent from that, they've come back and taken support around that level. This time around, that support level comes close to the 21,500 mark at the 500-day moving average. Also, if you see over the last couple of years, this was the band, the 21,500 to 22,500 zone, which the market spent a considerable time in before breaking out and hitting that 26,000 mark. That's where the buying level could come in again. So while we are playing for a technical bounce right now, there's, as I said, a slight possibility, or rather a stark possibility that the markets could head lower and the bottom could be somewhere close to the 21,500, 22,500 kind of a zone.
21,500 to 22,500 is the mark that we are looking at. But very interesting take, Kush, in terms of where the technical is concerned. But coming back to some stock-specific actions, Zentech continues to be in focus for the second straight day after it reported its Q3 results the day prior. Now, it's locked in on 10% of a lower circuit after the management commentary as well. Overall, if you see, the company had posted a 53% of a revenue growth. Margin stood at 29% of versus 42.7%. But do note that the sector in general, the stock has variations in terms of where the margins are due to the product mix changes that takes place, and because of the execution that there is, net profit saw 30% growth. But the main concern amongst the street was on the ordering. Now, if you look at the order book, that stands at about 816 crore, while the company has given target of achieving a 900 crore of a revenue for FY25 and aims to maintain a 50% of a growth, CAGR growth for the next 3 to 4 years. It's the ordering momentum which is a concern going forward, as most of these orders are bunched in Q4 and Q3. While the expectation was for higher orders in Q3, there have been delays in translating it into orders as such, and because of which the street is now pegging for a lower order multiple, which thus affects the revenue visibility going forward for the business. But Amrish, I'll come to you for something like a Zentech. Now, while the results, they seem on a solid trajectory in terms of where the revenue growth is concerned, it's the ordering which is a cause of concern amongst the street. I want to get your view on the same.
No, in fact, I don't track Zentech very closely, but the issue with most of the stocks where the expectations were high, and although the earnings have been good, but then when the management commentary is slightly weak, those stocks are beaten down, because clearly that high valuation is playing out in the market. Because just look at Zentech. It's I think at close to a 52-week low, or maybe a bit lower than that. So this is what happens. Suddenly the stock starts cracking. So like I said, I don't track this stock very closely, but then if investors are finding the valuations at this point of time decently attractive, I don't think one should look at short term. Keep buying at every lower level.
Okay, and your view, Kush, on something like a Zen Technologies?
So quite a bit of knocking that the stock has seen. I don't think this is a good time to start venturing into the stock just yet. As we call it, don't catch a falling knife. Yeah. It's been that for a while. Again, the volumes are also on the higher side. Stock could find some sort of a support near the 850 to about 790 kind of a zone as the first interim. If it breaks that, then you're looking at much significantly lower levels, perhaps even something as low as a 700. So watch for the 850, 850 to 800 kind of a zone if the stock indeed does slip and take support at that level. It's still far away from the oversold territories, at least on the weekly time frame.
Okay, well, on that note, thanking both our experts, Amrish and Kush, for joining us and taking us through their views on the markets. On that note, also taking a quick break, but on the other side, we continue with all the market actions. Stay tuned in and we'll be back in just a bit.
उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. This is India Market Close. We are looking at the benchmarks showing up a very subdued trade on this Tuesday afternoon. Well, and at the moment the Nifty is currently marginally in the red, as is the case for the Bank Nifty, just down by a little bit more, but largely holding on to yesterday's levels. And on that note, it's time to get in our experts for today. We have Aditya Agarwal, he's the head of research and investments at Invest for Edu, and Anirudh Garg, partner and fund manager at Inva Asset PMS. Well, thank you both for joining in. Aditya, I'll start with you on your view on the benchmark indices, a potential bottom in sight.
Hi, thanks for the show. Oh, I think so that at least if I talk about Nifty, it looks like there's a bottom formation is in place. Index is trying to form a bottom around these areas of 22,500 or 22,700. Looks like a good support area on the downside. Every time Nifty inches closer to about 22,700, it does look like it's trying to form a bottom around those areas. On the upside, 23,000 is acting as an immediate hurdle. On the moment it crosses 23,000 on the upside, I think Nifty will see a sizable short covering rally argument and can test levels of 23,500 or 24,000 on the upside again, which is acting as a major hurdle. So specifically talking about Nifty and Bank Nifty, I think majority of the correction we are done. I don't see a sharp correction on the Nifty and the Bank Nifty. Bank Nifty, I think, can test levels of 50,500 or 51,000. The real pain actually still lies in the broader markets, that is your mid cap and the small cap end. And I think there you will see markets continue to slide slightly lower or at least remain volatile in the near term before it sees a bottom out formation and starts to go up.
And Aditya, stock ideas for this afternoon?
So I've got a couple of buy recommendations, Agam, and these are all from the beaten down names, which now looks promising. The first one is SBI Card. If you look at the way the stock has been outperforming in the recent times, looks like it's formed a base and it's ready to go up. In this market, stock is up significantly. At current levels, I'll be a buyer in the stock for a target of at least 895, keeping a stop loss at 851 on the downside. The second is Berger Paint. I think so. The entire paint industry is also something to be looked at, has been ignored for the longest period of time. And Berger Paint at current levels, it definitely takes a buy check and then can be bought for a target of 510 with a stop loss at 480 on the downside.
Okay, thanks for those picks, Aditya. But Anirudh, coming to you now, what is your view on the overall broader and the benchmark markets that we're seeing?
Good afternoon, and thank you for having me. I think for the last few months, we were one of the only PMSs in India who were really bearish on the valuations and the exuberance of the Indian markets were seeing. But now I think it's time to not talk about risk at all. Have a diversified portfolio is the max you can do, and we are jumping all in. I think by the end of the day, we'll be deploying all our funds into the markets.
And Anirudh, how would you deploy this? Firstly, I'm assuming that you would use a staggering approach, but where do you find more value in these markets? Would it be large caps or the broader markets?
I think both large cap as well as the broader markets. In the stocks that we like, we're seeing a lot of value coming in. The portfolio that we are buying today is down 30-35% from the all-time high it has achieved as a portfolio, and that is it for us. We are very happy that we are able to buy at these valuations. We like something in pharma. We like where the growth will be for the next couple of years. We like a few companies in pharma sector, especially CDMOs. We like something in retail. We are confident in the leaders in different sectors. We like a company that you were talking about just before the show, who is very good in the capital goods sector. We are not concerned about the negative news about orders not coming in. See, the point is 3 months before, when the things were exuberant, all these companies were looking all right. Now you're getting those companies at 40-50% discount. So there should not be a problem buying right now.
Okay, so that's the overall view on the markets and your picks in it. But let's take a look across the top 3 stocks on the radar today. Richa has a list of what's working on for the likes of DCX Systems, GMR Airports and SBI Cards.
So definitely I'll start with my top one, that is DCX Systems. Well, the company has gotten an order of 24.5 crore rupees for the manufacturing and supply of cable and wire harness accessories, assemblies as well. Well, it includes domestic as well as export purchase orders. In terms of share price, well, the intraday low was -5%. So in a kind of bloodbath in the market, even a positive news has actually beaten down on the stock, as we can currently have a look. -3% is over there, but intraday high of about 2.5% on the back of this order win. Moving on to GMR Airports, for January, the passenger traffic was up about 11.5%. For domestic passenger traffic, up about 11% YOY basis, and international passenger traffic 12.5% YOY basis. But kind of mixed share price performance over here. Intraday high of 2.3%, intraday low as well of -2.3%. But currently, it is largely trading flat. Last one on my list is SBI Cards, as our guest also mentioned as one of their top picks. The company appointed Salila Pandey as the managing director and CEO of the company. She's presently a chief general manager at State Bank of India, and she joined SBI in 1995 as a probationary officer. Now this new MD is appointed for a period of 2 years, effective 1st January 2025. Intraday low largely like flattish, -0.9%, and as we can see over here, SBI Cards, it's currently up about 1.7%.
Rucha, thank you for all those updates. With that, Anirudh, I have a follow-up question to what you had earlier alluded to. So, we have companies which are growing at the top line is growing at around 20-25%, the bottom line is growing at around 25-30%. You see expansion in margins, but these companies are trading at 70, 80, 90 times at one point in time when markets were frothy. After this correction, and as you've suggested, about 25-30% correction, valuations don't exactly look cheap at this point in time either. So under what circumstances would you in fact go ahead and buy? Or do you think, are you saying that the markets will continue to give some of these names that much of a premium irrespective of what mode the market is in right now? Anirudh, I believe you're on mute.
I'm so sorry. I think we just don't have to see PE in vacuum. We have to see PE with response to the growth. Look at the numbers these guys are posting. So when you see it on the peg ratio basis, these stocks would look comfortable to you. And ultimately, in stock market, there is a very simple rule. Money follows where growth is. So ultimately, companies where growth is will tend to, trade at higher multiples than the ones where growth isn't.
Okay.
Apart from that, sorry, I would like to add one more thing. You need to have some visibility of earnings as well. That is what the market likes.
Okay, sure. So that's in terms of where the markets are. But coming back to what Rucha was speaking about, with the likes of TCX Systems, GMR, Airports, SBI Cards, Aditya, I want to come to you on some of these counters and your outlook on some of these stocks.
So SBI Cards, like I spoke, definitely looks very strong to me on the chart setup. I think so. It's a good time to look at that stock, add in your portfolio, hold it on for some time. Will show you decent returns on the upside. It seems like has found a bottom. Talking of GMR Airport, that is also looking interesting to me at current levels. After a decent correction, stock has come to good support levels of about 67, 68 rupees. On the upside, I think so. Stock can easily test levels of 85 to about 88. One has to be a little patient here. Give it some time because currently markets are still trying to form a base. They're a little volatile. So you will see ups and downs in the markets, and especially these high beta names as well. So GMR is one of them. So GMR also does look interesting to me at current levels. If somebody can weather the storm and has that risk-taking ability, should go along at current levels. Let us stop loss somewhere around 67, 68 and look for a target of at least 80 to 85 on the upside.
Okay, well, we move on, get Rucha back into the conversation. This time it's on about JP Morgan's view on persistent systems. Rucha, what are they telling you?
JP Morgan has maintained overweight rating on Persistent Systems with a target price of 7,200, while the brokerage house sees Persistent as the fastest growing company with 21% revenue CAGR, that is compounded annual growth rate, over FY25 to 27, and a 29% earnings CAGR over the same time period. Now, the management is navigating tough macro environment as well, which most of the companies in this market are actually facing, but the brokerage house definitely sees potential for margin expansion from reduction in subcontracting expenses and operating leverage as well. Therefore, the brokerage house recommends buying this dip in Persistent System because it is a high quality growth compounder offering about 30% potential upside according to JP Morgan. Now let's look at the stock price over the last 1 year. Well, this one has given returns of up to 31%, and over the last 6 months Persistent Systems has given 17% returns. So this one is definitely a positive for JP Morgan.
All right, thank you so much for that, Rucha. But Anirudh, coming back to you on your assessment on the entire IT sector right now, given all the plans and rhetorics that the US president has suggested, with that, of course, the significant weakness of the Indian rupee against the US dollar as well, keeping all these factors in mind, your view and assessment of the Indian IT sector?
I think let's leave Donald Trump's and Modi's comments and etc. They're all politicians, and politicians have a way of working. The best thing to follow in the market is where the growth is. As your colleague was talking about a company where growth is good. It's one of our portfolio picks, and I believe this is what you should follow. Where can you get growth for the next 3 years? This is what we are focusing on. So the only IT stock that we hold in our portfolio is Persistent Systems.
And coming to you, Aditya, on your view on Persistent Systems?
I think I would slightly stay away from Persistent Systems. I think there is a lot of consolidation now which is going to take place, especially in the mid-cap IT space. Names like Persistent System, Coforge can come under some bit of a consolidation, correction, minor correction as well. I would be more keen on looking at some of these large cap IT names which have been flattish for major part of the year, and looks like they're in for a good up move. So names like HCL Tech, TCS, Infosys, they are on my radar, and I would like to stick my neck out and just buy the large cap names and remain invested there for at least a couple of quarters because I see a good upside in all of these large cap companies, from Persistent Systems to moving to large caps is what I would prefer.
Okay, so preference clearly in the large cap IT names, but shifting focus from the IT sector to the telecom sector, a block deal involving 5.1 crore shares of Bharti Airtel worth rupees 804.75 crore took place on the markets today. Somit joins in with more details on this one.
Well, as the block deal for Bharti Airtel has happened, and as per the exchange notification also, it confirms that Indian Continent Investments has sold close to 5.1 crore shares worth around 8,485 crore rupees. That is nearly 0.9% of the equity. But what is interesting that has come out from this notification is the fact that Bharti Telecom, which is the another promoter entity, has bought nearly 1.2 crore shares of this 5.1 crore which was offloaded by Indian Continent Investment. Now do remember that ICIL, that is Indian Continent Investment Limited, is 100% owned by Sunil Bharti Mittal, while Bharti Telecom is jointly owned by the Mittal and the Singtel. Singtel owns around 49.4% stake in Bharti Telecom, while the Mittal group owns close to 50.6% stake in Bharti Telecom. So clearly a shift of hand coming in from the Mittal owned entity to the jointly owned entity, which also means that Singtel's indirect ownership or direct ownership in Bharti Telecom has now also increased. Now do remember that post this block deal, Bharti Telecom will own close to 40.7% stake in Bharti Airtel. And why this change of hand must have been done by the promoters? It could be because Sunil Mittal is looking to acquire nearly 24.5% stake in BT Group, which could cost him close to $4 billion. So some funding could be used towards that as well by Sunil Mittal, or this could also mean that Airtel could call for the balance payment of Bharti Airtel partly paid shares, and to make that payment, Sunil Mittal might have sold some part of its stake, because this partly paid shares were issued at around 535 rupees per share back in 2021, and current value of the Bharti Airtel shares is close to 1,670 odd crore rupees. So it's a clear win-win coming in for Sunil Mittal if he would have done that as well. Now some details about the rights issue. So far we do not know when Bharti Airtel can call this amount, because the last day to call this amount was October 2024, and they had delayed this given the fact that Bharti Airtel was not in need of any cash, and there is no clear timeline as such given by the company. These shares were issued back in 2021 at 535 rupees, of which around 107 rupees has been called by the company, while the remaining amount of close to 422 rupees is yet to be called by the company, and this could be called going forward. Also, one more thing that could hint towards this is the fact that the derived value of Airtel partly paid shares stands at close to 1,632 rupees versus the current market price of Bharti Airtel, which is close to 1,670. So there is not much of a premium or discount coming in here, which could also hint towards the fact that Bharti Airtel could call for the partly paid amount anytime soon.
Samit, thank you so much for getting us those updates on Bharti Airtel. Aditya, coming back to you on your view on the charts as well, how is this one looking?
A long consolidation phase is going on, Agam, here, and I think this consolidation phase is likely to continue. There is no weakness as such in the stock. I just feel that this consolidation phase can continue for some more time. I would not be a buyer at current levels. Maybe if it corrects post-consolidation, or if it breaks out above this hurdle of 1750 zone, then I would look at getting long on the stock. At current levels, I would just avoid getting fresh long in the stock.
Okay, so that's the view for Bharti Airtel, but we'll take a quick break. Stay tuned to NDTV Profit. Lots more updates coming on the other side.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई इसके लिए सेंटर्स बनाए हैं।
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Hello and welcome back. You're watching India Market Close. Now, one stock in focus today is Max Healthcare. This is after UBS has upgraded the stock to a buy rating with a target price of 1,200 rupees. Puneet will join in with more from the report as to why the brokerage is bullish on the stock.
So, they've resumed coverage on this particular stock, and as you rightly said, target price of 1200. This was 610 earlier on the stock, so it's almost a 50% jump of what they estimate, actually 100% jump from what they estimated earlier in terms of target prices. Now, the key aspect is that still, the stock is of course corrected roughly 13 to 15% over the last 2 to 3 weeks because of the correction, and that is something that they're mentioning is one of the key aspects. Apart from that, they're mentioning that, they believe that the market is currently not appreciating the kind of asset that Max Health has built in this particular time frame, and expecting that the strong visibility in terms of new bed additions is something that they are very positive on. Apart from that, they are mentioning 3 to 4 key reasons why you should have this stock on your radar. The first one is of course the efficiency as well as the turnaround. It's just taken about 6 to 7 months for the hospital to break even in the last 3 to 4 years that has come in. That's one of the key aspects. The second one is of course the track record on occupancy, which has increased steadily over the last few quarters, and of course leveraging the asset light model. They feel that the company is the market leader in this particular aspect, and hence seeing turnaround of new projects. They are estimating that the bed capacity should double over the next 3 years, and they will expect to generate 8,000 crores in terms of operating cash flow. So all these multiple positive factors on the stock, and hence UBS is positive on this company.
Well, thanks for that, Puneet. But Aditya, coming back to you on this one, Max Healthcare in focus, you're looking at a target price of 1,200. What's your view on the stock?
I think so. It's a very safe target to have, more of a consolidation and trading in a band. So 1200 happens to be the upper end of the band. On the downside, 1000 happens to be the lower end of the band. So stock has been oscillating between this 1000 to about 1200 for some time, and now that it has turned upwards from this lower end of the band of 1000, I believe stock can again test those levels of 1200 with an intermediate hurdle around 1100, 1110. So the first target should be around 1110 on the upside. If that is taken out, maybe 1200 is something that is possible in the near term.
All right. Aditya, comment on something like a ICICI Bank as well. Any potential change or trade here that you are witnessing?
Not really, Agam. In fact, it is testing its 200-day moving average, simple moving average. And yesterday it took support at that moving average. Today, again, it's taken support at that moving average. On the upside, 1270 happens to be a major resistance between 1270 to 1275. So I'll play a little safe here, not take any trade in ICICI Bank at current levels. Maybe if it takes out 1270, 1275 on the upside, then I would be a buyer in the stock. Then I think it will show some more strength and can test levels of 1340 to 1360. At current levels, maybe I'll just avoid because market is still trying to find its feet in this volatile phase.
Okay, well, that's the view for ICICI Bank. But meanwhile, Morgan Stanley's Rhythm Desai believes we're already out of the slowdown and explains why he likes financials. Let's hear him as he spoke at the NDTV Profit conclave earlier today.
So I think there have been a fair bit of policy actions that have taken place. The spending slowdown that we saw from the government in the first half of this fiscal is behind us. The RBI has pivoted. The budget, I think, has set the stage for accelerated growth. And the globe doesn't look as murky as it may have been 3 months ago. So I think the stage is set. Obviously, the signals are not there. By the time the signals come, stocks won't be at these levels. But I am fairly confident the signals will come our way in the next few weeks.
There's a call, and there's one large CIO who suggested that there is real reason to worry because of overvaluation. Now, when I'm analyzing the 5-year average price to earnings multiples of Smith stocks, and this is just the benchmark, it's trading at a 30 to 40% premium even now, despite the fall. Generally, fundamentals suggest that in case of overvaluation, generally markets correct. What's your sense now, and what keeps you bullish at this hour?
There were certainly some places where a bit of frothiness had come through, and I think this correction has evened that frothiness out. I hesitate to use a PE multiple to measure value. Sure. Value is really about future cash flows, not about price divided by earnings. Yes. But as I said at the conclave, if you look at the Sensex, in gold ounces, it's trading at November 20 levels, which does make it look a lot more interesting from a valuation perspective than it was a few months ago. There could still be some areas in the market that are a little bit overvalued, but I think many parts of the market now look very interesting. For example, financial stocks look very attractive. Select consumer names look very attractive. The IT names look very attractive. I think some industrial names have corrected very sharply and have now again begun to look attractive. So there are many places in the market, and I think this is not the macro market that we were getting used to. It's more a stock picker's market. So there are enough opportunities for investors to participate in the market.
The one major concern for the average retail investor has been the FI selling. One of the reasons possibly is the fact that bond yields have been at 4.5% for a prolonged period of time, and doesn't seem like a rate cut, at least in the US, is on the cards in a significant fashion. Now, when US returns are at 4.5% and you have currency depreciation factoring 7.5% risk-free, why would a foreign investor invest in India?
So I don't think there's that much concern as we are making it out to be. Otherwise, there wouldn't be a domestic bid like we have seen so far. So domestic investors clearly understand this market a whole lot better than foreign investors. Foreign investors, of course, have competing asset classes. And you brought US metrics into this conversation, but I think we may have basically been outcompeted by China rather than by the US. And China did some policy changes, and it does look like the Trump administration is not as belligerent as the markets may have been thinking, and that has given legs to the Chinese rally. Foreign flows, I think, will come at a time when corporate issuances rise, because I really don't see the retail bid going away on a prolonged basis. There may be a few days here and there where the retail bid goes away, but otherwise, if retail investors, and I mean retail plus domestic institutional investors, are bidding every single day, there is no room for foreigners to buy unless corporate issuances resume.
So yeah, I'll just extend that question a little bit more. So corporate issuances have been coming through the pipeline, they have been coming through the door. But when you're looking again at relative valuations, India versus EM and global, India is trading at a significant premium. For example, a Whirlpool, for example, an LG coming, for example, a Hyundai coming up. I'm just giving you illustrative names. Is that at all in some form a sign that Indian markets are overly buoyant, or you wouldn't be concerned about it?
See, first of all, no single participant in the market is smart enough to know the future. So just because one cohort is selling and another cohort is not participating doesn't mean that that cohort understands future. better than the other cohort. That's one point. Second is with respect to the comparison you made with emerging markets. See, ultimately what equities care for is whether you can deliver a return on capital that is greater than your cost of capital, and whether you can deliver a growth rate that is greater than your cost of capital. And on these two metrics, there are very few equity markets, I dare say only two markets in the world that have a tick mark, which is America and India. So I think India's premium valuations versus EM are very justified. Much better balance sheets, much better growth rate, much better return on capital.
Well, that was the view from Ridham Desai from Morgan Stanley. One interesting point that he made was on the Smith stocks about the valuations, the correction henceforth. Aditya, coming back to you, we've discussed about the markets before, but want to get your outlook on some of these small and the mid-cap names that are there, the overall view of the broader markets.
I think there is some bit of correction still due in the broader markets. It's trying to find its feet for sure. And majority of the correction, I would say, is done in this space. But still, there could be last leg of the correction in the mid cap space and the small cap space, which is left. And I think so that will continue for maybe a few more weeks, a month at max. And after that, it will find its feet, consolidate, and then it will go up. So don't be in a hurry to buy the mid cap and the small cap space just yet. Identify pockets which have corrected, which are good fundamentally and have corrected to good levels. They offer good risk to reward. Those are the pockets one should start nibbling into gradually and do apply a staggered approach in getting into the mid cap and the small cap segment of the market. I think leadership will be taken from the large caps, and that is something that will continue at least for this year, is what I believe.
The view for the small and the mid-cap indices, but let's take a look across some of the big moves ahead. Block deals are likely in focus today, and Puneet joins us with more details on this.
Well, thanks for that. The first counter is TVS supply chain. Now, we've seen a very sharp correction in this stock, roughly from 200 odd levels at the IPO. It's now corrected to roughly 130 to 140 odd levels. And we've seen roughly 20 lakh shares being traded by one of the partners, Allianz's Financial Net sold roughly 20 lakh shares, and this was bought by actually TVS Motor Company, which is another group company, at roughly about 128.86 rupees a piece. So up from that price. The other one's Ajax Engineering. Now, of course, it's a very recent listing. We've seen that, Morgan Stanley IFSC fund has currently sold roughly 7.5 lakh shares in this particular counter at roughly about 588.74 a piece. And the other ones, it represents about 0.66% equity stake on an overall basis. And the final stock is Cyan DLM. Again, this another counter has seen a massive correction in stock price after its Q3 earnings. And the outlook guided by the company seems to be pricing in growth only in FY26. But recent acquisitions have done well for the company. They've mentioned that one of the buyers has been Sarvana Securities. They bought roughly 6 lakh shares at 420 a piece. Represents roughly 0.75% of the total equity, while the sellers have been SSPL Securities as well. The final one more stock just to wrap this segment up is Gensol Engineering. Anmol Singh Jassi has sold roughly 2 lakh shares at 553 rupees a piece, which represents they had roughly about a stake of about 21%, so it's like diluted slightly from that aspect. But these are the 4 stocks for bulk block deals today and active in session today.
For those details, Puneet. Aditya, coming back to you on some of these names, we have the likes of TVS Supply Chain, Ajax Engineering. Well, I believe that would be this is a recent listing. So, but other than that, we have Cyan DLM and Gensol Engineering as well. What your outlook on some of these?
Cyan DLM is something which definitely looks interesting to me because the fact that it has corrected significantly and now it is showing some kind of a strength. It is trading above its 20 DMA, which is the immediate term moving average. So I think there is some kind of a positivity building up in Cyan DLM and can see levels of about 1650 to about 1700 on the upside. I could look at buying the stock at current levels and maybe look for at least another 5 to 6% upside from here on. Apart from Cyan, I don't think so any other stock looks that interesting to me.
Okay, so that's the view for Cyan DLM. But let's listen into an interesting conversation with Keynes Technology, which is happening with Rajesh Sharma, who spoke at the NDTV Profit Conclave.
On the sidelines of NDTV Profit Conclave 2025, we have with us today Rajesh Sharma, the Chief Executive Officer of Keynes Technology. Thank you so much for joining us today and taking out your time to talk to us.
Thank you so much, Haripriya. Pleasure to be here.
Great, sir. So we'll start off with the strong push that the government is doing for the sector that you operate in. There's a lot of optimism around that the government is seeing the potential for this sector as well. Tell us a little bit about how all of this optimism is playing out. Does this boost demand? What's the scenario right now that we can look forward to?
So certainly the overall industry and the segment has been growing ever since the pandemic happened. And the high demand for the electronics product at the domestic level, at the global level, has been a great push for the industry. The policymakers and the government has been a very, very strong support for the bolstering of the growth in the industry. So based on that, the demand that's coming in the domestic market, in the global market, is only building up the order book for the companies and the players in the industry. So that's a very, very positive remark for the industry overall, and that's going to grow further. I say, this next 1 decade is very, very crucial for Indian manufacturing, and specifically electronics and semiconductor is a key focus area for the government of India as well right now. So I think it's going to certainly grow further with this.
Do you think we could lead up to a leadership position where we don't just cater to the domestic markets, even look outwards and bolster the country's?
Absolutely. So certainly there is an Indian demand. The Indian domestic market itself is so large, and still a lot of people do talk often about China plus one option. I think India is no more just an alternative and option. It is bound to become a manufacturing superpower. There is no alternative to that. So certainly that demand will be there globally as well.
What's the kind of impetus does this potential give you? We know we speak on the quarter-wise numbers a lot often, but in the long term, what is it that you're looking at, and how would this bolster for you?
Well, see, certainly quarter-wise number does become a reporting of what the performance has been. But the company's operations and activities are not limited to a quarter or a financial year. We look at our long-term plans, where we want to see Keynes as a brand to grow globally. We are not just looking ourselves to be an Indian player or an Indian market leader today. We are looking at ourselves being a global leader in the electronics space. So we are looking at market globally. We do get a lot of inquiries from around the world today, and I think we are very positively being able to respond to them and getting good response from the global customers as well.
A higher amount of market share and the revenue would come from the international markets in the coming years, you think?
It will certainly grow, absolutely no doubt about that. The global share in the overall share of wallet will grow from the global markets from where it is today, positively, yes.
Right. Talking about the quarterly results and the market movements, how much does the stock market keep you awake?
Well, actually, more than stock market, my customers keep me awake. And I think, delivering to them, as we say, the quotive parameters of delivering to customer is number one priority. As long as we focus on our business, our core is electronics. Our job is not capital market. Capital market works on its independently. We focus on electronics manufacturing. We cater to our customers, and that is what we and the whole organization work towards. So stock market is not my concern, certainly.
The last quarter you made positive predictions, although the market didn't take it well, but there is more optimism that you have given in terms of the predictability as well. So there were some delays that you mentioned about last quarter. So tell us a little bit about what is it in the immediate future that you're looking at? How are you looking at the next quarter numbers? What's the kind of revenue targets that you're looking at?
Well, Haripriya, I am personally not so much of giving revenue guidances and so on. As I said, my focus is delivering to my customers. See, there could be not so good quarters at times, and there could be reasons where the customer has asked you to push out some deliveries in the future quarters and so on. We are on track with our revised estimates that we have for the financial year, and I think we're very much on track to achieve that for the financial year. Our order book is pretty healthy for the next 18 to 24 months to come. We keep disclosing about our order book for the future. So upside of 6,000 crores of order book that I have to deliver over the next 18 to 24 months. I think that should give enough indication as to how our revenues are going to scale up and show in the quarters to come.
Right. How are you looking at the geopolitical movements that are happening right now? A lot of buzz around tariffs, although everything is still being talked about. But what's the kind of impact that you'd assume?
See, I think the tariffs, the bans, etc. do come in, and occasionally do happen. The geopolitical situations do happen. But the business demand, the demand for the products don't die because of that. Whether the demand is in the Indian market, the demand is in the global market, be it US, be it Europe, be it in other Asian countries, etc. I think those demands and the consumptions don't come down. In case of India, the other great advantage is the home consumption itself is so large. There could be slight impact of those tariffs if they do happen, but I think the governments are working very closely on diffusing the situation, and I think there have been some positive indications so far. We'll certainly see them in black and white in the days to come. But the indications are that the tariffs will not have such significant impacts as it is kind of being seen right now. I don't think that will be there.
Even as minimal impact is estimated, do you think this will be drag on numbers? As you said, supply stays robust.
Yeah.
But does this mean that the ripple effect of it will be on the numbers, the margin side, the profit side?
It wouldn't be so high as this. Certainly, when these kind of activities do happen, there would be marginal impacts. But I don't think those will be significant for us to kind of lose our sleep over.
Got it. Yeah. Also, you've mentioned about foraying into newer spaces right now, the semiconductor per se.
Yeah.
Tell us a little bit about the progress that you've made there. What's the kind of market that you're trying to, get into? What's the kind of growth you're expecting from those avenues?
Yeah, so after our public listing that happened almost 2 years back, so two significant areas of focus with backward integration approach was getting into semiconductor OSAT space and also establishing our own PCB manufacturing facility. On the semiconductor side, we are working on a plant is under construction now in Sanand, Gujarat. We are looking at the first commercial revenue starting from the Q4 of financial year 26. Between Jan and March quarter next year, we should get the first commercial production and the revenue coming from that business. We have already cemented a lot of technology agreements with various key players across the world, and very strong and large customer contacts are also under discussion and negotiation, which should also get documented over the next quarter or so.
What's the kind of impetus that the production-linked incentive that has been given, and also given that the 2.0 is coming and newer functions are being added to that? So is that something that interests you? Are there any other new spaces in the niche spaces under the semiconductor bracket that you're looking at?
Yeah, so semiconductors certainly is a very, very focus area for the government of India. And whatever best we can derive from the government support and the policy that the government is rolling out, we'll make all our efforts to get the benefits of that for the organization as well as for our customers. So we are working towards that, and that impetus and that positive approach will certainly be seen in our numbers in the years to come.
Correct. Also, talk to us a little bit about the AI efforts that you're trying to make with the railway safety thing that you were talking about earlier. How does this change things when we add the AI in front of it? So what's the kind of difference that can be seen, and also on the numbers, how are you monetizing that?
Yeah, so see, AI-based technology and the involvement of technology in every segment practically in the day-to-day life today, and certainly it's so much more significant in the space of railways today. The safety and signaling is so critical with so many human lives attached to the railways as a business. We have seen, a few accidents that happened over the last year or so. And the government's focus on the Kavach program, on the safety of the passengers and the rail traffic itself was a great indication or a trigger for us to look at this kind of an opportunity. So last year we identified
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम
Welcome back. You're watching India Market Close. A very interesting conversation that we were just having with Keynes Technology. Aditya, I want to come to you on your view on Keynes Tech, first of all.
I think a majority of the correction is done here. Look at the way the stock is corrected from 7,500 to about 4,000 odd levels. It's forming a good base. I wouldn't shy away from taking a long bet here at current levels. Maybe start nibbling into the stock at current levels by 50-60% now. And if it does happen to correct slightly lower to about 3,500 odd levels, you can add rest of the position. On the upside, I think stock can easily test levels of 6,000 to about 7,000. Again, you have to give it some time. It's not going to happen immediately, but yeah, I think Keynes Technology at current levels definitely makes a cut and can be bought with a stop loss just below 3,500 and look for a target of 6,000 and beyond.
Okay, so overall optimistic outlook on Keynes Tech, but you know, in the conversation, a lot of focus is now been given on these covered stocks. That includes likes of Keynes Tech, along with something like Siemens also, which is entering the field. You also have existing players like Cornex Microsystem, as well as HPL Engineering also. So any of these counters which interest you, or your views on any of these counters?
Some of these stocks have corrected significantly. There's no doubt. If we talk about Siemens, stock has come off the cliff from 8,000 odd levels to about 4,800. Again, a sharp, massive correction here. A bit of a consolidation is going on, but I believe one should wait for some more time before getting into the stock. I would rather wait and let the stock trade above 5,200 levels, or maybe at least 5,100 odd levels for a fresh entry here. As far as Cornex is concerned, I would completely avoid the stock still because I think the correction is not done yet, and you can see another 5 to 6% or maybe more correction here in the coming weeks.
That's the view for some of these players in the railway space, but let's also look at the top brokerages making what they are making of the recent market correction. Rucha joins us with a detailed report on the same.
Yeah, Anushi, so I'll start with Morgan Stanley India strategy. This brokerage has mentioned that equities continue to overlook good news in the market. Well, the broad markets are actually drawing down on rapidly as bit faded despite improving fundamentals. Though catching the bottom is difficult, Morgan Stanley believes that buying Indian equities could actually prove to be rewarding. Domestic policy has now inflected. Global news have now turned into better, including oils, wars, etc. Stocks have now been cheaper. Remember that many people on the street are talking about how valuations are a concern, but according to Morgan Stanley, stocks are cheaper is what they say, and actually cheaper than they have been since COVID bottom is what they specifically mentions, and therefore they believe that India should resume its outperformance to the emerging markets in the coming months, only if of course the global cues do not surprise negatively. Next up is Citi on Indian equity. Again, this one is also bullish. It believes that Indian equities have now corrected meaningfully year to date from its peak levels, and post the corrections, again valuations for large cap are reasonable. So around valuations, again a positive one over here. Top down drivers for consumption growth and capex growth are actually improving, and therefore they remain constructive on the Indian markets. The key stocks which they prefer rated by are HDFC Bank, Kotak, Maruti, Endurance, HDFC Life, Torrent Pharma, Make My Trip. In terms of sectors, they are overweight on banks, telecom, healthcare, and underweight on IT, metals, consumer discretionary. Lastly, the December 2025 Nifty target of 26,000 implies around 13% upside. So Citi and Morgan Stanley both bullish on Indian equities.
Okay, so that's in terms of where the India strategy notes are headed. But let's take a quick check across the markets in terms of where the Nifty 50s. We are looking at cuts of around 0.13%. Let's pull up the sectoral indices to see where the pressure is building at. In terms of where the sectors are concerned, let's see what is happening over there. All sectors majorly in the red that we are looking. It's in fact a mixed set that we are seeing. IT seeing the top gains about 0.87. We have energy seeing about 0.27% of gains. However, FMCG under pressure seeing cuts of around 0.9%. Media seeing cuts of around 0.7%. Auto about 0.7%. In terms of where the Nifty 50, the top gainers and the losers are. Let's pull out the top losers first since the markets are in the red. So ICICI Bank, M&M under pressure, TCS also under pressure, while NTPC, Infosys and HDFC Bank are in green. But let's get time for the big conversation of the day. Let's get across to Union Minister of Commerce and Industry Piyush Goyal in conversation with my colleague Tamanna at the NDTV Profit Conclave.
Welcome. You're watching the NDTV Profit Conclave, the blueprint for Viksit Bharat at 2047. India today stands at a defining moment in its economic trajectory. As one of the largest and fastest growing economies, we're not just aiming for higher GDP figures. We're laying the foundation for an Atmanirbhar Bharat. At the center of this is the crucial public-private partnership, and who better to discuss this than the man at the center of it all. Union Minister of Commerce and Industry Piyush Goyal is a visionary who has been instrumental in steering India's journey towards Viksit Bharat. Under his leadership, India's commerce and trade landscape has witnessed unprecedented growth, with India clocking its highest ever exports of about $776 billion in 2022-23, which is further poised to touch a record $800 billion this year. Mr. Goyal has also been pivotal in fortifying India's international trade relations. In 2022, he led the signing of an FTA with the United Arab Emirates, which he recognized as the fastest negotiated FTA globally. Mr. Goyal's visionary thinking is also evident in domestic initiatives designed to transform India into a global manufacturing hub. It was under his leadership that the production-linked incentive schemes, which now form the cornerstone of the Make in India initiative, were first launched. Today, as we delve into his vision of Viksit Bharat, we are privileged to gain insight from a leader who's one of the biggest driving forces behind India's transformation. Please join me in welcoming Shri Piyush Goyal. So, I'm going to start with, and of course, the theme of today is Viksit Bharat, but I'm going to start by talking about the hot button topic. Since you are the master negotiator, have we started our preparations for the biggest negotiation right now, which is with the United States? Everyone since morning is talking about how India will swing the bilateral, which will be a model maybe for every nation in the world.
Madam, I think there can be no better negotiation than the Prime Minister. In fact, as one of the foreign newspapers mentioned, one can take a master class from Prime Minister Modi in negotiation. He was amongst the first international leaders of a large country to be invited to the White House just about 20 days into the new administration. He also shares a very strong relationship with President Trump. And that relationship over the years has only grown bigger and better. They both are leaders with a nationalist outlook. When American president talks about making America great again, and when Prime Minister Modi talks about Viksit Bharat, in a way is talking about making India great again. And that's why he termed it a mega partnership for prosperity. MAGA plus MEGA equaling mega partnership. And therefore, you will appreciate that this is a relationship between two friendly nations. It's a relationship between two trusted partners. And it's a relationship which is on the bedrock of two powerful democracies. Therefore, we don't compete as much as we complement each other. We collaborate for world good, for world and human good. And I personally think that we will have a good and even better relationship with the US. Obviously, we have started working on different ideas, engaging with different stakeholders within and outside the government, preparing ourselves for discussions which we hope will start soon. The bottom line is that this is an opportunity for India to expand trade with the US. In fact, we've set a very ambitious target of $500 billion by 2030. And we look at this opportunity as a way to make India more competitive, come out with quality products, look at mutual concessions and attractive trading conditions which will support growth both in America and in India for the shared prosperity of the people of both countries.
Sir, the point you made about MAGA and MIGA, something that the Prime Minister said, comes together to form a mega combination between India and the United States. Now, having said that, the fact still remains that there will be a negotiation. President Trump also believes in negotiation, and you're right, Prime Minister Modi is a master negotiator. When we talk about reciprocal tariffs, is that something that we in India will try to avoid and find a solution that works for both sides? What's the blueprint there?
Our biggest concern, due to which one would say India does have slightly higher than many other countries, has been the non-market economies. Economies which do not have transparent trading systems, economies which do not give equal access to India when we are trading with them. And therefore, to protect domestic industry, we have often had to resort to higher tariffs. The American problem is pretty much similar, where they have a reverse situation. They have lower tariffs, but because of which these non-market economies are flooding the market with a lot of goods which hurt domestic manufacturing. So in a way, the problem of America is the same as the problem of India. And what we are working on is for mutual benefit, for resolving these issues for both our countries, for businesses in both our countries. Our situation with America is pretty much different than many other countries. And therefore, as I said earlier, we complement each other. We can give mutual concessions to each other, tariff reductions, make it easier to import and export both between the two countries. We've already taken a significant number of measures to strengthen the US-India relationship. We have both strategic, bilateral, multilateral engagements. We have defense ties. We have strong ties in education and people-to-people ties. So together, we are working on several initiatives. Trade will supplement our efforts to do much greater good for the people of US and India.
So what is your message for industry? A lot of viewers who are watching this in our universe, this is an NDTV Profit Conclave, would be businesses who are wondering that if India lowers tariffs, do we get hurt? If India does not lower tariffs and we're exporting, do we get hurt? Market investors right now, one thing at the back of the mind is also tariffs. What is your message for them?
Well, they would be better advised to be bold, to believe in the India growth story, to have the confidence that India is competitive in the products that we make, and that they have a government which is a listening government, a leader who cares for every person in India, whether manufacturer, whether service provider, person in small industry, in big industry. And therefore, I don't think there is any cause for concern. My own feeling is we should enter into this negotiation from a position of strength, boldly be willing to compete with the US. Madam, tell me, can there be any product where we cannot compete with an economy where the per capita income is $80,000 per person? We are at $3,000 per person. If there's any product where we can't compete with the United States with such a large differential on the labor costs, I don't see any cause for concern really. So I think Indian industry is better advised to be bold, to be confident. We can assure them that this is a golden opportunity to expand business. It'll open up a floodgate of new business opportunities. And my sense is those who are panicking today will regret tomorrow.
Said so. Well said. Those who are panicking today will regret tomorrow. Let me come to the question of Viksit Bharat, which is our theme. And this, I think the moment we are in right now with negotiations, etc., our place in the world on global trade is a milestone on the way of what we think is Viksit Bharat. I'm very keen to know, sir, your vision of Viksit Bharat by 2047. There is one definition which is per capita income, but what is India's vision of Viksit Bharat?
I think Prime Minister Narendra Modi has laid out a very nice roadmap as we go along this journey in the Amrit Kal. In the first 10 years, his focus was to make sure that 140 crore Indians, every person in India, is assured of good quality housing, food, clothing, education, healthcare, electric connection, cooking gas connection, digital connectivity, access through roads, railways, air connectivity. If you recall, roti, kapda, makan, bijli, sadak, pani, swast, shiksha, these were the issues which grapple the lives of almost a large part of India for decades. Generations would pass with people still struggling to build a home of their own. Prime Minister Modi in 10 years, through his very laser focus on public welfare and development, has taken 140 crores lives to a better level of living, better quality of life. He has ensured everybody has a bank account of their own. Almost 4 crore families have got a free home in the first years. Another 3 crore will get it in the next 5 years. Every home has a toilet of its own, cooking gas connection, electricity, digital connectivity, road leading up to their village and their home. Now, water is going to every home through a tap. Basic needs of life are all being taken care of. This is leading to young Indians, and our average age is only 28.4 years. Each of these young person connected with the internet, either through a smartphone or a television or a laptop, is today aspiring for a better quality of life, wants all the good things in life which the rest of the world enjoys. And given India's purchasing power parity, the fact that our costs are lower, our living standards are better at lower costs, we are in a situation that as the economy grows from about 4 trillion to 35 trillion by 2047, we will have a per capita income of nearly $20,000 plus. And that will make sure that every citizen in this country has a good quality of life with a good job or a good business, a good startup or entrepreneurial work, maybe running his own service center, providing professional services as we see more and more service sector growth, engage with tourism, engage with infrastructure development. So the opportunities in the next 20 years, 25 years are going to be massive in every field. And in the twin pillars of growth, investment-led growth and consumption-led growth, I can see a very, very rapid transformation of the Indian economy, resting on calibrated reforms to support not only ease of doing business and cost of doing business, but also ease of living and a life which is comfortable, a life which is satisfying, a life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat. If you recall, Deen Dayal Upadhyay had explained it as integral humanism. Every aspect of a person's life. It could be your family life. It could be your life amongst friends. It could be the society you live in. The entire human requirements, spiritual, material, cultural, all of them put together. The quotient of happiness, everything makes for a good, satisfied life and Viksit Bharat at 2047.
Well put, sir. Thank you so much, Shri Piyush Goyal, laying out that excellent and very detailed vision, which is also about quality of life, not just a number of per capita GDP. Thank you so much for your time, sir. We here at the NDTV network really appreciate it and appreciate you laying out your vision. And of course, we're all waiting to see what the outcome of these bilateral negotiations are. We're sure India will come out on top. Thank you.
Thank you. Namaste.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है
Thank you so much for that. Sir, you are here. Yes. Okay.
All right. Thank you so much for taking time out, sir. Now, from funding infra and industry to enabling financial inclusion at the grassroots level, the banks have served as a catalyst for national progress. A strong and inclusive banking system is the backbone of India's vision for Viksit Bharat. Now, over the years, India's banking system has undergone a remarkable transformation with stronger profitability, digital banking, fintech innovations, and government-led initiatives bringing millions into the formal financial system. India's largest lender, State Bank of India, has been at the forefront of this change. To discuss how the banking sector can accelerate India's journey to Viksit Bharat, ensuring both financial inclusion and economic resilience, we are joined by now Mr. C.S. Sethi, the Chairman of State Bank of India. Welcome, sir.
So, sorry, just before we start, I wanted to make the point, sir, that we analysts every day who look at your sector as an investment. And over the years, what I have noticed is that from private sector banks, every analyst worth their salt is now talking about public sector banks, led by SBI, being the best investment because of clean balance sheet, because of faith of depositors and investors. So we should start by talking about this huge turnaround in the perception of banks and, of course, SBI leading from the forefront.
Thank you. Thanks for giving me this opportunity. I think the trust element was always there, right? We, public sector banks generally carried the great amount of trust of the depositors. What has
changed in the last few years, particularly post asset quality review in 2015, that the recognition, recapitalization, and the reforms, which have really worked well for the public sector banks. Today, the balance sheet, as you mentioned, are cleaner. And more importantly, I think from the last cycle, we have learned our lessons in terms of how to use the great amount of data which is available now for underwriting the loans. There is also a mix of advances, loans which have happened. Most of the public sector banks were wholesale lenders. Now, in the last decade, we have moved to a judicious mix of retail and retail agriculture, MSME, corporate. I think the books are much more balanced in terms of the loans.
So when you're talking about this Viksit Bharat idea, the idea that you're in about 22 years from now, you're going to have a developed nation. Obviously, banks will form a core part of it because financing is the necessity. But if you can tell us a little bit more in detail as to what, say, State Bank of India and the broader banking system can and will do in these coming 20 odd years, what can we look forward to?
So I think you called it blueprint for Viksit Bharat, right? One of the critical elements for this blueprint to work is the capital. And today, much of the debt capital actually comes from the bank loans. Earlier also I mentioned that the nature of savings is undergoing a change. There is a shift in the depositors' behavior or the savers' behavior, that asset allocation is being adopted across the segments of the savers. So if we really have to contribute to the capital which is required for our goals of $35 trillion economy by 2047, this capital may not come purely from the banking system. It has to come from where the savings are going to. Even today there is an immense need in terms of getting this capital, particularly debt capital from the mutual fund industry, insurance industry, pension funds. So there is a requirement of deepening the bond market. The bank loans alone will not be sufficient. If the savings are getting allocated, I think the debt capital also come from these segments. I think this is one point which going forward we will have to see more depth in the market. While the banks continue to play an important role because the 35-36% household savings, what we have, one of the largest household savings in the world, they predominantly go to the banking sector currently. So that role will continue to be played, but I think significant contribution has to come from the other sectors also.
Do you see that changing, sir? The shift in saving patterns? Because, the rate of deposit growth and difficulty in deposit growth, which a lot of financial institutions now face. Do you see that as a change in pattern which has now begun and will only deepen? I'm wondering, as a veteran banker, how do you see it when maybe relatively more households want to invest, say, in a mutual fund and not put their money in an FD?
So that shift is kind of irreversible despite whatever is happening in the markets. I believe that as I mentioned, people would like to allocate their savings. It is just not that, you just put in your bank account and not do anything about it. It is not only in terms of it is going to the investments outside the banking system. Within the bank also we see that the ease of doing transaction has contributed to a significant term deposits. So if somebody had 50,000 rupees in the past, and if they had to make this 50,000 rupees into a fixed deposit, going to the branch, filling up the form, people didn't bother about actually moving that funds to fixed deposit. Now in 2 clicks, 3 clicks, you can shift and there's no click also required if you are actually putting the sweep. So which means that there will be a shift in terms of, I think we should be okay with as long as it is moving from savings to fixed deposit.
But it's there.
But if it is going out into the market, which is inevitable, I think that is what point which I'm making is, for Viksit Bharat, the capital has to come from domestic capital, from the banking system. and also the sectors where the savings are being acted upon. And also we need foreign capital to come in. I think that is also another thing what FDI, role of FDI in the development of infrastructure, other corporate, capex programs is extremely important.
I want to jump to the asset side of the story. Now, as the largest lender in the economy, obviously you're a barometer for this entire ecosystem, right? One thing that seems to be a constant sort of question from the media and from people outside is when is the private sector going to actually start spending on this, on their growth, on their capex? I wanted to get your view. Are you seeing green shoots, or are we well past the green shoot stage? A, and B, what can you do more so that the private sector does feel more comfortable to come out and spend and thereby help the growth?
The private capital expenditure, from where I sit, I see that private capital expenditure is happening. Maybe we are kind of an outlier because we are the largest player in the project financing. So obviously, whatever projects there in the market will come to us. So if you see our pipeline, I mentioned in my analyst meet also that we have both in terms of the capital expenditure by the public sector as well as private sector is almost about 2.5 lakh crores, which is a very good visibility. And I also mentioned that the sectors which are not actually spending is the core sectors like steel. And it's not about that they don't have the domestic consumption or demand, but I think everybody is watching what is the external sector is going to be. You did mention something about tariffs, right, to the Commerce Minister. But it's a fact that all of these core sectors are waiting, particularly steel is waiting, that how these tariffs, not in India, but in other countries, how is it going to play, whether it is going to lead to any dumping. Yeah. So this is something what everybody is watching. But otherwise, I see the sectors like, renewables continue to be doing well across the segments within the renewables. Roads are doing well and data centers are doing well. So if we measure the private capital expenditure only by way of steel, cement and these things, I think we need to wait for some more time for the dust to settle down in the West and then things become clearer.
Well put, sir. So in that sense, the big boost for the economy broadly for the last, I would say 2 years or so, has been a huge push in government expenditure and public expenditure. That the fear is, and when I say fear, I temper it with maybe what equity participants are seeing broadly, that is there going to be now slowdown in government capex? Because there is only that much that the central government can spend and actually go out and spend, even if you budget. What is the sort of trend that you would observe? Is that now a cycle which has bottomed out and will peak again?
No, the government is committed. I think FM during her visit, post-budget also made it very clear that the government, central government's commitment to the capital expenditure will continue to be there. And what we have seen is that we need to look at the capital expenditure from the government side, three components. One is the central government commitment, almost about 11.1 lakh crore for the capital expenditure. And the capital expenditure programs of the public sector entities, that is almost 4 lakh crores. Yeah. Our assessment, of course, FM mentioned something about maybe 1 lakh crore from the state governments, but we see that through the grants given by the central government, there is a capital programs about 4 lakh crores from the state governments, which add up to a significant number of 19 lakh crores. So I don't think central government or any of the governments, it is a fact that most of the state governments in the last 1 year, because of the elections and so many commitments, were not able to spend as much on the capital expenditure program. We are seeing that even the state governments are coming out with their capex programs, which means that the commitment towards capital expenditure is definitely there.
I want to touch upon, we've talked about private expenditure and government expenditure, but private consumption and thereby banks' role in providing that retail loan boost. Over the last 1 year or so, banks have, a little over a 1 year period, banks have slowed down that piece. One outcome of that is that people are not now spending as much as they used to spend 18 months ago even. To your mind, are we done with that period where that caution was warranted? And maybe now things are starting to look up a little bit on the retail consumption side.
No, on the retail personal side, the home loans are doing very well. I think the concern is mainly in terms of unsecured personal loans. I believe that it is bottomed out. From here, there would be growth in the unsecured personal loans. The degrowth or deceleration which has happened mainly several factors. Is not only about the regulatory action in terms of increasing the risk weights. It is also a fact that many of us looked at the individual leverage and we realized that the small value loans, particularly 50,000 to 1 lakh rupees for the new to credit customers, there's been a building up of the leverage. And that made many people to relook at their models of underwriting. And one of the important systemic development which I keep talking about is the frequency of bureau data refresh, which is now currently happening every 15 days. That means there is a greater visibility of the leverage at the individual and the family level. So obviously that will prevent multiple borrowings and eventual defaults on the new to credit segment.
So, sir, just very interesting thing. Of course, you were here in Mumbai, finance minister as well, and you've launched the SIP for 250 rupees. Under the aegis of State Bank of India. When we talk about, and the reason I mention is when we talk about Viksit Bharat, it can go nowhere without financial inclusion. And I can't think of a larger entity or a better poised entity than State Bank to actually take that further. Not just physically being present in every corner of the country. What is the role of financial inclusion and allowing and really giving way to such kind of savings? Letting people access these kind of savings. How crucial does that become when the big urge is now to spend on something that you probably cannot buy now, pay later, but to really encourage this kind of saving?
See, this is also another element of blueprint for your Viksit Bharat. You can't truly become a developed nation unless we take every segment of the society in our economic development journey. And when we talk about financial inclusion, the financial aspect of it had element of savings, credit and insurance, right? Investment, the fourth piece. The savings had element of having a bank account, and we have done phenomenally well in terms of Prime Minister Jan Dhan accounts. We take pride in the SBI. We maintain almost more than 15 crore Prime Minister Jan Dhan accounts, which all of them have started with zero balance a few years ago. But today, they're all funded. Less than 1% of these accounts are zero balance, which means that people have caught up with the savings habit, right? That is one part. The second segment in terms of the insurance, which with the support of the Government of India, the Jan Suraksha program has been extremely popular. And we have almost 40% market share, and millions of people are now covered under the accident insurance, life insurance, and the pension schemes of the Government of India. So the piece which was, in our view, was missing is in terms of how do we make them start a little bit of investment. If we think that the capital market has helped, or the mutual fund industry through the capital market has helped to create the wealth, if not the wealth, at least increase their, the potential from their savings, is the background of, this Chota SIP, what we call 250 rupees. And this is completely digital journey. Again, we will achieve the twin objective of making them digitally savvy, which they are. And the second thing is that, and this 250 rupees is not a monthly SIP. I think a lot of people think that 250 rupees mein kya hoga? How long you'll have to save? But we notice that a lot of people in the rural and semi-urban areas do a daily savings. Wow. So this SIP, initially we are starting with fortnightly and monthly, but we would like to have a daily SIP. At the end of the day, if somebody has got 250 rupees, can I put in this? I think this is, in our view, is a great step towards financial inclusion in the investment side.
Excellent. Just sticking to this financial inclusion theme a little bit, as SBI, banker to every third Indian, I mean, you pretty much hit the financial inclusion goal. What is it that that you, as a bank, I'm not talking about as the SBI Group, but as a bank, what more do you think that you can do for the broader population at this point?
In terms of financial inclusion, I think the credit is still a challenge for them. We have done a very successful program through the Prime Minister's Swanidhi, which a lot of people don't understand, that SBI is capable of giving 10,000 rupees loan to a 10,000 crore rupee loan. And this is the range, right? But I think a large number of people are still out of the formal segment. We need to bring them, and how easily the access to this credit is made available. And it is not only access, the quality of credit, that need to assess their requirement and make it available at affordable rates and at the time which they need. I think these are some of the elements I still believe in the financial inclusion we need to work on. And MFIs, NBFCs have done a great job. I think we must give credit to them, that in terms of the financial inclusion, last mile connectivity for the mainstream banks have been provided by them. I think that journey will continue.
Thank you so much, sir, for speaking with us. Truly inspiring to hear your vision for the banker to the nation, really. And the way also this bank has modernized and digitized as well. Thank you. Please give it up for Mr. Sethi.
We just take a photo.
Yeah. We'll need to take
भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
Thank you all so much for making it. I look forward to this conversation because it's something we keep talking about. So let me put this in context. Welcome all of you, and welcome all of you over here listening in. Today we are diving into a topic that's shaping our future, artificial intelligence in India. With the country's tech scene exploding, we ask, what does the future hold for AI here? From Bengaluru's burgeoning startups to government initiatives like Digital India, AI is not just on the horizon, it's already transforming sectors from healthcare to agriculture. But what about the challenges? Will India lead the AI revolution, or will we face hurdles in privacy, in job displacement, and in the ethical use of artificial intelligence? Now, experts predict that AI could boost our GDP by billions, but the question remains, how will we manage the ethical implications and ensure inclusivity? Will our education system rise to train the needed talent? And crucially, can we craft policies that balance innovation with responsibility? Join us as we explore these exciting but, I dare say, daunting questions about India's AI journey. We've got super panelists, real experts on this. Puneet Chandok, President, Microsoft India and South Asia. Thanks, Puneet, very much for being with us. Manu Chopra, co-founder and CEO, Kadia AI. Dr. Pratyush Kumar, co-founder of Sarvam AI, and Ronnie Screwvala, familiar face, somebody we've all grown up with, co-founder and chairperson of Upgrad. Thank you, Ronnie, very much for being with us. So, I could talk about policy, we could talk about ethics, we could talk about jobs, we will. But I think for a larger audience, the question which everybody wants to know is that how is AI going to look like for us as users, let's say 5 years down the road? It's evolving so fast. So let me ask all of you that question. Would you like to start, Puneet?
AI in the next few years will be a guardian angel. He'll be a coach, he'll be a companion to all of us. He'll have a lot of intelligence, he'll have a lot of empathy, he'll have a lot of agency. I think he'll make all of us a lot more efficient and effective at what we do.
Empathy. So how smart is that? Because if you're getting into a very exciting theme already. Empathy.
I think technology, for the sake of, technology of course matters, but what matters is how technology feels, right? And I think where these agents and where this AI is headed is a lot more personality, a lot more context on who you are. And I genuinely believe in the next 5 years, it'll be Puneet plus Puneet's AI. So if somebody hires me, if I'm on LinkedIn as an example, I'll say it's Puneet plus Puneet's AI. It'll be you plus your AI.
All right.
And I think that's the world we're getting into.
Ronnie? 5 years from now?
I mean, if intelligence means artificial intelligence, it has to be a 2 plus 2 is equal to 22. And I think that's what it will be, because it's going to be a combination of both. And I think for all of us, we need to take it that it's going to be in that manner, rather than actually looking at it as going to be a threat. I think today everyone's looking at it much more from a threatening perspective. And again, as my favorite saying goes, overall we need to take this on as more as an evolution, more than an sort of an apocalyptic event where we'll always keep dreading it. And if you differentiate between the two, I think it's going to evolve. I think 5-year statements today will be almost impossible. We'll need to be better than astrologers to actually talk about where that takes it.
So, Manu, the reason I thought I'd start this conversation is because I'm hooked on to Grok. No advertising contract, not yet at least, but I use it because it generates pictures for me. And so I decided to, I'm Bengali, parochial one at that. So I asked it to draw Newmarket in the 1920s, in the rainfall, with women street vendors, with a few old cars. And it came up with something absolutely incredible. And it gave me 3 or 4 options. I regenerated and it gave me something better. It suggested twilight, so I clicked twilight, and it had it in twilight as well, in the rain. Now, this is absolutely incredible, which is why I asked the question, in 5 years from now, what more can AI do for us?
I mean, it's a very, it's not a good, thing to be making predictions right now. Because I'll be like, 5 years from now, this will happen, and it happens tomorrow.
But is that the problem? Is it moving so fast now that we really can't look 5 years ahead?
I think, look, one of my favorite quotes about technology, if we step back, is from Kintaro Toyama. He says, technology is an excellent amplifier of human intent and capacity.
Yeah.
I think of AI the way Puneet is talking about it in terms of amplifying our intents and our capacities, right? So we've been playing around with deep research. It's absolutely phenomenal, right? The kind of things it can do, it accelerates the pace at which my team works. It allows us to do so much more for our communities. And I really believe, look, AI technologies that we're building, the kind of work that Pratyush is doing at Sarvam, this is really important because it just accelerates earning and learning opportunities for not just people like us on the stage, but for low-income communities all across the country, right? And I think it's our responsibility to make sure AI productivity is equitable, right? But I think the fact that it'll dramatically accelerate productivity, in my mind, is a given, right?
Ronnie had a point?
I just want to add that I think one thing for sure in 5 years is we won't be as wowed as we are right now. And the reason I say that is because right now I think it's all tough. I come from the storytelling world in my previous avatar, and I think when the wow with which you explained that I fed it in and gave me these 3 fascinating stories, I think a lot of that will evolve. It'll become part of us. And I think that's something if we harness. So one of the things I definitely think in 5 years is we won't be that wowed with it in a good way, not in a bad way.
Right. But I am wowed for the moment. I mean, it can design music for me. I can ask it, I can describe a certain type of music that I want, and it can do it for me. A few years back, I would say even a few months back, if we wanted information, the phrase we would use is, let me Google it. That's already obsolete. You no longer Google it necessarily. You can grok it, you can chat GPT it, you can DeepSeek it, whatever it is. Again, in your mind, 5 years from now, what's exciting which is coming up?
So one thing that is surprising about this area is that the surprises don't stop. Right. So I do not know if 5 years later you won't be wowed, right? And as a practitioner of the technology, so the technology is still very early in the evolution of any technology, just few years into it, right? What you are echoing is a sentiment of the user, but as a builder, there don't appear clear limitations on why this does not improve further, right? That's a scary and exciting thought simultaneously, right? But for me, what is most interesting is what Manu said, which is that this technology becomes a common denominator for everybody, right? Because at the bottom line, some of us are creating images, some of us are doing deep research, right, and improving productivity. But the 1.4 billion Indians being able to access healthcare, education, whenever they needed advice, mental advice even, I think making it common denominator, just like, for example, today the per capita consumption of data, India is a leader. The per capita consumption of generative AI, I would see India being the leader in 5 years, and it's because this technology will make everybody so much more capable and enjoy a better quality of life.
Let me ask one more basic question before we get into specifics. Ronnie, this one is to you. Education. If there's AI, then, you know, the way you and I studied in school and in college and did our research, you don't need to do that anymore, right? I mean, that's the pessimist in me speaking. Because I can quite easily tell you, and this is the truth. I promise you, this is the truth. I've got about 8 or 9 questions. I looked up AI and I got them, right? How do you learn if you've got a machine doing those functions for you?
No, I think that's a little too far-fetched. I think it's also then destructive. So I think it's going to have to be coupled. You're looking there and you're looking at this as an add-on, but there is a lot of the other part of the day where you're doing a lot of your own logical self. So I think you just need to look at it from that perspective. I think we need conviction, actually. Right now you're talking about everything else from a caution point of view. True. If you just look at it with conviction, I don't think you're going to displace the schooling system. If you see what's happened in the last 50, 60, 70 years and overall in learning, there's a certain base camp that you would have to necessarily go to. So I'm not a subscriber where this is going to be completely replacive and the next generation, of course, every generation is getting wired in a different way in which they consume things. But some things I think will remain constant. I think the coupling of it rather than the decoupling is what's going to be important.
Puneet, the other, of course, common question is jobs. And I think it's, again, in a sense, a worry that people have addressed and have moved on. Will it take jobs is perhaps no longer the relevant question. It's how do jobs change given the reality of AI? And that has to do with skilling. So we'll keep skilling out for the moment, but to the basic fear that people have, AI is around, I'm going to get canned. How would you respond?
I think just sticking to Ronnie's framework of kind of just thinking about the positives of this technology, right? To me, I think this has the ability to reduce the cord between knowledge and agency. And let me explain to you, right, which is, my favorite example is you go to any hospital in this country, the first year doctors are out of work, the 20th year doctors are out of time. Because everybody wants to go to the 20th year doctor. Same for teachers, same for lawyers, same for technologists. Yeah. And if you can create a co-pilot, if you can create an AI agent which brings as much information, as much expertise, as much judgment to the first year doctor and the first year teacher and the first year lawyer, imagine the work they can do. So it reduces the floor, it raises the ceiling, right? I think specifically on jobs, it'll both create new jobs and it'll change the nature of our jobs. And on creating new jobs, nobody better than Manu to talk about this because he's genuinely creating these jobs. I can talk about it, but he should talk about it. And then I think changing the nature of jobs. Right? I think we're used to defining jobs as a title. Like, you're the chief editor of this thing, I'm the CEO of this organization. All our jobs are a collection of tasks. And I think this is time for us to reflect on, going back to your piece around saying these questions and the research work and the grunt work, that can be taken away. Now that frees you up to do so much more, right? So I think that to me is exciting. New jobs, changing the nature of jobs, and then cutting the cord between knowledge and agency, and especially for a country like India, getting people started much faster, much better to do a lot more work and a lot more amplification, as Manu said.
Manu, I'm coming to you on that, but in terms of specifics, I do know that specifically we are working on agriculture and AI already presently in the country. We are looking at AI being able to decipher fairly complicated medical reports and then advise people. We are looking at AI interpreting legal documents and then advising people as well. How is this fundamentally changing our lives in India right now?
Look, for our communities, information asymmetry is still a problem. Right, and it goes back to what everyone is talking about, right? Like access to this information, that is still a challenge, right? We thought that internet would change that, right? It made a huge difference. It certainly changed all of our lives, right? But with access to these technologies, to this information in your language, through voice, the kind of work that so many people on the stage are doing, that's really, really critical, right? To answer your, in general question, I think, look, the reason we need to approach this with optimism is important. I almost think of it as like, it's hard to demonstrate this with a mic, but I'm going to try. Think of this as like the kind of work that humans can do, right? That's all the work we've done in the past. A certain subset of this is the work that AI can do for us, right? Which is the work like coming up with questions. But because that's happened, now the kind of work we can do with AI is so much larger, right? One of my favorite thinkers on this topic is Eric Bryn-Jacobson from Stanford, who says that, if ancient Greeks automated all the labor known to them, there would be no work, but then there would be no NDTV Profit, there would be no vaccines, there would be no, several other things that we did because of the technologies that were created, right? So given that these basic needs will be taken care of, right? Access to healthcare, access to information is taken care of. The question very quickly becomes for us is how do we make sure the vast majority of our communities are able to use these tools to become more productive,
right?
To use them to actually make more money, to learn more stuff, to go ahead in their lives, to thrive, right? To just have full, complete, holistic lives. And I think there we are very excited about the kind of new jobs AI is creating. These jobs pay really well. We're able to train people in our communities to do these jobs, right? So I'm optimistic in general. It requires work. It requires us to create almost a just transition between what people were doing earlier and the new kind of stuff that we have to do. But I think of the opportunities here across ending information asymmetry, connecting people to what they need this like very quickly. I was flying into Bombay this morning and I saw these incredible mountains I'd never seen before. I took a photo and the first thing that I did was ask my GPT, what is this? And it told me exactly the wildlife sanctuary it is, right? Like these are very basic things, but they truly enable information discovery. And I really like what Puneet said about reducing the gap between knowledge and agency.
No, note to self, I'll do that next time. You had a point, Ronnie?
No, I wanted to calm down the temperature and the way we kind of look at that, right? Because I go a lot by my gut feeling. I don't think that's going to get replaced. I think I pride myself that I'm a culmination of the choices I make. That's not going to get changed. You're going to have that sense of acuteness of yourself to be able to make the choices. You make judgment calls. So if you look at all of that, then you look at the practical of how this is going to augment and not necessarily replace. You will just look at everything in a very different way. I think we're in that hyper mode today where we're going, oh my God, what is this going to do for all of us? Versus how much is it going to actually augment us? How much is it going to segregate and take a few things off the plate so that we can actually become even more smarter or being able to do what we want to do? And I think for India, it's an incredible opportunity. I mean, your central